All right. So hi, everyone. Welcome to the Catalyst Miami day 2 of the income tax training. We're going to be talking about what it takes to be a tax volunteer, the certifications you need to complete and all the questions you need to answer, the resources you'll need to access to be doing taxes with us as a volunteer. We've got a lovely crew of volunteers on board with us today that are going to be asking questions and helping make this training more robust. So please just know that they are great folks and they're in the background and they'll chime up when they've got questions. And with that, enjoy this training. Hope this is a good learning experience for you. Taxes can seem like a lot and overwhelming, but this is meant to make it a bit easier and to get you the questions answer you need to be certified. You'll learn a lot of it on the job. So when you're working with a client in front of you and they're asking you questions and you're thinking through it, this training to teach you how to find the answers to their questions. But then also when you're live with them, you can always reach out to a Catalyst Miami staff member or your VITA site coordinator if you're from another training or from another VITA program, and they will help you to answer any questions that you have. So don't feel like you need to learn it all. That's not the purpose of this training. This is really to teach you what you need to get certified. And then once once it's go time, you'll learn a lot on the job, and that's kind of the way that it all goes. So with that, I'm going to share my screen and show you all a few resources that are going to be really key to us in this training. As I say this, I'm going to share. Am I going to share my entire screen? I think I am. So I'm going to share pieces of my screen. I'll like stop sharing and start sharing depending on what we're looking at. But the thing I want you all to remember is be forgiving. I have many tabs open as I've been doing many things. So one of my screens will have a lot of tabs, and that's okay. This is a safe space for me as well. Don't judge me. All right, so I'm sharing that first screen that has all of those tabs, but the first thing I wanted to bring up, and I put this in the chat for all of the folks that are in the training within the Zoom, this is the resource document we're going to be referencing quite often in this training. This resource document has the test book. So this first resource is a list of all the IRS questions that they'll ask as a part of the certification, as well as the retest questions. The second is for the practice lab, which we'll use to basically do the software. It's the fully fledged tax software that we're going to use, but it just doesn't allow you to e-file to IRS. So it has all of the same features. It looks exactly the same. When the main software gets an update, so does this. And the one caveat I'll say there is tax law is always changing, especially on the state level, but also at the federal level. So some things in the software may change throughout the season. But I think it should be well programmed for everything we need it for today. And the last thing here is the certification exam link. This is where you go and take a certification exam. We'll visit all of these sites in just a second so you get to see the actual pages. But just know that when the time comes and you've got all the answers, this is where you go to take the certification, actually put them in the computer, get your certification, which I'll show you how to print that out, and you'll send that to me. The last two things we'll really like spend a little time chatting about. Everything else I'll run through pretty quick. Is this 4012 is the tax Bible, or tax Bible as we call it. And this is a resource to help you find out a lot of the answers to the questions that are asked in the certification. We'll be using it today with the goal of having you all understand how to use it better and to use it when you've got a client in front of you. And then the last thing is the 13614C, which is just the intake and quality review form. So when you're doing taxes with a client, almost the first document you'll look at every time you're doing taxes with someone is this intake form. All of this will be uploaded, their intake form, their tax documents, their ID, all this will be uploaded to a secure software. So just know that clients will be sending their information in this place. It stays there until their taxes are completed, and then at the end of the season, it's wiped away. That way, everything is private and confidential as possible. Also, only the volunteers who are interacting with those clients will be able to see their information. So you won't have access to everyone's info. It'll just be the folks that you're preparing taxes for. And then the last few things are just additional training resources. So if you wanted to do a self-paced training that isn't this one, Prosperity Now has a really great self-paced training called the VITA Train, as well as IRS has some online training resources that are really robust, but can be hard to navigate for some. Like I used them when I was a college student, and I remember thinking, I wish this was shorter and more concise. And it's gotten better, but there's still a bit of room to go. The last few documents here, the publication 4012 is just like, you want to find the answer to anything, tax law and the updates for the current year, that's where that is. The taxpayer consent form, all clients will fill that out to basically say they want to file taxes virtually. If I haven't mentioned this already, Catalyst Miami's tax program is 100% virtual. So all clients will be opting into doing taxes virtually. And I think that's really nice for many clients, because last year we heard lots of feedback that folks were like, oh, this is great. I love not having to leave my home, but getting my taxes done. But for some folks, it can be challenging, especially for folks that are not great at tech, where they have to bring in a family member and there's a bit of a learning curve. So know that we've got some backup systems in place for anyone that doesn't feel comfortable uploading their documents or using a computer to access the tax prep. And the last thing in this section is the IRS Forms Finder. Sometimes there'll be a document a client will bring in and you're like, I don't know what that is. Or sometimes in the certification, it may talk about some document and you're like, I don't know what that is or what it looks like. You can use this to find any IRS form that's published, that's out in the wild for the most part. The one thing that isn't there that should be added soon is IRS is sending a CTC letter, or a letter about the child tax credit, to everyone who received it over the course of this year, as well as the last stimulus check, EIP number 3, or Economic Impact Payment number 3. Both of those are receiving letters, but they're not in the Forms Finder yet, but hopefully they'll be added soon. And then the last thing is Get Your Refund. So this is the software we'll use where clients will upload their documents and we'll pull down their documents to do their taxes. The software isn't live yet, but it should go live either very late next week or very early the week after. And we've got this mandatory volunteer training on 1/20, which is Thursday. So if it launches in time, we'll have that training Thursday. If not, we'll push it back likely a week and hold the training then. But that will teach you all like the last little piece you need to know before we dive into the certification. And the last thing here is just my email. If you all have questions, comments, concerns, and if you need to send me your certification at the end of today, my email is down here listed in this resource document. I'm here for you. I typically respond in 24 to 48 hours. So please, reach out, ask me questions. I am here and a resource for you all. So that's this tax tool. I won't visit it very much throughout the rest of the training. I didn't point this out before, but for the practice lab, know that there's this password you need to use to access it every time. So I typically copy paste it and then put it in, or just remember that it's Train Pro Web in all caps. All right, great. So that is this tools and resources document. I'm going to share my screen. We're going to dive into some certification questions. All right, no chats. Great, let's go in. All right, so now y'all can see my slightly cleaner screen that has a few different documents up. So in the resource document I just had linked for you all, I referenced this questions book. It's called the Publication 6744. If you all want to pull that up on your own screens so that you can like drive to the screen, troll at your own questions, take your time to read questions or read at your own pace as I'm scrolling around, I'd really encourage that. So you can kind of do what I have done here, which is have a few tabs open. The 4012 is another one that we'll be referencing a lot. So if you want to open that, great. And then the Link and Learn certification, you don't really need that yet, but you can access the practice lab from there, as well as from the link. So I would just have these, if nothing else, have these 3 open. But right now we only need these 2, the 4012 and the 6744. So with that, I'm gonna read this first scenario. We're gonna talk about Karen White and her husband Fred and what their situation is. And these scenarios are meant to mimic real life. So a client will come in, they'll pop in the Zoom breakout room, you'll be talking to them, and you'll see their intake sheet with all their information, but you'll also be asking them questions. So it's almost like this is an interview and the client sitting in front of you is telling you what's going on in their life. So with that, let's dive in, y'all. And the last thing I'll actually say is if you haven't already, grab a sheet of paper or a notebook and number 1 through 35, that'll give you space to write down all of the answers that we're going to go through as we're documenting them. There also is an answer sheet you can print out if you want, but I would really simply just have a notebook. It's right here to my right, where I write down 1 through 35 and then jot down the answers. As we're going through them, I want you all to ask questions too, so please do that. All right, enough prep. Let's dive in. So Karen White, And I'm going to read this first one. I may ask some other folks to read some of the others just to give my voice a break because I'll be talking a lot in this training. So know that it's coming, and I'll look for volunteers for the next scenario. So Karen's husband, Fred, moved out of their family home in April 2021. She's not heard from him since. Karen and Fred are not legally separated. Karen has two children, Avery, age 12, George, age 15. She will claim them as her dependents and on her 2021 tax return, and Karen is currently 38. Karen earned $28K in wages. She also received $175 of interest and $12,500 of unemployment income. Karen made cash contributions to Red Cross. She does not have enough deductions to itemize this year. Karen paid all the costs of keeping up her home to support Avery and George. Karen received her third economic impact payment, or EIP3, for $5,600 based on her 2020 tax return filing jointly with her husband. They are all US citizens and all have valid social security numbers. Karen, George, and Avery lived in the US all year. Great. So there's like, this is a lot to process, but we're gonna work through this to determine, first off, number one is what's the most beneficial filing status for Karen. So what I want us to do for this, y'all, is I want us to use the chat feature. And I know that you all may not know the answer, and that's okay. But what I want you to do is, I'm debating about how we should do this one. For this one, if you have an inclination for what our filing status is, drop it in the chat. Again, this is a safe space. And then I'm going to show you all how we determine it. So actually, let's actually hold on that. I'm going to show you how to determine it. And then after we do that, let's dive into, and then I want you all to drop your answer in the chat. For some of them, we'll do, you're putting your answer in the chat before I tell you. And for other ones, I'll show you. This will be one where I show you first, and then we'll come back to it. So we're going to go over here to the 4012. And this book is loading slowly, but it is here. So on the third page of the 4012, this is what the first page looks like, really small. On the third page, there is this index, and I think this is probably the most helpful thing in the book. There is a chart here. So it's broken up into sections: who must file, starting a return, dependents, income, adjustments. There's a bunch of things in here. So I always use this to hop around to where I need to go. Some of the links are broken, but I've noticed that these ones on the side typically work pretty well. So we're going to go over here to the determining the filing status decision tree, which is tab B8. I talked about this pretty in depth in day one of the training. I think this is one of my favorite resources in this book because I think it makes things pretty simple, and it's like a nice little chart. It's like a nice little flow chart. So keeping in mind what we learned about Karen, was Karen married on the last day of the year? I believe she was. It says that her husband Fred left, but it didn't say that they've not legally separated. So Karen is married, so yes. And then did you and your spouse live apart at all for the last 6 months of the year? Yes, it says Karen's husband moved out in April. So that's more than 6 months. So we can say yes to this. And then from there, it says, do all of the following apply? You file a separate return from your spouse. In this year, that is true for Karen. You paid more than half the cost of keeping up your home for the required period of time. That's also true. It says that in the scenario. Your main home is the home. Your home is the main home of your child, stepchild, foster child for more than half the year. Grandchildren do not meet this test. That's true for her sons, I believe. They lived with her for more than half a year. And the last thing is you can claim the child as a dependent. So yes, she can claim both her children as kids. So for this one, it looks like parents' filing status is at a household. Did that make sense to you all? Were you all able to follow that chart smoothly? All right, slowly pulling up the chat. This is great. All right, cool. So how do I go to? Okay, so if Patricia, I'm not sure if I understand your question. Sorry, you created a Practice Lab account. You're trying to look up you're trying to find the answers to I'm not sure, to the questions we're going through now, or?
Yes, the one that you have open.
Okay. So the easiest thing is to just, I'll drop the link in the chat. All right. So here's the link to the document. You can just turn to page 76 and it'll pull up. Great question. All right, and then I see a few other folks that answered in the chat, and they guessed that her filing statuses have household. That's correct. So y'all go ahead and write that down. Any other questions about that one, y'all? Okay, great. So next question, number 2, is Karen's economic impact payment must be included in her total income. So let's talk about this one. And let's talk about this one. Does anyone have a guess to, I guess for you all put this in the chat if you think this is true or not. Again, safe space. So take a minute, 30 seconds. You all drop true or false in the chat. We'll talk about the answer from there. All right, see, and most of the answers come through. So a few, it looks like folks are leaning towards false. Does anyone have a guess for why this is? And would they mind coming off mute and saying?
This is a random guess, but I think like that payment is similar to the stimulus payment, which isn't taxed. Is that correct?
That's 100% correct. Good answer. I feel like we're on Family Feud. Good answer. Good answer. So yeah, you're exactly right. Keith, that's like the full answer. That's exactly what I would have said. So the stimulus checks that folks receive, they're also called the economic impact payments, and they're 100% tax-free. So folks don't have to pay taxes on them. But the reason we ask about them at VITA sites is because if folks did not receive them early, like they were supposed to, they can get them on their taxes. So we typically ask folks how much did they receive in total for the last year, and they'll both like get a letter that says how much they received, and we can ask them to verify that that amount is correct, and they'll tell us, we'll put it in the software. The one caveat I'll say, or like the one important thing to keep in mind here is if folks are not sure how much they received, it's really important that they either bring that letter in to figure it out or go through their bank statements to figure it out, because if folks put this information wrong in their tax return, it can delay the return anywhere between 6 and 12 months. Like it may be faster, but over this last year, it's been about 6 months, at least for IRS to process those delayed returns. So just keep in mind that that number and the amount of advanced child tax credit they received, which we'll talk more about later, those are both really, really important for us to get correct if you're doing the taxes. So typically when a client's sitting in front of you, you believe them. And if they tell you, I got $1,400, you say, great. And then you put it in, and then you just ask them, hey, I just want to make sure you're 1,000% sure that this is correct. If not, it could delay your return a little bit, and they'll say, no, I'm sure it's right. And then you say, cool. Or they'll have the letter with them, and you'll be able to look at the uploaded letter that they provided. All right, cool. So y'all, we're going to keep rolling. Any questions about that one? Or any other questions about the economic impact payments and how they work? All right, hearing none, let's go on. All right. Oh, last question here. Okay. So what amount may Karen deduct as a charitable contribution when filing her 2020 tax return? So I'm debating about this one, whether I want you all to guess or whether we should look for the answer together. Let's look for the answer together for this one, using the 4012. So let's go back up to the table of contents. You can also Control F. I think that's like another nice way to navigate this document. So I know that charitable contributions should be an adjustment. Adjustments to income. Let's see if, I don't know, this is going to be here. I'm going to Control F, actually. I'll show you all. Okay, well, let's do this. I'm going to scroll down to the bottom. Yeah, this word appears a lot, so it's actually maybe harder than I was expecting. Let's look and see. Non-charitable contributions. This is not it yet. All right, y'all. We're learning to navigate this together. It's going to work out. We're quite close. Is this the one? No, this is not it. Okay. Okay, y'all. So I'm just going to talk y'all through this one if I don't find it in the 4012, which is okay. There is a place where they talk about it. So the way shared offer contributions work, they appear in two different places on the tax return. They both appear on that first page of the 1040. So pulling up the 1040 for a second. There's a line here for charitable contributions if you take the standard deduction. And there also is a line on something called the Schedule A, which is where you put your itemized deductions. And if you have itemized deductions, you basically have an unlimited amount of charitable donations you can deduct. So you can deduct as much as you want. There's no limitation. Alternatively, if you take the standard deduction, there is a limitation. Page E1, someone's giving me a hint. I love a hint. Thank you for coming through. Let's see, E1. Okay, so the E1 shows how it appears in the software. So you all will get a chance to look at this in just a little bit. And there basically is there'll be a spot here for donations to charity or gifts to charity. But
yeah, it's at the bottom, Darren. If you look at the note, that's what.
Thank you.
Yeah.
Thank you. So y'all, this is a small note here. It says the deduction for charitable contributions to taxpayers who are not itemized was modified by the Taxpayer Certainty and Disaster Relief Act of 2020. So this is all very, very new. So for tax year 2021, married couples can deduct a joint return. Married couples filing a joint return can deduct $600. All other filers are limited to $300. Additionally, the deduction does not reduce adjusted gross income. Thank you. So yeah, that's the other thing I was going to say is for folks that have filing standard deduction, they can claim up to $300 as a charitable donation. So if you donated to any nonprofit, if you donated to Catalyst Miami, if you donated to United Way, if you donated to anything, or your church over the course of the last year, you can deduct up to $300 on your personal tax return, and the same is true for Karen. All right, cool. So let's jump back over here. And with that, y'all know that the answer is C. What amount can Karen deduct? $300 C, unless she didn't contribute that amount, but it looks like she contributed, let's see, $650 to Red Cross. So yeah, with that, the answer is C. Any questions about that, y'all?
So if it had been under 300, it would have been that whatever the amount was exactly.
Exactly, yeah.
Okay.
And that will happen often. Folks will say, oh yeah, donate $25 to, this place once. And when you put it in the software, the way that it shows up is it'll ask you for the amount, it'll ask you for the date, and then it'll ask you for the organization name, which can be a little weird because people could have donated to multiple organizations. So I typically ask folks like, what's the biggest organization you donated to that you remember? So I'll put the name of that organization, the last time that they donated in the year, and then the amount, and that's it. Cool. So with that, y'all, we just finished a scenario. 3 questions done. Now only 32 left. Uh-oh. Can y'all hear me okay? It looks like my camera's frozen.
Still good.
Okay. I might stop. Okay, now we're back. I think my computer's catching up. All right, so we're gonna go to advanced scenario 2. Computer, stick with me. I'd love if someone could read the situation about Maggie or about Paul and Maggie. And we'll go through the questions. Any volunteers to read this one?
Sure, I can go ahead. Advanced scenario 2, Paul and Maggie Thomas. Interview notes: Paul and Maggie are married and want to file a joint return. Maggie is a US citizen and has a valid social security number. Paul is a resident alien and has an ITIN. They resided in the United States all year with their children. Paul and Maggie have 2 children, Cheryl age 4 and Mike age 15. Cheryl and Mike are US citizens and have valid social security numbers. Paul earned $18,000 in wages. Maggie earned $20,000 in wages. In order to work, the Thomases paid child and dependent care expenses of $3,500 for their daughter Cheryl to attend Busy Bee childcare. Paul and Maggie provided all of the support for their 2 children. Paul and Maggie declined to receive advance payments for the child tax credit.
Perfect. And question number 4 is, what is the maximum amount that Paul and Maggie are able to claim for the child tax credit? So this is a good question. I'm going to explain the child tax credit and what happened with it over the last year. If someone wants to find the tab in the 4012, that'd be great, and we could pull it up. But so the child tax credit is vastly different this year than it has been in my lifetime, in all of our lifetimes. The thing that changed this year is folks are able to receive a part. So one, the amount doubled. So before you got around $1,400 for the child tax credit, only in your tax return. And now you get $1,500 to $1,800 in your tax return, and you get a monthly amount of $250 to $300 every month. So because of that, thank you for the note here about which tab it's on as well. Appreciate it. So because of that, families received something called the advanced child tax credit from July through December of last year. So they got $1,500 to $1,800 early, and now they get $1,500 to $1,800 as a tax credit when they file taxes. So because of that, the age of your child determines how much of the child tax credit you get, whether it's that $250 a month or $300 a month, or whether it's $1,500 or $1,800. So we're going to go here, look at this tab, and see what the amount should be. All right. So here we go, refundable child tax credit. The last thing that I didn't mention before, and this was always true to an extent, but it's, I guess, more true now, is the child tax credit was always refundable up to a portion, but now the full amount of it is refundable. Before, only $1,400 was refundable, and it was out of a $2,000 credit. Now it's the whole thing's refundable. All right, great. So this paragraph here is the one we want to pay the most attention to. For tax year 2021, families claiming the CTC, as it's kind of informally called, will receive $3,000 per qualifying child for ages 6 to 17, between the ages of 6 and 17 at the end of 2021. They'll receive $3,600 per child for any child that's under the age of 6 at the end of 2021. Under the prior law, the amount of CTC was up to $2,000 per qualifying child under the age of 17 at the end of the year. So both 17-year-olds now qualify, and you get a little bit more if your child is very young, under the age of 6. And there's things here about what qualifies as a qualifying child and how you know whether you can include them or not. But with that, let's go back to the scenario. Look at the age of the children. Cheryl is 4, Mike is 15. You all please drop in the chat what you think the answer is for number 4, now that we've gone through that. All right, I see most of the guesses have come through, and folks are either right or very close. So the answer to this one is D, and basically the reason for that is because it's $3,000. Wait, yeah, $3,000 for Cheryl, or for Mike, who's 15, and then $3,600 for Cheryl, who's age 4. Those combined together to equal $6,600. Any questions about that, y'all? Okay, so next we're going to talk about the other big credit that has changed a lot this year is the child independent care credit. So the way that this credit works is, I'll say the way it worked in the past and the way it works this year. So, and I vaguely remember how it works in the past, but basically, if you send your child to daycare, it can be before care, after care, it can be a day camp. It can be many, it's something where they go away so that you can either look for work, go away, somewhere where they go away for the day and are watched by an adult, so that you can either look for work or so that you can work. Those expenses are eligible to be claimed as a tax deduction or a tax credit. And in this year, the amount is fully reductible, is fully refundable. So basically, any dollar amount you paid to a childcare provider, you can get back as an increase on your tax refund, which is really nice. This also includes, so I think there typically is a question of folks of like, does this include like a babysitter? It does include a babysitter or a nanny or like an individual person who's watching your children. But the only thing that has to be true if you're claiming the credit for an individual is you have to have their social security number to put in your tax return to say this is the person who did it and here's how much I paid them. For an organization, you need their business number, their EIN number, and you'll include that and the name and it's a few more details like the amount. So in this example, it says, in order to work, the Thomases paid child independent care expenses of $3,500 for their daughter Cheryl to attend Busy Bee childcare. Busy Bee pops up one other time, so you'll notice it's a really popular childcare option for folks in the test book. But basically, since they paid this cost, and based on what I've explained so far, do you all have a guess for how much the Thomases are eligible to claim of this credit? Please drop in the chat if you do. Or if you've got a question, also ask it.
Is there like a form that people get, or do they need to know how much they have to come like with the number calculated of how much they've paid?
Yeah, that's
and EIN and stuff.
That's right.
Like information people might not
like know that they need. Yeah, so I'm going to show you all in one of the future scenarios. There's like a little preview document. It's the one after this one. Of like kind of, it shows like what people mostly bring in. So people who've done taxes before, which is most clients, will know that they need this information. And for those that are new to this credit, they'll learn really quickly that they need it. And they'll typically just they'll either call their child's daycare or aftercare provider or their school if that's who it is, and then get this information. And the daycares are very used to giving it out because they know that people will do this to want to get this credit. So here's an example one, Busy Bee Daycare, December 31st, $1,500 of daycare services for this child, and then the business number, and that's it. And then it'll also include the address and the phone number. There's a few states where in order to get this credit, you have to include the phone number. New York isn't one of them. I think it's Hawaii, but basically just know that like you'll need some basic information to enter about the child care organization. Really, really good question. All right, I'm going to go back to the scenario. Scroll past all this. Oh, nope, we're in basic. I've scrolled too far. Almost. Okay, here we go, y'all. Where are we? We're in the basic retest? That's not where we want to be. Slowly, slowly. Thanks for being patient with me, y'all, as I'm scrolling around everywhere. Advanced scenario 1, Karen. Great. So we're back here. And you all got the answer to this one. It is A, $3,500. Let's keep going to the next one. Oh, great. We're actually through with the scenario. On to scenario 3. So Carol Wheeler. Does anyone mind reading this one?
I can read it.
Thank you.
Carol Wheeler, age 56, is single. Carol earned wages of $48,000 and was enrolled the entire year in a high deductible health plan, HDHP, with self-only coverage. During the year, Carol contributed $3,000 to her health savings account, HSA, and her cousin also contributed $1,000 to Carol's HSA account. Carol's Form W-2 shows $600 in box 12 with code W. She has Form 5498 SA showing $4,600 in box 2. Carol took a distribution from her HSA to pay her unreimbursed expenses. 2 visits. Wait, I'm looking at your screen, but I can switch.
Oh, that's right. Sorry. I was thinking ahead. Sorry. Go ahead.
Okay. Carol took a distribution from her HSA to pay her unreimbursed expenses. 2 visits to a physical therapist due to a car accident, $300, unreimbursed doctor bills for $700, prescription medicine for $400, replacement of a crown $1,500, over-the-counter sinus medication, $80, 10 Zumba classes for $125. Carol's a US citizen with a valid social security number.
Okay, perfect. Thank you, Julieta. Appreciate you. Thank you for letting me throw you off mid-read as well. So the first question here, so this whole scenario is just about the HSA deduction. So this is something that you have to be advanced certified to do, and it's kind of easy to get this wrong and see what qualifies and what doesn't. So that's what this is all about, is to teach you all the basics of the way HSAs work. And HSA is a health savings account. They're typically tied to something called a high deductible health insurance plan, which is HDHP. I feel like no one calls it that, but that I guess maybe people do for short. But what that means is you have health insurance, and it basically covers you for what I typically think of as like catastrophic expenses. So it's like a high deductible plan, which means you've got to pay a lot of money, and then once you pay that amount, the amount kicks in. But because of that, you get this tax benefit as you're paying money into the HSA, and that money is typically avoids taxes. So it's a benefit to you as an employee if your employer is offering it, or you can do it through an external organization that is not your employer. So with that, we're going to look at some resources about HSAs in the 4012. And the first question is asking us, Form 8889, Part 1 is used to report HSA contributions made by Carol, Carol's employer, Carol's cousin, or all of the above. So for this, the simplest thing to do is, oh, look at this. Thank you. So let's look at E6, see what's there. Okay, so let's go to the next E6. Okay, so there's an interview question here. There's an interview table here about health savings accounts, or like kind of an instruction sheet. Kind of tells you the basics of what you need to know. Yeah, the basics of what you need to know. For this, actually, I think I'm gonna look up the form. I think it'll be slightly easier to show you all that. I don't think they have pictures of how you entered it in the software, but not what the form looks like. So let's actually start with that. So the tax form is the 8889 form. And you can get these resources through the IRS website as well, or from the forms finder. I just use Google because I think it's a little simpler. But you always have to check the accuracy. Sometimes things that you Google are incorrect, like the tax year will be wrong. So make sure that you're looking at the one for the current year. So this is the HSA form. So anyone who's got an HSA will very, very likely have this form entered in the tax return. And what'll really happen is you'll check a box in the software that says this person had HSA. It'll say, great. It'll ask you some questions to fill this in. And then it'll print out a nice, pretty version of this form. But going back to the scenario, it's going to say, so Part 1 is used to report HSA contributions made by which of these people? Let's go look at Part 1. So this is Part 1. It's the HSA contributions and deductions. You're filing jointly, both you and your spouse have separate HSAs, complete a different one for each spouse. So you check whether this HSA includes only you or your family. And then from there, line 2 says HSA contributions made by you for 2021, including those made basically in the beginning of this year that can be counted towards 2021. Don't include employer contributions through a cafeteria plan or rollovers. See instructions. All right, the next one says if you're under age 55 at the end of the year, these things apply to you, but for all others, enter this amount. The next one says enter the amount you and your employer contributed to your MSA. And then the rest we started getting into some math done, but line 9 has employer contributions made to your HSA for 2021. So it seems like your employer can contribute. And then there's not a line here for contributions made by other people on your behalf, but that may be a possibility. So from this, it looks like you can contribute to it and your employer can contribute to it. Let's go to the 4012 and see if we can find that last piece about the cousin. And I don't know if I'll be able to find it in here, but so I'll just actually explain to you all. I think it's 3. Yeah, I think I'll just explain it to you all because I'm not sure where it is in here, but I believe it's in this section somewhere. But so the way HSAs work is, yeah, you can contribute, or a family member can contribute for you. A family member, a friend, really anyone can contribute to the HSA on your behalf. Additionally, some employers will have employer benefits where they'll contribute to it. So you'll contribute some part, they'll contribute some part, or they can contribute all of it with you contributing nothing. So with that in mind, what do you all think the answer is to this question? All right, they're rolling in. Looks like folks think the answer is D. That would be correct. Let's go on to the next question. All right, Carol is eligible to contribute an additional blank dollars to her HSA because she is age 55 or older. I'm pretty sure this is number 7. Okay, so I'm pretty sure this is actually $55. I know this is in the 40. Oh, okay, here we go. Here we go. Contribution limits. There we go. Made it. So this is typically very common for the IRS. There tend to be like some additional benefits for older adults that just are there because tax code is made up by a bunch of dudes in suits who, make up the rules based on their own life preferences. But once you get over 55, you can contribute additional $1,000. It looks like. So otherwise, these are the contribution limits based on if it's a self-plan or a family plan. And the family plan is just double the self-plan amount. So with that, y'all know the answer to this is 1,000. So go ahead and jot that down if you haven't already. Number 8, what is the total unreimbursed qualified medical expenses reported on Form 8889 Part 2? So unreimbursed medical expenses. So what this question is actually asking is which of these things that Carol spent money on qualify for the HSA coverage, basically. So I've not seen a simple list. Like I didn't see it in the 4012, but I'm trying to think. So for this one, number 8, okay. So I have the amount. I know you all have very little guidance here, so I'll give you a little bit. Typically, things that are included, typically things that can be included in this expense are medical expenses covered by visiting a doctor of any kind. So that includes a dentist. Prescription medications, of course, are covered. There was a time when this wasn't covered, but it is newly allowed to be covered. Over-the-counter medications are also included. Exercise classes and things are rarely included, basically almost never included, unless it's prescribed by a doctor. So, there are some rare cases of doctors being like, I prescribe you to swim every day. And then folks will buy a pool and then deduct the cost of that pool and their taxes. It obviously doesn't happen too often. You also have to have high means to do that. But all is to say, like, if your doctor prescribes it, sometimes you can get nice things because of that. And a tax benefit is one of them. So with that, I want you all to take 2 minutes, do some math. Pull out your calculator on your phone or your calculator on your computer. Write in here what you think the amount is based on what I've just said. I see there are some answers coming in through the chat, but you all take a second and process what you think this is. I'll try to make sure the whole thing is displayable on screen to you. All right. There's a few answers that have come in. Thank y'all for submitting them. We'll still give folks another 30 seconds to do a little math if they need to.
I have a question.
Go ahead.
How would we know if she's doing a Zumba classes because of the accident or just like recreational?
It's a good question
to consider.
Yeah, so a good question. Basically, if it would say here, like the doctor prescribed her to do the Zumba classes, and since it doesn't, we can assume that that's not the case. So unless someone says specifically, or if you're interviewing them, you could ask like, hey, did a doctor prescribe you to do these fitness classes? And most likely the answer is no, because doctors aren't typically that prescriptive. Yeah.
Okay.
Yeah, fair question. Typically, like with these scenarios, if the information isn't there, I'd assume that it's not, that the answer that it's not prescribed, or it's not like a part of the answer. And in real life, it's just you'll just ask them really quickly. All right, cool. So it looks like most of the answers have come in. Folks think the answer is C, which I believe, I didn't do the math right now, but I did it when I took the test originally. I think everything is included except for these 10 Zumba classes. Is that right, y'all, for folks who just did it? I'm gonna take that silence as a yes. All right, cool. So with that, we'll keep going. On to advanced scenario 4. Would anyone like to read this scenario? Any volunteers? All right, hearing none, I'll step up and read this one, and then someone else can maybe get the next one. So Barbara Jacobs. Barbara is age 57 and was widowed in 2021. She owes, oh man, this is a really fun scenario. There's always one of these every year. And I feel like this is like a hard scenario. She owns her home and provided all the costs of keeping up her home for the entire year. Her only income for 2021 was $3,600 in wages, in W-2 wages. Jenny, who's age 24, and the daughter of, Jenny, 24, and her daughter, Marie, age 3, move in with her mother, Barbara. So Barbara's daughter and Barbara's granddaughter. After she separated from her spouse in April of 2021, and April 2021 is a bad month for her. it's like a challenging month for folks in these scenarios. Anyway, Jenny's only income in 2021 was her $15,000 of wages. Jenny provided over half of her own support. Marie did not provide more than half her own support because she's 3, and that would be amazing. She'd be like a TV rich baby. Jenny, who did not file a joint return with her spouse, Jenny will not file a joint return with her spouse, and she did not receive any advanced child tax credit for payments in 2021. All individuals in the household are U.S. citizens with SSNs. Only one has a disability. No one has a disability, and they lived in the U.S. all year, but not in a community property state. In a community property state, I'll just kind of briefly explain to you all what that means, although Florida is not one, so you probably won't need to know this too much. But in some states, Texas is the most popular example of one. Texas, Louisiana, these are states where like the laws changed to, how can I say this? To make, I guess the way that I would phrase this as it's like more equitable. It like makes assumptions that if you marry someone, like they should just like it treats them treats them in a different way so that they like own all your assets in possibly a better way. Like many folks think that it like is like it's more equitable to the spouse, like it makes things more balanced if your spouse passes away or if something happens. But for this scenario, it's not going to become too much of a factor. It's just like something for you all to keep in mind for the future. The way that I see this show up is if folks are filing, I've done tax for someone who lived in Texas and did married filing separately. And because of that, you have to have some of the spouse's information on the return so that you can like make sure you're doing it correctly, because that's the way the laws are tailored. So all this to say, not applicable to the scenario, not applicable to Florida residents, so or New York residents. So we'll keep going. All right, so number 9, for the purposes of determining dependency, Marie meets the conditions to be the qualifying child of X. So Barbara and Jenny, or Barbara, Jenny, both Barbara and Jenny, or neither Barbara and Jenny. So this is one, I'm pretty sure I wrote the tag. Oh, okay. So this is a scenario. We're gonna go here to and scroll. Let me close this. All right. So we're gonna go look at dependency. That's the for those who were here for the last Saturday training, we talked about this and we went through the scenario. And we didn't get to the conclusive answer. I like left you on a cliffhanger, so we'll be able to finish that up hopefully right now. Okay, these are not working. So let's just do this. C1. Okay. So here's where I'm going to zoom out a little so we can see it all in one screen. Hopefully this is a decent size for you all. So this tab C1 is overview of rules for claiming a dependent. And basically what we're going to see is for Marie and then for Barbara, I think that's their names. No, Marie's the daughter. For Barbara and Jenny, the mom and the daughter, we're going to see if Marie qualifies as a qualifying child for either or both of them. So first we'll do Barbara, the mom. Okay, so test to be a qualifying child. First, the child must be your son, daughter, stepchild, foster child, brother, sister, half brother, sister, stepbrother, sister, or a descendant of any of them, or adopted, because they're treated as your own child. So that's true. The granddaughter is, or she's her granddaughter, so we know that this is true. The child must be under age 19 at the end of the year and younger than you. So without reading the rest of them, we know that's true. She's 3 and younger than the grandma. From there, the child must have lived with you for more than half of the year. And we know that's true because in April, Marie moved in with Barbara. Oh, okay, computer's struggling for a second. Number 4, the child must not have provided more than half of his or her own support. We know that's true because, again, she's 3. And the last 2 things are the child isn't filing a joint return for the year unless the joint return is filed only to be, basically the child isn't married, so they're not filing a joint return. Again, they're 3. And then number 6 is if the child meets the rules to be a qualifying child of more than one person, you must be the person entitled to claim the child as a qualifying child. See qualifying child of more than one person chart, which is on the next page. So we made it through this. It looks like Barbara can claim her. Now let's do the same thing for Jenny. So Jenny, for her, the child must be your son, daughter. Great, it's her daughter. Let's keep going. Child must be under 19. Great, she's 3. Child must live with you for more than half the year. Great, she did. Child must not have support. The child must not have provided more than half of his or her own support. Great, that's true. The child isn't filing a joint return. That's true. And then number 6, same thing. If the child meets the qualifying child, meets the rules to be the qualifying child of more than one person, you must be the person entitled to claim the child. So there's some little footnotes here that can be really helpful. I won't read through them all, but I'll point them out just to say that one of our professors used to always say the footnotes contain all the like meaty goodness. Like you'll know you're on the right track if you're looking at the footnotes, and that's where like you can find a lot of these answers. So it isn't applicable to this one, I don't believe, but just know that the footnotes can be really important. So for now, it looks like both of them can possibly claim the granddaughter. Let's read through this qualifying child of more than one person tiebreaker rules to see if there's anything else that we need to know here. So if the child meets the conditions to be the qualifying child of more than one person, only one person can claim the child as a qualifying child dependent for all the tax benefits associated with an exemption unless a special rule for children of divorced parents apply. So basically this is just saying whoever ends up claiming the child is going to claim them for all of these credits. You can't like split up the child. It's where you take part of their credits and someone else takes another part of their credits. It's kind of all or nothing. And these are most of the credits that like come with the benefit of having children. So the next note says no other person can claim any of the 6 tax benefits listed above, which I just explained. Yeah, we'll keep going. From there, there are some tiebreaker rules down here. So if only one person is a child's parent, if only one of the persons is the child's parent, the child is treated as a qualifying child of the parent. The next rule says if parents file a joint return together and can claim the child as a qualifying child, the child is treated as a qualifying child of the parents. If the parents don't file a joint return together, both parents can claim the child as a qualifying child. We'll go on to the next one. If no parent can claim the qualifying child claim the child as a qualifying child, the child is treated as the qualifying child of the person who had the highest AGI for that year. And the last one is if a parent can claim the child as a qualifying child, but no parent claims the child is treated as a qualified child of the person with the highest AGI, but only if that person's AGI is higher than the AGI of the child. So basically, if you made, AGI stands for adjusted gross income. If you made more, they're just saying you have to have made more than your child made for you to claim them as a qualifying child. And then there's an example here that may be really helpful. So your daughter meets the conditions to be the qualifying child of both you and your mother. Under the rules above, you are entitled to treat your daughter as a qualifying child for all 6 of the tax benefits listed above, for which you otherwise qualify, your mother isn't entitled to take any of the 6 tax benefits listed above unless she has a different qualifying child. However, if your mother's AGI is higher than yours, you can let your mother treat your daughter as her qualifying child. If you do that, your daughter isn't your qualifying child for any of the 6 tax benefits. For more information, look at the publication 17, which has a bunch more information. Whew, that was a lot. So with that, what do you all think the answer is? Please drop it in the chat.
Can you scroll up a little bit?
Yes. Yeah, take a second, process. This is a lot. I actually got this wrong when I took it because I didn't read one of the things we just read. All right, chat's coming in. Interesting. All right, is there one more guess? It's okay if there is. It's okay if there's not. All right, great. Ooh, so this is good. This is what you love to see as an educator. 50-50 split. The crowd's divided. We're not sure what the answer is. So would either Julieta or Patricia mind coming off mute and talking about why you think the answer is what it is?
So based on what we read, basically I think either of them can claim her, right? Because they meet all the conditions on that first page. The only like choice that they have is that because the mother, Barbara, grandma's AGI is higher than Jenny, she can claim her. Like, right, if you go through the tiebreaker rules, normally it would be like the parent of the child who would claim. But because Barbara has a higher AGI, she could actually claim her. And it sounds like it's up to them.
Yeah, that's right.
I would say it should actually be rooted C, both Barbara or Jenny. Because first I was like Barbara and Jenny. They can't both claim her, right?
That's right. All of that is right. It basically is like one of them can claim her, not both. That actually is like really weird wording. Good point. But yeah, so the answer is C. And this is a hard one because there always is an example like this every year, like I mentioned. But the answer always changes every year. So like for the last few years, it's been the person who was the parent could claim them. But in this year's example, it actually was a little bit different. So like either of them qualified to claim them because the income was higher and Jenny provided more than half the support, which hadn't been true in the past. But so yeah, that's right. Either of them can claim her. At one point, as we looked through the chart, I think it was like both of them can do, one of them can do it, both of them can do it. And then it was like, no, the parent should do it. And that little footnote told us that actually, because the grandma's AGI is higher, either of them could do it and they can choose. And this happens at the tax site, I'll say sometimes, not all the time, but like a mom and a daughter will come in with a grandchild and they'll kind of be wondering like, what's the best thing for us to do? Who's it better for us to claim this child for? And typically it's like a really clear answer, but sometimes it's not, where it can be, anyone, whoever is best can choose, and we'll try to talk them through that.
That sounds like it's kind of something that's a little bit more advanced, like to actually advise people on like what's the best choice for who to claim, right? Because like the difference in wages probably means that they may or may not qualify for more or less money. Is that a thing that you do advise people on as a VITA volunteer?
It is. So remember,
there's probably not something in like a book easy to look up to actually know.
Yeah, it's not. So this is the kind of thing where if you're ever doing it and someone comes in front of you and you're like, I'm not sure, what you would do is just like let them know like, hey, I'm going to ask my site coordinator a question. You jump out of your breakout room for a second. You'll ask us the question, explain the scenario, and then if we'll either give you the answer there and say like, this is the best thing, or we'll go back in with you and ask the questions of the client to make sure that you get the right thing and get their input, and then jump out after that. So all this to say, like, yeah, if you're ever worried, you're like, I'm not sure if this is correct, just let us know. Yeah, and I'll say this like can happen, but it's like more rare. That's actually true of like most of the stuff we're doing in this advanced scenario test. That we're basically learning like the hardest examples you could see at a tax site. And then when people come in, it's going to seem super duper easy. Like later on, when we're putting in like 7 or 8 tax forms for people, that almost never happens. People are going to come in with like 2 forms. It's going to be super simple. So just know that you're like kind of learning the hardest option. So you can like, you train for a marathon, then you run a 5K. The 5K is super easy. So any other questions about this one, y'all? All right, hearing none, let's go on to number 10. Also, thank you all for bearing with me on that one. I feel like that is like it's like a hard one to wrap your mind around because there's just a lot going on. So great job keeping up, y'all. Number 10, Jenny is not eligible to claim Marie for the earned income credit because her filing status is married filing separate. Okay, looking at the cheat sheet here of my answers. So you all will remember this from the training last time if you attended. The way filing statuses work is you can choose the best filing status for you in most cases. In most cases, there's typically one really, really clear answer. But there are some situations where you can, if you can claim, where like the chart we went through earlier, you can like, we would use that chart to determine the best thing. So the question here is Jenny's filing status actually married filing separately? If she's claiming Marie, and I have like, to me, this is like from years of doing taxes, this is like quite obvious to me, but I'm going to go through the chart for you all to understand this a little bit better. Let's see, what are we looking at? This is legislative extenders. Nope. All right, starting a tax return. Great. We're almost there. Let's come back to this chart. One of my favorite charts of the whole training. So great. Were you married on the last day of the year? Yes, Jenny was married. Did you and your spouse live apart for all of the last 6 months of the year? Yes, they did. Or for all of the last 6 months, yes, they did. April was a separation date. You filed a separate return from your spouse. Is this true? Yes, she's planning to. You paid more than half the cost to keep your home for the required period. Yes, that's true. Your home is the main home of your child. Yes, that's true. You can claim the child as a dependent. So in this scenario, if she does claim the child as a dependent, she would file head of household. If she doesn't claim the child as a dependent, she'd be married filing separately. But since this is saying Jenny's not eligible to claim Marie for the earned income credit because her filing status is married filing separately, we know that this is in fact false because in any situation where she's claiming Marie, she'll be able to claim head of household. Does that make sense to everyone?
Can you repeat that?
Yes.
It's
So
a lot.
it's a lot to take in. Basically, the important thing here is for this scenario and this situation, if you've got the dependent, if you're able to claim Marie, you can claim head of household. Yeah, I think yeah. So for both Barbara and Jenny, they're able to claim head of household. And the chart we looked at shows us why. But it's basically like you provided all the support for the dependent. They live with you. No one else can claim them. Or you're choosing to claim them in their situation. So married filing separately wouldn't apply unless she's not claiming Marie. And that makes this. Jenny is not eligible to claim Marie for the earned income credit because her filing status is married filing separate. Well, that's false because her filing status would be head of household.
Unless it's not.
Yeah, well, yeah, this scenario is a little weird because like there's this like dependency on who's going to claim the child. So for the second part, we basically have to assume Jenny's claiming the child. Yeah, it's again, y'all, it's typically not this difficult in real life, but I actually think this is the hardest scenario in the whole test. Like this is the one I think I missed 3 when I took it. I missed both of these. Not because I like didn't know the answers, but because I just like was going quickly. Like, I've been doing this for 12 years. So for me, I'm like, great, let's like crank through this. You're gonna miss some, but a pass is a pass. 80 is an 80. So these are 2 of the 2 that I missed. And I'll show you the one other one that I missed in just a little bit. But all this to say, y'all will be great. We'll all work through it together. I do actually use that, like the chart that I showed you all, the filing status chart, like quite often in real life if I ever have doubts and if it's ever really complicated, but it's typically not. So scenario 5, Michael Block. Okay. Michael is age 49. I'll read this one. And files as single. His 2020, and we'll take a break in once we get through question 14, we'll take a break. So stick with us. keep those brains focused. You're almost there. Home stretch. All right, starting again. Michael Block is 49 years old, files a single. He's 2021 adjusted gross income is $49,500, which includes gambling winnings of $1,000. Michael would like to itemize his deductions this year. So basically, he works a W-2 job, has $49,500 of income, and he has gambling winnings of $1,000. He wants to itemize his deductions. Michael brings documentation for the following expenses: hospital bills of $8,200, $700 of contributions to an HSA, $2,500 of long-term care insurance premiums before age limitation is applied, $3,400 of state withholding, higher than Michael's calculated state sales tax deduction. So basically, it's like the highest possible state tax deduction for him of those two. $300 of personal property taxes based on the value of his vehicle. $400 of a friend's personal GoFundMe campaign. $275 cash contributions to the Red Cross. $100 fair market value of clothing in good condition to Salvation Army. Michael purchased the clothing for $800. And mortgage interest of $7,500. $820 of real estate tax. $230 of mortgage insurance premiums on a home purchased in 2017. $150 of home owners association fees, and $2,000 of gambling losses. So as you all can imagine from reading the scenario, this is going to be one that's asking about itemizations and which ones are eligible and which ones are not. There also is, I think, going to be something about gambling winnings. So let's look at the actual questions they're asking us this time. So this is actually quite specific. Michael's mortgage insurance premiums of $230 can be claimed as an itemized deduction on his Schedule A. True or false? So I'm going to take a look at the answer and hopefully show you all where you could find this. So let's scroll up here. We're going to look at itemized deductions. So we're going to look at deductions. All right, so deductions are here. We're in the deduction section. And then there's tab F5, which focuses on itemized deductions. Let me go back and make sure. So the first thing here is there actually are some interview questions about itemized deductions that you could use with the client in real life. And the interview questions like reveal the most popular things about itemizations and itemizing. So for most people to itemize, one of three things has to be true. This like is in the book in its own way, but I'll like kind of summarize it for you. Excuse me. The three most popular things, y'all, are folks have to own a home, and Michael does. Folks have to have major medical expenses, like high medical expenses, or folks have to donate a lot to charity. If none of those three things are true, it's very likely folks will not be able to itemize, and the standard deduction will be better for them. And as a reminder, the standard deduction amounts, they're listed on the 1040 right here, where it says standard deduction, in this little like standard deduction or itemized deduction line. For single, it's $12,500. For married, filing jointly, or qualifying widower, it's $25,100. For head of household, it's $18,800, and that's it. So if you're itemizing, all of the amounts you add together have to be more than the standard deduction for them to be beneficial to you. There are a few examples of times when you itemize your taxes that where you're forced to itemize. And the best example of this is if you're married filing separately. If your spouse itemizes, you are then forced to itemize on your taxes also. If your spouse takes the standard, you're forced to take the standard. It's kind of like you and your spouse have to treat your taxes in a similar way, even if you're filing separately. So this can actually be really rough because let's say spouses decide to file separately. They own a house, so that means they can itemize, and it's better for one of them to. One of them can itemize, but if the other one has no itemizations, the standard deduction is going to be used. Can you all still see me? Okay.
Yes.
I'm getting a weird error. Anyway, it says I've been signed out because my device is being used on another account, but I'm hoping that, did someone just arrive? Is Jessica here or someone here? Alyssa?
Yeah,
Is
it's
that you?
Alyssa.
Okay. Okay, good.
So sorry.
No, you're good. Welcome. As long as y'all can still see, it's asking me to sign in again. Y'all give me a second. Let me grab the password and then I'm going to sign in. Alyssa, welcome. You want to do a quick introduction?
I'm sorry.
You're good.
Sorry for interrupting.
You're fine. No harm. Yeah, let's introduce yourself.
Hi, everyone. My name is Alyssa Delgado. I am one of the managers here at Catalyst Miami, and yeah, I'm one of the site coordinators, so you might see me. A lot of you end up volunteering. So hello. Sorry to have interrupted.
No, you're good, Alyssa. And your timing is great. With that intro, I was able to grab the password. Oh no, what does this mean now? You can also convert your recording later by going into meetings. Okay, anyway, there's a weird error popping up. I don't know what it means. I'm going to cancel it. Okay, as long as y'all can see me, we're gonna keep going, powering through the scenario. So we're on, so great. So we're talking about itemizations. I forget my last word, but did everything, has everything I've said made sense to you all so far? I see a question in the chat. Oh, hello. All right, cool. So with that, so let's try to figure.
Oh, sorry. Just a quick to
Yeah.
make sure I understood what you were saying about marrieds filing separately. Essentially, they have to do all the same. They both have to itemize, or they both have to take the standard deduction.
That's exactly right.
But they can itemize the same things.
They can't itemize the same things, like one person gets it or the other person gets it. So let's say if you own a house, you'll have mortgage interest that you paid, you'll have real estate taxes that you paid, and possibly mortgage insurance premiums if they're deductible, which we'll find out in a second. You'll have those three things, and one spouse can take them all, or you could like divide them up. So it could be like one spouse takes the mortgage interest, one spouse takes the real estate taxes, one spouse takes possibly the mortgage insurance premiums. But like that's not the way people typically do it. It'll typically be like one spouse takes all the house stuff, and the other spouse would have to have big donations to charity or big medical expenses for it to be worth their while to itemize. Or both spouses can forego itemizing and take the standard, because that may be better for them. So.
Okay, thank you.
Yeah. Also, the other thing I'll say, y'all, is like, we actually rarely see this at the Vita site, because people will say I'm doing married filing separately when they come in, but like we might ask them like, hey, heads up, your spouse's filing status, or have they filed yet? And they'll typically say they haven't filed yet, or they'll say I'm not in contact with them, so I don't know. So and then we'll just treat it as assuming that whatever they're doing, the spouse is also doing. Yeah. People also typically are like in contact with their spouse, at least in some way or another, in contact enough and hopefully on good enough terms to like have their social security number. Whenever you file married filing separately, you need the spouse's social. So if they file taxes with us from a prior year or at any Vita site, the software will remember it. But if they didn't, they typically have to make a call to their spouse and get their social, so we can include it. And it's just like IRS's way of like tying the two returns together so they can check to make sure that things are coordinated in the way they should be. Okay, so going back to the scenario, Michael's mortgage insurance premiums of $230 can be claimed as an itemized deduction. So we're here in the 4012. What we're looking for is if there's a place for mortgage, if mortgage insurance is one of the deductions that are eligible as an itemized deduction. So if, oh, I think this is it actually. This is great. This is for medical expenses. Okay. Y'all forgive me as I scroll through for a second to see if there's a really obvious place. Okay, so here, Schedule A interest. This is for mortgage interest. And I think this is maybe not going to be what we need. Okay. Home mortgage loans, mortgage interest reported. Mortgage interest. Are we looking at mortgage interest or mortgage insurance? Sorry, I'm forgetting. Mortgage insurance. Okay. So here it says private mortgage insurance premium deductions. And then it says private mortgage insurance premium deductions are deductible for 2021 and should be entered on the Schedule A interest screen in TaxSlayer. So this is, mortgage insurance isn't always deductible. Sometimes it is, and this year it is, but this kind of is one of those things that changes every year, every other year. So the reason they included this question was just to let you all know that in this year it's deductible, and you're good to go. So with that, you all know the answer to this is Yeah, Patricia got it right. The answer is true. Cool. Let's keep going. The other thing I'll say as a hint to you all for when you take the test later, when you have these true false questions, I think it doesn't have the answer A or B. So if you want to write like A and then put a T beside it, it might help you when you take the test. Because I always write A and then I'm like, oh, A was true, right? So just a heads up that anyone that's true false of the test will actually just say true or false and not like A, B, true, false. All right, so the next question is, what is the amount of gambling losses Michael is eligible to claim as a deduction on his Schedule A? So let's go back and look at Michael had gambling winnings of $1,000. That'll be a factor. And then Michael had gambling losses of $2,000. So let's see if we can find this in the 4012. Gambling went, so I'm reading this chart here. This may not be the one, but I think it is. Gambling winnings are reported. Gambling winnings are reported to the taxpayer on Form W2G. They're fully taxable and must be reported as income on the tax return. Gambling losses up to the amount of winnings are reported. Gambling losses up to the amount of winnings reported may be deducted as an other itemized deduction on Schedule A. So I feel like this is not the clearest way to say this, but I'm going to just talk you all through what that actually means. We can look at this while we're looking at it, or as we're talking through it. So what the lay version of this is, for anyone who has gambling earnings and gambling losses, the gambling losses are only deductible up to the amount of the winnings. So if you win $1,000 and you lost $2,000, you can't deduct the whole 2,000. You can only deduct 1,000. So that's what that says, and that's what this means. So with that, what amount of gambling losses is Michael eligible to claim as a deduction on his taxes? Patricia and Keith both think it's C. And they would be, I'm waiting to see if anyone else is going to put their answer in the chat. All right, great. So that's correct. C is the answer. And the important thing to keep in mind here, folks sometimes think that there's this kind of misnomer with gambling earnings and winnings that folks can deduct them from each other, and only the amount of gambling winnings is like winnings minus losses is what is taxed, but that's not true. The entirety of winnings is taxed, and then losses can be deducted as an itemized deduction only up to the amount of winnings. So like if you're not itemizing, this doesn't matter. Like it doesn't affect your taxes at all. It only affects it if you end up itemizing for the losses to become helpful to you. All right, great. So that's the end of scenario 5. Any questions about either of these questions? All right, cool. So with this, y'all, we're gonna do scenario 6. This is a much briefer scenario. This is Sean. So Sean Dennison is 19 years old. He is not a full-time student. Sean works at a grocery store and he earned $20K in wages. He had $2,400 of withholding. He lives with a friend in a rented apartment. They each pay their own expenses, and Sean provides all of his own support. Sean is a US citizen and lived in the US for the entire year. He has a valid social security number. Number 13, Sean is not required to file a tax return because he has enough tax withholding to cover his tax liability. True or false? So before you all answer that, if you have a guess, you can put it in, but I won't hold you to it. So to me, this is a question about who should file. So we're going to go here in the 4012. We're going to look at who should file for most people. So this chart is another one that I refer to often and like a lot. I feel like it makes it really simple. Based on your filing status, if you made, and your age, if you made this amount, then you must file. If you made under this amount, you don't have to file. If you made over this amount, you have to file. So looks like folks are dropping some answers in the chat. So keeping this in mind, Sean made $20K. He had some amount of taxes withheld, but it doesn't matter. This isn't super relevant. So Sean is not required. Sean is not required to file a tax return because he has enough tax withholding to cover his tax liability. The tax withholding doesn't matter. If you made income over 12,500 as a single person, then you're required to file. And the answer to this is B, just as folks are indicating. Does that make sense, y'all?
Wait, which one is it?
So the answer to this one is B, because Sean is not so Sean is required to file a tax return is another way to phrase it. Like he is required, he must file, he made too much money, because this chart here says if you make over this amount, you must file a tax return. Make sense? And I'll speak up if you've got questions. Now is definitely the time. All right.
It's Alyssa. The only thing I would say is to also keep in mind that it's taxable income. He received it from wages. So if it would have been from like Social Security, for example, that is considered non-taxable. So he wouldn't have to file, but it was from wages. So he does have to file. That's
a great point, Alyssa. Really, really good point. Yeah, most forms of income are taxable, but some are not. And then some are tricky, like Social Security, like Alyssa mentioned, is not taxable unless you have other types of income, and then it becomes taxable. So just a heads up, things can be a little tricky. But for most people, if they have income over that amount, they probably have to file. All right, question 14, and our last question before we take a quick break is, which of the following is not a requirement for Sean to claim the earned income credit as a single person with no qualifying children? Wait, I feel like there should be a, sorry, we're starting again. Which of the following is not a requirement for Sean to claim the earned income credit as a single person with no qualifying children in 2021? I feel like there should be a comma in there. I'm just like, there was no pause. So Sean must have a Social Security number valid for employment to claim the earned income tax credit as a single person. Sean must be at least 25 but under age 65 on December 31st. Sean's adjusted gross income must be below 2143 or 21,430, or Sean can be the qualifying child. Sean cannot be the qualifying child of another taxpayer. So this question is asking about the earned income tax credit. So we're going to go over here, scroll up, find the EITC, and there's a whole section. So even though the earned income tax credit is a credit, there's a whole section down here just for the earned income credit. So we'll go to the earned income table on tab E1. No, tab I1. Okay, tab I1. So the first thing here is like, what is earned income? Taxable wages and salaries are earned income. That's great. Sean the gambler? No, he's not. Okay. Getting all the scenarios mixed up. So gambling winnings are not earned income, just in case for anyone who's wondering. So just a heads up there. That's like not earned income. So now the rules for claiming earned income tax credit, as well as this chart down here, we're going to look at. I'll zoom out a little so you all can see this all on one page. You all actually probably could have seen it all on one page before, but I have your faces in the bottom, so I can't. But so in this EITC eligibility requirements table, the rules for everyone. So we'll read these rules for everyone and the rules for if you don't have a qualifying child to determine which of these things are true. So if y'all are looking at this, a reminder, the four things are: you must have a social, which of the following is not true. So one of these things is wrong. Having a social valid for employment, being age 25 but under 65, having an AGI of 21,430, or you can't be a qualifying child of another taxpayer. So the rules for everyone are: taxpayers for qualifying children must have Social Security numbers that are valid for employment. So it seems like that one is true. The filing status can't be married or filing separately unless you meet an exemption. Not applicable, but good to know. Must be a U.S. citizen. That's true for this client. Cannot file form 255 or 2555. This is a file about earning income in another country. There's a bunch of rules for that. There's a whole international scenario about it. You're welcome to explore it or ask me questions about it. There was a time in Miami where I had like something like one family from Colombia who were expats came in, and then all of a sudden there were like 10 families coming. I think some of them still come to do their taxes at Catalyst. So anyway, investment income must be less than $10,000, and you can't be the qualifying child of another person. So those are the rules for everyone. We've eliminated some of these from the question. We'll keep going. Rules if you don't have a qualifying child: you must be at least age 19. You cannot be the dependent of another person. You must have lived in the United States for more than half the year, and you can't be the qualifying child of another person. And then the last thing is income limitations. And if you don't have a qualifying child, this last one, you must have made $21,430. Or you can only make up to that amount. Apologies. So you have to have made that amount or less to qualify for this credit. So this is a lot to process, but let's go back and look at these options. And now that we've read these, I want you all to drop in the chat which one you think is not a requirement. Or ask questions. All right.
Can you say what page you were on in the tax Bible?
Yes, this is page I1. No, I2. Yeah, y'all take a second, process this. We've got one guess from Kay, but y'all take a second. Look at these. This is a hard one because there's a lot happening in the scenario. There's a lot to remember. I'll also scroll up so you can see everything happening with Sean. All right, great. We got 2 guesses for B. D, lots to look at. I could be wrong. That's very fair, Keith. All right, there one or 2 more guesses coming through. It's okay if there's not. I'll give you all another 30 seconds.
What's the page number for E1? Was it E1? I think it was.
Page number for this scenario, or for, so it's page 80 in the test book, and then in the tax Bible it's page I2.
No, like, okay, 212, like the page number.
Oh, 212, yeah, sorry, like the PDF page number. That's right. Yeah, y'all take a few more seconds for anyone who hasn't guessed yet. We'll go through the answer in just a second. And then after this, y'all have earned a break. Feel like you're all, you're all doing great. Maybe you're a little mentally exhausted, but you're doing good. Keeping up with a lot of words, a lot of images, a lot of numbers. You're doing great. All right. Any last guesses, y'all? Any last guesses? I know it's a lot to process. Okay, so for this one, someone want to walk us through how they got to the answer they got to?
There was no, well, there was a thing about age in that document, that page we were looking at, 2 and 2. It said that you had to be at least 19, I think. Right, must be at least 19. Oh no, there was a footnote.
There's always a footnote. Okay, if the individual is a specified student, the minimum age is 24. Okay.
Well, I guess that doesn't matter for the purpose of the question, right? Because the question.
Well, it matters, but he's not a student. It says like he's not a full-time student. So.
But he could be a part-time student. I don't know. Sorry, maybe I'm going too deep. But.
Yeah, it doesn't say in the example, so you can assume that he's not a part-time student either. Like it doesn't say that, but let's assume he's not. So yeah.
Anyway, the point is that doesn't say anything about age 25 or 65. So
that's exactly right. So great job, y'all. The answer to this one is in fact B. I feel like these questions always really get me because it's like, which of the following is not true? And this cannot, like, I'm like, what are they trying to do here? There's too much bold going on. It's like, this is almost like guiding you down the wrong direction. So just a heads up. Y'all got this one. Any questions about anything we've gone over so far? We've talked about a lot of topics. Y'all have any questions, comments, concerns, thoughts? All right, so hearing none, man, you know what I should have done? I should have pinned myself so that the recording people could see me the entire time, but I did not. I'm gonna do it now. So if you're watching the recording, thanks for being patient with seeing lots of chatting heads and things. Maybe you saw me the whole time anyway. But y'all, so let's take a quick break. Let's come back at 1:30. Are y'all okay with a 10-minute break? Or we can do 5 if folks feel like they want to come back sooner. Quick votes in the chat or over voice.
11:30.
All right, 11:30, yeah. Or 11:30 Eastern, if everyone's Eastern, 11:30. So cool, I'll see y'all in 10 minutes. I'm gonna pause the recording. All right, hi everyone, welcome back. And we're gonna spend the next section going through, I think it's scenario 6. But this is gonna be a fun one because we're gonna get into the software and how it works and how you use it. So what I'm gonna do for this section is, so both scenario, I think 6 and 7, it's either 6 and 7 or it's 8 and 9, or 7, 8, 9. But the 2 scenarios we're gonna do next are, I'll say they're like quite complex. They're like much more complex than the average VITA client. So just know that like this is gonna seem like a lot and it's gonna be a lot, but I'm gonna show you how to do one return. Then you're gonna get a chance to prepare one on your own with us, and then you'll spend the last little bit focused on doing one on your own, and then we'll come back together and discuss the answers to make sure folks got it correctly. Yeah, let's dive in. Let's dive in. So I'm going to share my screen. All right. So what you'll need for this is, so what I want to encourage you all to do for this first one is like just watch. I think it can be like, we'll just watch one together now, and the next one we'll like do it together. So like I'll do it, you'll watch me, and then you'll do it on your screen. And then the last one we're going to spend time, it'll just be you alone. So all this to say, like, if you really feeling aggressive, you maybe can do this on your own, but I would really encourage you to just watch this time. So that way you're not missing anything, and like while you're jumping back between screens. So the first thing is we're going to use the practice lab for this. So the link to the practice lab is in the resource document that I linked earlier in the training. You can also access it from the Link and Learn website. So eventually when you go to take the test, you'll create a username and password or sign in, but there's a link for the practice lab over here. So just know you can get to it there. And then the password to the practice lab is also down here in their little notes. Again, the footnotes always contain the juicy bits. So once you jump over here, I'm going to copy paste that. I copy pasted the password in here already. We'll click login. And if it's your first time, you're going to click on create an account. I'll sign in just a second, but I'll show you all what it looks like to create an account. You'll add your email address, your username that you desire, your password. You'll select the VITA program. And you don't have to put the site identification number in, that's optional. And then you'll select a security question. And then that's it. You'll click register or whatever's down at the bottom. I can't see it because I'm cut off a little bit. Create account, I think it says. And then you'll be good. So I'm going to log in and hope I remember my password. Always is a little stressful. It's either this or it's this with this. Let's try that with that. Great, first try. All right, so from here, this button will take you to the practice area, but I want to point out a few things. There are actually some trainings built in here for how to use the software and how to enter things into the software. So there's like much more training than we'll go through. You all won't need to do much of this because we're going to cover it in the training today. But just know if you ever are like, I'm not sure how to enter basic credits, you can come over here. Or if you want to see some of the new things that were updated in the software, TaxSlayer on this webinar 5, I think it's webinar 5, they added an option for, so you can see like the new updates for this year. So just know that that's there, as well as there's like a practice return, which we're going to do together here. So also the folks from TaxSlayer, they're nice Georgia folks. The software is made in Georgia, and they like, you know, Craig, who teaches the videos, has like a nice Southern accent. It's cute. If that's what you're into, you'll enjoy it. So with that, so now that you're in the software looks just like this, the real life software that we're going to use to prepare taxes with clients. Maybe 1 or 2 more things on this screen, but this is basically it. So we're going to click on Start New Tax Return. And we'll, if you ever start a client and you need to come back to get into them, you can do client search. It'll bring up all of your old clients. but we're actually going to go back and start a new one. So start a return, and we're going to enter the social. So we'll need all this information from the client in order to enter it. So let's go down here to the next scenario. So we finished scenario 6. So now scenario 7. So in order to do this, we're going to, before we start entering socials and things, we're actually going to take a second and read the scenario. I'll read it to you all so you can have a understanding of what's happening with Gilbert and Tara Washington, and then we'll enter their socials, which are here, and look at all of their intake documents to figure out everything we need to enter. Because this is exactly what you all will do when you're looking at the software and looking at people's uploaded documents. So I'm scrolling through so you can briefly see some of the things we'll look at, but we'll actually look at what each of these forms is, why they matter, and then we'll start the return. And then we'll come back and answer these questions. That's the last thing that we do before we take our next break. Also, a heads up to you all, I think this will take about an hour and a half. I think by 1, we'll take another break and do like a longer break for lunch. It may not be that long. It may be more like an hour 15, or if we really get lucky, an hour. But so just kind of a heads up on timing there. No, we'll take a longer break during that period. But as always, if you need to go off camera or like let us know, BRB, if you need to step away, just go ahead and do that. All right, so Gilbert and Tara Washington. Does anyone want to read this actually? Alyssa, would you want to read this? I mean, you haven't read yet.
Yeah, sure, no problem.
Cool, thank you.
All right. So, by the way, interview notes are meant to provide any supplemental stuff, because I know we have the interview and intake form, which is what we'll grab a lot of our info from, but this is just to give any, this is essentially supposed to be the conversation you're having with the client, and they provide any info. So Gilbert is an elementary school teacher at a public school. Gilbert and Tara are married and choose to file married filing jointly on their 2021 tax return. Gilbert worked a total of 1,280 hours in 2021. During the school year, he spent $500 on reimbursed classroom expenses. Tara retired in 2018 and began receiving her pension on October 1st of that year. She explains that this is a joint and survivor and annuity. She has already recovered $1,013 of the cost of the plan. Gilbert settled with his credit card company on an outstanding bill and brought the Form 1099-C to the site. They aren't sure how it will impact their tax return for the tax year, but they're determined they were solvent as the date of the canceled debt. Tara won $3,000 gambling at a casino and had additional lottery winnings of $150. Tara has documented casino losses of $1,500. Their son, Chandler, is in his 2nd year of college, pursuing a bachelor's degree in logistics at a qualified educational institution. He received a scholarship, and the terms require that it may be used to pay tuition. Box 2 was not filled in, and Box 7 was not checked on his Form 1098-T for the previous tax year. The Washingtons provided Form 1098-T and an account statement from the college that included additional expenses. The Washingtons paid $450 for books required for Chandler's courses, and this information is also included on the college statement of account. Chandler does not have a felony drug conviction. We will see why that is relevant. The Washingtons received the 3rd economic impact payment in the amount of $4,200 in 2021, and they are all US citizens with valid Social Security numbers.
Awesome, thank you, Alyssa. So y'all, there's a lot of information here. This is a lot. This is longer than any of the interview notes we've seen so far. There's a lot happening. So let's actually look at their intake documents and go through and see what else we should be doing. So the first thing is there is a dummy Social Security number here for us to use, and I'll show you how to put that in the software in just a bit. But the real clients will have a picture of the social uploaded, so know that that's here. If a client ever doesn't have their social uploaded, ask your site coordinator if you can proceed, but the intake should catch that. So by the time you all are preparing taxes, this should kind of already be there and should be good to go. Or there'll be a note saying, here's the reason it's not there, and you can proceed. All right, so the intake sheet. So this is the same intake sheet that VITA clients will fill in. They'll basically use a software provided by an organization called Code for America, and they fill in a site called Get Your Refund, and it produces this intake sheet and lets clients upload their documents. So we'll see the most important things here to start with are Gilbert's name. So Gilbert Washington, you can put in whatever phone number you want. Gilbert's a US citizen. Tara Washington is his spouse. She also is a US citizen. Their address is 123 Taylor Avenue. They live in Miami, Florida, 33137 or whatever zip code you want, or Brooklyn, New York, whatever. They live wherever, whatever your city is. Gilbert is a teacher and his birthday is here, May 5th, 1964. Gilbert is not totally and permanently disabled. He's not a full-time student and not legally blind. And the same thing is true for Tara. None of those apply to her. She's retired and her birthday is March 11th, 1956. Can anyone claim you or your spouse as a dependent? No, no one else can claim them. Have you or your spouse been victims of a tax-related identity theft or been issued an identity theft protection PIN number, ID protection PIN number? No. And the IP PIN is just what happens is some clients that have been victims of ID theft will get a letter from IRS every year telling them you can't file taxes without this PIN number. So basically, no one else can file taxes without this number for you either. So you've got to include this number on your return. And if we try to file without it, the return will basically reject and say, hey, this person needs an identification number. Typically, we follow up with the client then and see if they received a letter in the mail about it. If they did, it's really easy. You put it in. If they didn't, there's a process they can use to paper file their return, but it slows things down a lot. So it's better to have that letter. The other caveat I'll say here is Miami is the capital for identity theft in the country. Like more identity theft happens in Miami than anywhere else. So please just kind of keep in mind that you'll see more of these than you would if you were doing taxes somewhere else. But it also helps to protect clients. So you know, we'll help folks process that as they come through with them. All right, so the next thing here is it's information to figure out the filing status. So as of December 31st, they're both married, really easy and simple. If yes, did you get married in 2021? No, they're married before then. Did you live with your spouse during any part of the last 6 months of the year? Yes, they lived together the whole year. So good to go on that. Every client that's single will have this never married check. Also, folks that are head of household and have a dependent could also check this never married. Anyone that's divorced or legally separated probably is single status. Anyone who's widowed is either married filing jointly for the year of their widow's death or the year of their spouse's death, or for the next 2 years they can be married for qualifying widower. And then in the third year they switch to being head of household if they have a dependent still or single. So all this to say, they're married filing jointly. Let's keep going. Their dependent is Chandler Washington. Chandler's birthday is 2002, August 6th. I think he's 19. And that math could be off, but I think it's right. He's their son. He lived with them for all 12 months of the year. He's a US citizen and a resident of the US, and he's single. He's a full-time student, and he's not totally and permanently disabled. There are these gray boxes here that are for the tax preparers to fill out. So just know that you'll answer like yes or no to these questions. Is this person a qualifying child of any other person? You could ask the client these things and they would say no. Did this person provide more than 50% of her own support? The answer is no, because it says in the interview notes. Did this person have less than $4,300 in income? Yes, that's true. Did the taxpayer provide more than 50% of support for this person? Yes, that's true. And lastly, did the taxpayer pay more than half the cost of maintaining the home for this person? Yes, they did. Even if they're a college student and they don't live in your physical home, there basically is like a unique rule for college students that you still are providing for them, even if they like live away, but they're still in school. All right, so the next thing here, and this is a really important part of the intake sheet, this tells you what types of income the client has first, what expenses they qualify, that they had this last year that may qualify them for a tax deduction. And the last thing is life events they also may qualify for either a credit or a deduction or trigger something in the taxes. These include the most common things that folks at Avida sites come in with, but not everything. So folks could have something else that's outside of this. There are some catch-all items like other income, which is just a like, you had something else. And gambling is included here. They also have jury duty here, foreign income, royalties, awards. There's all kinds of things that can kind of pop up in here. We know that Tara has some gambling earnings. That's why this is more true for them. Starting back up at the top. So wages and salary is the first thing. They have a W-2 from I think the husband's a teacher, I believe. There's no tip income. They have scholarship income for their son. We'll look at that and how much in just a second. They have retirement income from pensions and annuities. They also have Social Security income, and then this other income that I mentioned. Oh, this is great. LOL Jersey, $50 income that changed my life. Nah, that's great, Alyssa. That's sort of. So let's keep going. Looking at the expenses section, there's a few things that they've got that are applicable here. Contributions or repayments to a retirement account. They have a 401k, or the husband has a 401k. They paid college costs for their son, and that's reported on a 1098-T. For supplies used as an eligible educator, there's a deduction, so there's some expenses there. And then the last two are, this is funny, this is marked yes and no. So if whenever this happens where a client is marked more than one box, you'll just clarify as a taxpayer with them, like, hey, I just want to make sure that this is actually correct. And for these folks, that is true. They do have student loans. Oh no, they had a credit card that was forgiven. So they received a 1098-T, so this is true. And the last thing is they received a stimulus payment in 2021, and it says the amount of that and get every notice. So it's a lot. There's a lot of boxes checked on this. Again, most people will not have this many boxes checked. So let's keep going and look at the rest of this intake and get ready to prepare this return. The last thing here is they check this box saying they do want to contribute to the presidential election campaign fund. I mentioned this in the last training, but I'll recap it really quickly. So this is, if folks check this box, they basically opt to have $3 sent to this fund. It doesn't reduce their tax return. So like folks don't lose money from their taxes or their refund if they opt into this. It basically like lets Congress send money to a pot for people that want to run for president. But there are some restrictions with this pot, but it's meant to make it so that the layman, like me or you, could just go, if we decided like, yo, I think I can be the next president of the United States. You could take money from this pot and attempt to run a presidential campaign. But as the record stands now, no one's ever taken money from this pot and won. And there are some like legal restrictions that come with it. So essentially anyone who's ever won president has always had enough money or was able to raise enough money to achieve it without using this fund. So, you know, all this to say, if a client's like, what is this? Am I going to give money to Donald Trump or President Biden or Obama or whoever? Because clients, that's what clients think when they read this question. You can typically select, no, this is actually for people that want to run for president. If you want to contribute to it, great. If not, that's fine. So if these are both blank, then we know it's fine. So like the wife did not opt in to contribute to it. It's fine. The next thing is they want to receive their refund via direct deposit. They don't want to receive a U.S. savings bond. But if folks checked yes to this, is one of the like only ways to get a U.S. savings bond in a paper bond in real life, like it's through your taxes. I actually have one like in here. I think I like have it right here, but I guess I won't show it to you all because the number on it and stuff. But basically, like if folks want to receive a savings bond, they're issued in I think $50 increments, and you keep it and could take it to a bank and cash it in at some point. It's an interesting way to get a little investment that's unique. The last thing is they don't want to split their refund between two accounts, but if people do want to have the refund go to multiple accounts, they can say yes to this. They can go part to their checking, part to their savings if they want, or part to 3 or 4 accounts, whatever they choose. They don't want their payment to be taken out of their account if they owe money. So if they've got a balance due, they don't want it directly taken out of their bank account. But many folks will want this because it just makes things easier. When they do this at the tax site, they can choose the date. So you'll ask them like, oh, okay, it looks like you have a balance due. Do you want this taken out of your bank account? And they'll say, yeah, that'd be great. Have them take it out in 2 weeks. And you'll ask them for the exact date. They'll confirm it, and then it will come out automatically. All right. Do you live in an area that was declared a federal disaster area? There were no natural disasters in Florida or New York this year that I'm aware of. But in the cases that there are natural disasters, like COVID doesn't count as a federal disaster area. So just know that like this should be applicable for most of our clients. Did you or your spouse, if filing jointly, receive a letter from IRS? This should be yes for a lot of people this year, because folks should be getting those letters for stimulus checks and for child tax credit. So just know that this is meant to help us figure out if folks received letters. And then the last questions here are demographic questions. The IRS likes to collect to understand who we're doing taxes for. So like IRS famously doesn't collect much demographic data on the folks that do taxes. Like they don't collect race data or like ethnicity data for the broader tax field, but for VITA they do. So we actually have a pretty good picture of who is using VITA services and what areas we can target more specifically and that kind of thing. So yeah, and then there's also some questions about disability and English speaking ability and military service. There's a notes section here, and I'll point this out because if the intake notices anything and they want to point something out to you all, they'll probably leave a note here in this comment section. So just kind of make a note and look out for that. And now we're on to the tax documents. So we won't spend a lot of time on these because we'll talk about them as we're entering them into the software. But here is the elementary school W-2 for Gilbert and his job. Here is the 1099-R, which is retirement income for Tara, and how much she received. This is the Social Security income document for Tara, the SSA 1099. This tells how much Social Security she received, and all these documents look exactly like this. Like if they're not like this, they're very, very, very similar to this. So know that when you see real life versions of these, they'll look almost exactly like this. The next is the cancellation of debt. So this is the credit card debt that was forgiven for Gilbert of $750. Next is the gambling winnings for Tara from Chevy Casino. Sorry. One winner circle, which is cute. Next is the 1099-T for Chandler, their son, who was in college. So this is basically saying how much he paid, how much they paid in tuition, and then how much scholarships he received. Both numbers will be important, and I'll say why in just a little bit. This is a statement of account for the college and saying all the things that they paid. You know, some of these expenses, one of these expenses is not deductible, and I'll talk about why when we get to that. And the very last thing, we made it, is the check with their account, their routing and account number that we'll use to add in the direct deposit for them if they were a real client. So now we're on to the scenario questions. All right, so we just spent probably 10 minutes looking at this scenario, 15 minutes looking at everything that's here. Any questions about anything that's in here so far, y'all? All right, so hearing none, let's start to prepare this return. So I'm going to go back to the practice lab and go back to the Social Security number. And for this, it's 416, but I've actually done this scenario twice now because I've taught another class and I did it on my own to get the answers. So I'm going to say 419 just so that I don't, like, the software will let me go on. If the social is the same in the practice lab and in the software in real life, it won't let you continue the return because it'll say, hey, there's already a return with this information. We think you're doing a return twice, so don't do that. So I'm entering a unique number there. So I'll do 419, 1234, and I'm entering dummy numbers here for the end because there's just X's. Anytime there's 4 X's here, you can fill in whatever numbers you want at the end. I must not have entered these socials correctly. So the software will also help you out a little bit. The socials have to match for you to go on to the next screen. They didn't match in that case, so it told me. So now I'm going to start the return. Okay, I've done this already. Let's do. So this is what I was talking about. Let's do 429. Great.
Dan, when you're doing a real return, what social security do you put in?
Oh, so which spouse, or like which of the two? So typically, you'll ask folks like, so if people brought in a return from last year and they uploaded it, you can typically look at the last year's return and ask who was first on it, or like look and see who was first on it. If not, you can just ask them, hey, who do you all want listed first? And then whoever they say is who you put. Some folks will say we'll do like a gendered answer of like, oh, well, you know, does the man always go on there first? And I like to let people know that like, no, it really can be anybody. But what's most important is that you're consistent throughout years. So it may make things a little bit easier. So if you know what you did last year, let's just try to do that again and keep it going. If you don't know, let's just choose. Or if it's your first time filing taxes, let's just choose.
Got it. Thanks.
Yeah, really, really good question. So for them, you all remember from the interview notes, they want to file jointly. Choose to file and marry filing jointly on the 2021 return. So great, nothing for us to do. If you're ever unsure of someone's filing status, you can use this filing status wizard, but it will be pretty obvious for most people. It'll be just like this. They tell you, yeah, we filed together. Or it's one person that has got a dependent and then they're head of household, or it's one person without a dependent and they're single. It'll typically be quite easy to figure this out. So we'll keep going. All right, so another pro tip about preparing taxes in the software is IRS likes for us to do taxes in all caps. So if you have a caps lock on your computer, which should be most computers, but if you've got a Chromebook, there's a shortcut you can do control and the button that's in the same place as the caps lock, and it'll turn on for you. But we'll just enter this information here. We'll do Gilbert, Washington, and we'll go back to the intake to get Gilbert's birthday. So we'll start looking now here at this intake and review sheet. So Gilbert's birthday is May 5th, 1964. So 5, 6, 1964. And his occupation is teacher. All right, so these next questions are, if anything, you'll basically look to see if any of these are true. Can the taxpayer be claimed as a dependent on someone else's return? No, they cannot. Was the taxpayer over age 18 and a full-time student at an eligible institution? No, they were not. Their dependent is, but they are not. The taxpayer is, are they blind, deceased? Do they wish to contribute to the presidential election campaign fund? That is true. Gilbert wanted to contribute that, which we saw on the second page, or the third page of that document. Do they live in a combat zone? No. Were they non-resident aliens for any part of the year? No. Does the taxpayer wish to use their 2019 earned income to figure out their 2021 earned income credit or child tax credit? So this doesn't apply to them, but I'll flag this all for you. This applies to the last scenario that we're going to do taxes for somebody on, when y'all will do this on your own. In this tax year in particular, there's a unique situation where clients, if they're getting the earned income credit or the child tax credit, they can choose to use their 2019 income, not the 2020 income, only 2019 or the 2021 income. And basically, whichever income gives them the best benefits is the one that they can use on their return. They can use either. They can use the one that doesn't give them the best benefits. But the nice thing about that is if someone had a massive income drop, because in the pandemic, they haven't been able to find work in the same way, they have this like unique thing they can use to have a similar tax return as they would have in the last year that was quote unquote normal. All right, if they're affected by a natural disaster, if the taxpayer received any kind of virtual currency earnings, so crypto or of any kind, the taxpayer prefers to receive communications in English or another language. This is actually a really neat one that I feel like we skip often, but if you check this box, it'll ask you what the language is, and then IRS will send them any other letters or anything in the language that they prefer. So it's like a really nice thing that you can like let folks know is happening, and then they're like, I'm getting this letter in a language I don't understand. Everything after they file taxes for this year should come in their preferred language. All that to say, like, assuming it's in this list, not everything is. So I'll uncheck this box because they prefer English. And the taxpayer prefers to receive written communications from the IRS in an accessible format. This is actually new. They added this year. This is great. I love when things become easier for folks of all abilities. So that's awesome. Cool. So next is the spouse's information. So let's enter the information for Tara.
I have a quick question.
Go for it.
If we are a tax prepared volunteer, would the client be seeing us do this, or would we like just be doing it and then meeting with them? Like, they're not seeing our screen, or are they going to see our screens?
That's a great question. So typically I think I leave it up to the preparer's preference. I think most preparers don't share their screens in these virtual times because, like, it just they feel more comfortable if they don't. I sometimes do because I'm like quite comfortable using the tax software and I don't mind it, but there can be complications from doing that. So if folks can see everything you're doing on the return, we haven't gotten far enough yet, but in the corner over here, you'll see the refund amount like going up and going down and changing. And some folks like get really excited and then will be really disappointed. Like, wait, wasn't that just $8,000? Now it's only $3,000. What happened? So that like the caveat there is if you're going to show people, just know that and like prep them that things will change. But you don't have to show them is the short answer. You can just prepare it. They'll just see your face the whole time. You'll be asking them questions and typing away and they'll be fine.
Okay.
Yeah. So for Tara, let's grab her social security number, 14700 147001234. All right, her birthday, I don't remember. It's something like May. No, it is March 11th, 1956. And this will be what it's like for you all. If you have two screens, this can be a little easier, but I do not. So here we go. All right, and Tara's occupation is retired. And then basically the same questions you saw before are also here. None of them apply to Tara, but know that the same questions are duplicated. So you can basically ask it for the taxpayer, and then also you ask it for the spouse. All right, so next we're going to grab their address. Oop, nope, that's too many things copied. All right, so next we'll grab their address, put this in here. They don't have an apartment number. And then we'll do their zip code. We'll do Miami. I'll use the Catalyst Miami zip code. And then for their phone number, we'll do 305-555-1234. All right, so let's continue. So great, we've entered all their personal information. Now it's asking, do they have a dependent? Yes, they do. So what's the name of the dependent? It's a great question. I've forgotten. So it's Chandler Washington. So I copy Chandler. Bet it's actually in here already, but that's okay. So Chandler Washington. When you enter the client's last name, when you enter their first name, it's going to assume their last name is the same as the taxpayer's last name. But that's not always true in the world we live in. So like, just know that this will carry forward. But if it was someone else, if the name was different for the dependent, you would just go in here and change it, you know, yada, yada, yada. All right, and the dependent's date of birth is August 6th, 2002. And the social is 60800, and then what other numbers we want it to be. Okay, I'm gonna try not to, this little thing just pop down. Okay. No, I've forgotten it. Sorry, y'all. 608. Okay. 0, 1, 2, 3, 4. Okay, so this person is a US citizen. It's their son. And if someone doesn't have a social security number, I'll point this out that you can check this box, and then it'll basically like prompt you to enter their ITIN. So you can put an ITIN in here just fine, but if they don't have an ITIN or a social, you check this and it basically will it'll like generate forms for them to get an ITIN and mail this return off the IRS and get it to use in the future. All right, so the last thing is all these questions apply again. Oh, I have to move y'all because I think you're blocking this a little bit. Let's try to do this. Okay. All right, cool. So Chandler's entered. If anyone has passed away, there's a space for their death certificate and the day that they died, but this is not applicable to us, so we'll keep going. And then if someone has an ID theft protection PIN number, you enter that here. But that's all for basic information. We're about to go on to the federal section. And you'll also notice that everything here also appears in this navigation bar to the side. So you can click around if you want to make things faster to navigate between sections. We'll click continue. So now we're at the income section of the federal section. And again, you can click to the other parts of the income section here. We'll eventually go down and do the rest of these too. So now let's grab the W-2 for these folks. Oh, also, thank you, Alyssa, for getting my back. ITIN is individual taxpayer identification number, and it's basically a number for folks that don't have socials. So if you need to file taxes but you don't have a social, maybe because someone is in the citizenship process or just doesn't have a social yet for whatever reason, this is like a number that they can get and use to file taxes. And then at the point that you do become a citizen, it becomes a really nice way to say, I've been doing my duty, I've been paying my taxes, yada, yada, yada. All right, so let's go down to the W-2 and we'll enter this. So it looks like the number here is 35700. And the thing you're doing with this W-2 is you're entering it, you're trying to make this look as much as you can like the document that has been provided from the client. That's the way the software is set up. So this is for Gilbert, 357001234. And the nice thing about this software is it remembers things. So if a client has ever come in from a place that's had this EIN number, it'll remember where they worked and fill it in for you. It'll also do the same thing for if the client has done their taxes before at a Vita site. You'll put in their social and all the basic information will fill in from last year. And it's just your job to check to make sure that it's correct. The main thing that can change is like addresses. People move often. So like their address from last year may not be the same. And the same thing is true of businesses. Businesses can also move or their names can change. So just kind of verify that all this information is correct. And in this example, it is Coolidge Elementary, 2565 Deaton Street. Great. And then it says Chicago, which is fine. We'll leave it. So now we've got to grab the wages here. And it looks like 35,502 is the wage amount. The federal income tax held is $2,800. Okay, sorry, I scrolled up a little bit too much and now it's asking me to wait. Okay, so we're entering here. This is $2,800. And you'll see once you put in the federal wages, these other boxes fill in automatically. It's your job to make sure that they're correct. And because sometimes the numbers can be off if folks have some kind of tax, if they contributed to something with a tax benefit, like a retirement account, which I'm pretty sure they did in this example. So if you see something in this box 12, it means that these numbers here won't match up with the amount that's in wages very, very often. So over here, it's off by 1,000 because they contributed to retirement. This code D means that it's retirement. Code double D or 2Ds is health insurance, or I'm pretty sure it's health insurance. Great. So I'm going to update these amounts. Both of these are 36520 or 502. So 36. All right. So the other things we got to do is mark this box as X for retirement plan and put in this code D and the $1,000. All right. So down here, we'll mark this box for retirement plan for box 13, and then we'll select code D and put in 1,000. So once we finish here, there is the state section. And for anyone, for basically everyone on the call, except for Julieta, you're in Florida, so there are no state taxes. So this is often just blank. Julieta, for you, this section will be filled in and you'll choose New York, and you'll enter both their state wages will fill in, you'll enter their local wages as well. And when for locality name, you'll put in NYC. And for anyone else who's doing taxes, because people move all the time, someone can move from New York to Florida or anywhere else. So you would just put in the amounts, and the state wages are always the same, 502. Unless they're not always the same. It can be different based on how much they earned in that state. But you'll enter the taxes paid, say it was 1,000, and then you would just save it. But I'm going to delete all this because it's not actually applicable to our scenario.
But we can't actually file a state return for them, right?
Yeah, we can. So we can file a state return for anyone in all 50 states and in U.S. territories. Like we can also do Puerto Rico returns, even though there's like another certification for Puerto Rico. But short answer is like, yeah, we can do it.
Cool.
Yeah, anyone entering state information. This number carried forward, but it's not, the state EIN number is not always the same as the federal EIN number. In New York, it almost always is. But in other states, in many other states, it's not. So like in Georgia, it's not where I'm originally from. So just know that these, you should basically verify all this information is correct. Okay, cool. Any questions about entering the W-2? All right, we'll go on. It's taking a while to save. This could be my computer struggling, but okay. All right, it's there. So maybe there's just a lot of people all season in the practice lab. It is like a few Saturdays before tax season starts. So so we'll continue on. The information over here is going to update. It's kind of struggling now, but at some point this will update with the AGI and their federal return. So now, based on what we put in so far, if we put in nothing else, this is what their federal return would be. If they're doing state taxes, also it will show the state down here, but we skipped that section, so nothing is here. As well as this is their adjusted gross income based on everything we've entered. Again, these numbers will go up and down based on the taxes that we've done. And I mentioned this to you all earlier, but if you're ever sharing your screen with a client, you don't want them to see this because they can get attached to it. You can collapse this menu and it just hides over there on the side, and they are none the wiser to all the changes that are happening until you want to reveal it. Great. So we entered the W-2. Next, let's enter this 1099-R. So we're going to click continue. And now we're back in the income section. We're scrolling down, and it looks like this is where we find 1099-R. But also, if you're ever like not sure where to go, if you're like, they've got this form, but I don't know where to find it in the navigation, you can use this form finder and just type in 1099 and then -R, and it'll come up with the form that you need as an alternative way to search. So if someone has a form that you've never seen before, you're not sure where to find it, that's a nice easy thing you can do. Click over here, 1099-R. All right, so add a 1099-R. And there are other options below for like Social Security income and other things that we'll look at in just a second. So this is for Tara. And it looks like the payer's ID number is 41200. Okay, so 41200 1234. And once I put that in, it fills in the rest of the information, Oak Enterprises, as well as the personal information for the client is also filled in based on the intake. So now we'll come over here and enter the gross distribution, which is the amount that they received in retirement benefits this year. And it looks like 18,485. No, it didn't let me highlight it. Okay. And then, oh man, all right, this is this scenario. So there's no taxable amount entered here. And when clients come in, sometimes this will be true for them as well. There won't be a taxable amount entered. It'll say taxable amount not determined, and then we've got to figure out what the taxable amount is. So let's enter everything else in from this scenario, and then we'll come back and fill in the taxable amount. I'll show y'all how to do it in the 4012. All this will happen over like 5 minutes, but just kind of bracing y'all. This is like kind of like a really advanced scenario. Like this doesn't happen too often. So let's fill in everything else. We'll come back. All right, so taxable amount is not determined. Once you check that box, it's like, oh, do you want to calculate the taxable amount? We definitely do, but before we do that, we're going to fill in everything else. And we will check this box again. So first thing is federal tax withheld. Pasted that number there. And then there should have been a distribution code. I'm pretty sure it's 1, but I also could be wrong. It could be 7. Okay, it's distribution code 7. And basically what code 7 means is that you're of regular retirement age and there's no penalty for you taking this early. And let's see if this IRA SEP box is checked. It's not. It will be in another example. And then the last thing is this employee contribution, which I think is either going to go here now or we'll put it in just a second for something else. Okay, no, it's actually not here yet. So we're going to need that number. We filled in everything else here. Let's go on to calculate this amount.
It is in 9, number 9.
Oh, thank you, Alyssa.
9B.
Oh, okay. 9A, percentage of your total distribution. Great, thank you. Oh, okay, so this is it. Sorry, I did the wrong one. Not percentage. Total employee contributions. Great. Cool. All right, y'all. So now we're going to go calculate this taxable amount that's missing. All right, so in order to calculate this, we've got to do something called the simplified method. There is a question about this because they want us to know how to do it. So we're going to do this now, and I'll show you how it works. So there's basically some instructions here. It says if you use a simplified method if these things are true, and they are true for our clients. So we're going to click continue. All right, so next we need the plan cost at the annuity start date. And so some of this information is going to be in the interview section. I'm going to show you all in the 4012 how to do this method. Okay, so you go to tab D37 in the 4012. This page tells you exactly what to put in where. So I know most of these, so we won't go through this page, but just kind of pay attention that this this page kind of breaks down for you where you should be entering things. Okay, so next let's go grab the information we need from the interview. Okay, so this is it. Okay. Tara retired in 2018 and began receiving a pension on October 1st of that year. She explains that this is a joint and survivor annuity. That'll be important. And she's already recovered $1,013 of the cost of the plan. So we'll need that in just a second. So now we're going back over here to the simplified method. And it says, what's the cost of the plan at the annuity start date? And so this is probably the one thing that throws people off the most. Folks are like, how do you know what that's supposed to be? So if you look at this cheat sheet, it says enter the plan cost. It's shown in box 9B of the 1099-R, which you'll remember was that $13,500 that we entered previously. All right, Peter's going a little slow, but it's waking up. All right, so $13,500 is what's in box 9B. So we'll enter that in the first part here. 13,500. And then the starting date of the annuity, I believe it's in October. I forget the exact date. I'm gonna have to go back up to the interview and look at it one more time.
October 1st, 2018.
Thank you, Alyssa. October 1st, 2018. So there's no death benefit exclusion. But when you go look at this instruction sheet, it'll say if a joint survivor annuity, add the ages of both recipients in the software. So basically, we're just going to add the ages of both of the clients. And I believe it's 122, if I'm remembering correctly. That's what I did in the last example.
Does it have to be the ages of them currently or at the start date, like back in 2018?
So it's the ages of them, age of recipients at the start date. That's a great catch, Alyssa. It's the age of recipients at the start date. So as of October 1, 2018, how old were they? So it shouldn't be 122. Maybe this is why I didn't get the correct answer. It should be 122 minus 2 years ago. Yeah, October. Yeah, so y'all help me with this math. I'm going to plot a calculator and make sure that we get this correct.
Gotcha, yeah. So
I opened my phone to do this.
they both had early birthdays, so they'll be the age of whatever. 62.
2018. 1964. $50. Okay, I got an answer. Someone else. So I got 115, but if someone else got something else, tell me right. I tried to account for the early birthdays, but I could have done it wrong. If someone else got something different, let me know. I feel like that seems like too drastically different from this, but cool.
I got 116.
Okay. So
I might have, because it's really small on your screen. Let me take a look at it.
I'll leave it as 115. Please double check your work. You also fully could be right, and I could have done the math wrong as well. So we'll update it if we need to in just a second. All right, so the number of months that they received this benefit in 2020 actually should have been 12. They received this for the whole year in 2021, since it started in October of 2018. And then the amounts previously recovered. So this is, it says this in the interview, 1013 is amount previously recovered. So we'll enter that here. And that's it, y'all. We've done the simplified method. I'm hoping this 1 year of difference hopefully doesn't impact us too much. All right. So based on this, it says the taxable amount is 17,472.
I have a question. What is the public safety officer thing like? It was part of the last question.
Public safety officer?
Yeah, like in like when you're putting in like the last screen where you're putting in information, there was like a last. one that's
Oh, this is interesting actually. So I don't know what this is. Full disclosure. But let's look and see if there's anything about it here. There's not a note about it, so I'm not sure what this is. Yeah, I've never seen it before. It's a good question. So what I guess it is. This is my guess. This is fully a guess. Is um, for folks that are police officers, firemen, folks that work in the medical field, like ambulance folks, folks that are doing public safety stuff. It's probably just police officers. Maybe it's more. There may be an exclusion for their pensions and the way that they're treated. And I imagine the exclusion goes in this space here.
thanks, Darren.
Yeah.
What part of the 412 are you in that you're looking at?
Yes, 4012 page D37.
Okay, thanks.
Yeah, no problem. Also, y'all, again, this is a this doesn't happen very often. And when it does, if a client comes to you in real life, most of this won't be on the 1099-R that they have. You just ask them like, hey, so when did you start receiving this retirement benefit? They'll tell you, you'll enter the date. They may not know the exact date, but you kind of ask them like to ballpark it or to call their plan provider and then find out from them. Yeah, so you'll get most of these things from the client interview, just as we did from the interview notes. All right, so we're gonna click continue.
Oh, wait, Darren, I kind of want to pause you there because I noticed that the taxable amount we received isn't one of the answer choices.
Oh, okay.
I think it is the 116, not 115.
Oh, okay. So let's change it and see if that takes us where we need to go.
And folks, this is also like part of the process, like kind of just like figuring out like, what
They didn't change it, Alyssa.
Interesting.
So we'll get to this in a second. I also didn't figure this out when I did it the other time. I got to a close answer, but not the answer that they had in the book. So we'll come back to this, y'all. It may change based on some other things we put in, but it also may not.
Gotcha.
But know that this is how you do the process. This is one where I think so. Occasionally this happens where the people making the test get it wrong. And then like we just pay the piper as the people taking the test. And I think this is that one for this year, but I also could be wrong.
I have a question, but I don't want to like delineate too much from the conversation we're having right now.
No, go for it.
Usually when we like prepare taxes and we don't know the answer to questions, because it's really good training, but like if we don't know the answer to questions, do we just like hold off on it? Like what's the strategy behind that?
So what I would do is if like, especially the clients in front of you, do as much of the return as you can. And then when you get towards the end, just kind of make a note of the thing you've got a question about. At that moment, you'll be in a breakout room with the client. You'll let them know like, hey, I'm going to ask a question of my supervisor. I'll be right back. And then you'll step out, speak to the site coordinator about your question. Hey, I'm not sure where to put this form, or I wasn't sure what this is. And then they'll either come back in with you and finish it, or they'll tell you what to do so you can go back and do it yourself.
Thanks, Darren.
Yeah, really, really good question.
Oh, and because I have to hop off now, but I just wanted to mention that in the breakout room that you'll be in with the client, you'll also be able to raise your hand. So the site coordinator will be able to see like, oh, this tax preparer needs assistance, so, like the site coordinator can jump into that room and answer the question directly with the client. And that's also, possible too, just in case you don't want to hop off yourself back and forth.
Really good point, Alyssa. Also, thank you so much for joining, Alyssa. Glad to have you today. Yeah, I appreciate you making time on a Saturday. All right, cool. So y'all, this next thing that comes up is qualified retirement. Basically, this is like, are you taking this retirement plan distribution because of a qualified disaster? And actually, I think I may have misspoke earlier. It looks like coronavirus is a qualified disaster. So if you need to reach into your retirement plans because of an impact from coronavirus, you can select this. But they're withdrawing because she's of normal retirement age. So for us, the answer to this is no. But for clients, it may be yes in real life. All right, cool. So keeping it going, gonna continue. And let's see what we have next to enter. All right, so All right, so now we're gonna pick up the pace a little bit. That last one took a little, it was like a big deviation. So we're gonna enter the Social Security benefits as the next thing. So this is a 1099 SSA or SSA 1099 for Social Security benefits. So we're gonna continue. And this is really simple. We're basically getting 3 numbers from this. So it's gonna say, who is this for? It's for Tara. Here's her social. Here's how much benefit she was paid. But this number actually isn't the one we care about. We care about this number in box 5. And in real life, this will be like a pink box, like with a pink kind of shade over it, or pink like hue. So I'll grab this 21101, and then the voluntary income tax withheld is 2020. So let's grab these 21101. Oh, actually, so important distinction here. Gilbert is the taxpayer. Tara is the spouse. So we need to enter this for Tara. All right, the tax withheld is 2020. And then the last thing that we need to get is the Medicare premiums that they've paid. So that's listed here. It's not highlighting, but it's listed here, 1802. So we'll just add that in here. And then we'll click continue. Any questions about entering Social Security income? All right, great. That was much faster. So now let's enter this cancellation of debt. So we're gonna go down to, so again, if you don't know where to find this, you can scroll through this list and see if you see it. The type of income they have. I know that it's in this less common income forms where they have gambling winnings and cancellation of debt, but you also could type it in the search bar here if you need to. We'll click on this. There'll be a long list of options, and we're just going to look for the one that says 1099-C. We'll click begin, and we'll enter this 1099-C for cancellation of debt. There are some types of canceled debts that are excluded. So if they haven't excluded, like if you can exclude them from income, you'll fill in this box here. An example of that would be canceled debt for a home is typically excluded, and canceled debt for student loans is typically excluded. But for credit cards, it's not. So we'll just enter this form here. This credit card debt, I believe, is for Gilbert. It is Gilbert Washington, Adolphi Bank. The amount is $750 that was discharged, and it's for a credit card. Great. Adolphi Bank, $750 was discharged. I don't remember the identification number, so let's go back and grab that. 31700. Okay. 31700 1234. All right. So now the canceled debt is entered. And when you enter the canceled debt, it basically is counted as income. So that you notice their AGI went up a little bit because that's the way it's treated. So we don't have any exclusions or anything else to enter, so we'll click continue. The next thing here is the W2G. So this is for Chevy Casino. The number is 36,800. So we're already in this less common forms of income. You see gambling winnings W2G is right here. This is for Tara. And I believe it's 38, no, 36. 36,800. There we go. 1, 2, 3, 4. It should fill this in. Chevy Casino. Great. So now it's going to ask how much did they make in gambling winnings. The number is 3,000 from a slot machine won on July 4th, 2021. I won some money and got some fireworks. All right. I think it was 3,000, right? Yes, 3,000. Wager slot machines. Date 1 is July 4th, 2021. There was no federal tax withheld. There were some gambling losses, though, I believe. So it's not listed here, but it is listed in the interview notes. Oh, so the cashier is AR. So let's go ahead and fill that in before we go back up, scroll to the interview. All right, so cashier is AR. So again, y'all, we're just making this look as close as we can to the document that we have in front of us. We filled in everything that's here except for they're asking for gambling losses. So let's go back up to the interview and get that piece. All right, so Katera won $2,000 gambling at the casino. She had additional lottery winnings of 150, so we've got to add that in. And her documented casino losses were $1,500. So we'll enter this. Gambling losses. And remember, gambling losses are an itemized deduction. So if they're not itemizing, then this essentially won't be a real factor for them. Click continue.
You
All right,
forgot to add the 150, right?
Yeah, so that's right. The last thing we've got to do is add in the 150. And the thing about the 150 that's unique is the gambling. So it's not on a W-2G. They just won 150 from the lottery and they didn't receive any documentation for it. So it actually goes in this other income not reported elsewhere. And this will be for Tara? Yes, Tara.
But you did put the losses in there, even though it wasn't on the form.
Yeah, so I added the losses here because there's like a space for it in the software. But you also can add it in another place later if you want. But like for me, it just made sense to like add it in right then since we had all the information and it was asking for it. So cool. So this is so neat. So we're gonna do. You could maybe say prizes and awards for this, but I'm actually gonna say other income, and then I'm gonna say lottery winnings. And the amount is 150. And this is not earned income, so we won't check this box. And that's it. So does that make sense for you all? How you enter lottery winnings? Great. So we'll continue through back to the less common income screen. And we have, I believe we've now entered all of the income. So their AGI shouldn't change anymore. The last thing is we've got to enter a few more things for tax credits and deductions. So one is the 1098T. Let me see if there's any interview notes about that. Their son is in college, $450 for books. Okay, it is here, but this will all be down here as well. So tuition statement. So he went to Gordon College. So let's go in here. We've entered all this income. This is so many types of income. We're going to click continue on the next screen. And then now, basically, there's a few different sections here. Standard deduction and itemized deductions are not going to apply for what we're looking for now. We're basically going to go to the credits menu because it has education credits listed. And if you ever were not sure where this goes, you would just type in 1098, 1098T, and it would come up and let you put in this tuition statement. But we'll go here so I show you all how to navigate the menus. So now it says education credits, form 1098T. You click begin. So Chandler's come up. Chandler. Okay, great. So Chandler's come up. So now the question they're asking us is which of these tax credits is the best one for Chandler? So going back to the interview, we know Chandler is, or looking at this form, we know he's at least a full-time student. He's a sophomore in college, I'm pretty sure, since he's 19. So he's pursuing a bachelor's degree. And he does not have a felony drug conviction because it said that in the interview notes. So because of all of those things, you know, if you were unsure ever, you can come over here, click on education benefits. Go down here to education credits. And this chart is, I think, the nicest thing for education credits. So basically, it'll help you figure out which credit is the best for the client that you're working with. So if you're looking at these two, you'll notice that the American Opportunity Credit is basically like a larger credit. So start there, typically try to see if folks can qualify for that. And this is also per student. This is per return. So basically, like if you get multiple students in your household, this would be vastly better, but it's better for most people anyway. And then the conditions of this are you can't have too much income, but anyone doing VITA should qualify. 40% of the credit is refundable. So a good part of it can be refundable, the rest is non-refundable. So it can increase people's tax refunds. This is applicable only if the student has not completed the first 4 years of post-secondary education before 2021. So basically, if they're if they have a bachelor's degree and it took them 4 years to finish it, they don't qualify for this credit. This is only the first 4 years of college, and the way this is the calendar years. So your first semester of school was actually like only a half of a year, but it counts as a full year for most people if you start in the fall semester. So it's like fall semester is 1 year, the second spring semester and fall semester next year are 1 year, and so on. So what that means is, like, in your last year, if you're a senior and you take 4 years, or your parents are claiming you, they won't be able to claim this credit for that last that fourth for like the last semester of senior year. You would then switch over to the lifetime learning credit for that part. So just pointing that out. Does that make sense to everybody? Cool. All right, I'm going to keep going. So again, it's only available for 4 years. And this is 4 years over your lifetime. So if you claim this credit for 4 years and then you go back to finish your bachelor's degree because you didn't finish before, you can't get it again. It's like 4 years within your lifetime. You have to be pursuing a bachelor's degree, or have to be pursuing a degree or other recognized education credential. Versus lifetime learning credit, you don't have to be working towards a degree. It can be for certification. It can be for any number of things that that help you pursue a better career. You have to be at least half time. You can't have a felony drug conviction in 2021. Versus lifetime learning credit, you can have a felony drug conviction. And then the last thing is qualified expenses. So the only expenses that qualify for the American Opportunity Credit are tuition, any requirement enrollment fees, and course materials that specifically the student needs for their course of study, and they were bought at the educational institution as a condition of enrollment or attendance. So what this really means is, if you buy it from your on-campus bookstore, then it's tax deductible. If you buy it from another bookstore, it's not. That includes Amazon and anything else that you're buying books from. Okay, and the payments have to be for the academic school year or for the beginning months for these first 3 months of 2022 for the last year of school year. And they must have a tax identification number by the due date of their return. So this is basically that's basically all the conditions. Yeah, that's basically all the conditions. So looking at that, it seems like Chandler qualifies for the American Opportunity Credit and his qualified expenses. So the next question that we're trying to figure out basically is, what is Chandler's qualified expenses? And how do you know what counts and what doesn't? So going from the 1098T for a second, anytime you see scholarships here in this box, you're supposed to subtract the scholarships from the amount of tuition that they paid. That's just kind of the way that it works. So we'll do that math real quick. 5218 minus 2013. So that gives us 3205. But there may be something else that we can include. So we're going to go down here to this account statement, and it says basically the tuition is here, great. The scholarship is deducted, great. There's our parking pass here, but you notice when I was reading what qualifies, parking was not included. So we can't count that for this credit. And then the next thing is campus bookstore charge to the student for the account for course-related books. That is includable, so we can add 450 to this. And then that tells us the qualified expenses are 3655. Did that make sense to everybody? See a chat. Let's see. Expensive books. They're always expensive. But yeah, it is interesting though. I feel like clients are kind of like, what do you mean? So I can't go to the used bookstore that's right off the campus and count this towards this credit? And unfortunately you can't. It's just the way that it's written. So sometimes it's better to for some people, 450 in books, it may actually be better for them to just save the money and shop at the on-campus bookstore and not take the hit here, or to get the book from like a classmate or someone who took the class before. Basically, I encourage folks to save the money, not spend money to get a tax credit, because it doesn't always work out. All right, cool. So we've entered that. Oh man, are we done? Whew. Longest scenario of my life. Okay, so last thing, y'all, let's put in the information for the educational institution. This is Gordon College. I'm pretty sure it is Gordon College, and then the address is 10 College Avenue. 33137. They're right beside Miami-Dade College. You just had no idea. They're hidden. Did they receive a 1098-T? Yes, they did. Did they receive a Form 1098-T in 2020 with box 2 filled and box 7 checked? This is in the interview notes, so let's go look and see. I'm pretty sure the answer is no, but let's go double check. Okay, box 2 was not filled in and box 7 was not checked on Form 1098-T for the previous year. Great. So no, they're going to ask for the school's educational institution number. I don't remember what it was. Let's look at that. Okay, 38,800. 1, 2, 3, 4. And then there's these questions to make sure the person actually qualifies for the credit. So has the Hope Scholarship credit or the American Opportunity credit already been claimed for the prior 4 years of taxes? No. Was the student enrolled at least half time? Yes. Did the student complete the first 4 years of post-secondary education before 2021? No. And was the student convicted of a felony drug conviction or distribution of a controlled substance? No. And it is a little, I won't say awkward, but it can be a little strange to ask this of clients. So you just, the way I typically do it is, hey, so heads up, the software is prompting me to ask this question. Was your student convicted of a felony drug conviction, or have they received a conviction? Or you can just ask, like, does your student have any felonies? And typically people be like, no, they don't. And then you just kind of like, cool, great. So enter that, you'll click continue. All right. So I think we definitely entered all the tax forms here. And now we're down to the questions. I want to scroll up to the interview to make sure there's nothing else that we missed. But I believe we've got everything now. Oh, okay. No, there's not actually. So they've got this EIP payment. So I want to show y'all where to put that. And then I think that's it. Okay, yes, that's the last thing. So last thing is, so we'll click continue. And then at the very bottom of this deductions page, there's this page for, this is for the CARES Act. I think, will it be in here? No, it's not. This is for donations to charity. So let's continue. It should be under COVID relief. So you can do this COVID. So as opposed to clicking through all these and clicking continue, if we click continue now to go to other taxes, and then it'll keep going through here, but I'm just gonna click down here to COVID relief. And the recovery rebate credit is here, as well as the advanced child tax credit. So the child tax credit isn't relevant for them because their child is too old, but they did receive stimulus payments. So the question here is, did you, your spouse, or anyone you claimed receive a stimulus payment during the third rounds of payments distributed in 2021? In particular, for most people, it was early 2021, like March and April, but folks could have received it late. So it's kind of anytime in 2021. And it's telling us here, this doesn't include the non-taxable income that you have, but if you didn't receive it, basically you'll get this money now as a part of your taxes. So the answer to this is yes, they did receive a stimulus payment. It was $4,200 or $1,400 times 3, 14 times 3, I think that's right. 28, 42, yes, okay. So we'll click continue here. Now we've entered almost everything. So the last things we'll do to finish the return are, there's this health insurance section. And if someone purchased health insurance through the healthcare marketplace or through Obamacare, then we would say yes to this. We'll see that in the next scenario, but for this one, the answer is no. And now it says we did it. We did it, Joe. We made it. Our federal return is complete. So we'll continue to the summary. And it has here generated a little 1040. So this is, has all the information we just put in. Like all the work we just did is summarized here in a really nice, really readable way. And we'll come here to find the answers to many of the questions as opposed to going back to looking at parts of the software. You also can click on things that are listed here and it will take you to the section of the software that it relates to. So you click that, it takes you to the W-2, great, and so on. So we'll go back to
Excuse me, Darren, a quick question.
Yeah.
Was the COVID relief in the interview?
was
Where did
the-
you get that information from?
Oh, it was in the interview. Yeah, that's right.
Oh, okay.
Yeah, right here, like almost the last line of the interview.
Thank you.
Yeah, and folks should have a letter, like in real life, people should have a letter saying how much this was. So hopefully they will. Great. So y'all, we're getting close to break time. I told you we'd be close to 1, and we almost are. So now let's go look at the questions we have here. So, yeah, let's go look at the questions they're asking, and then I'll show you how to navigate this to find the answers. All right. So what is the taxable portion of Tara's pension from Oak Enterprises using the simplified method? So this is one that I don't think got the exact answer to. Yeah, so let's go back to the software and see how we get to this. So we're looking in the software, and on this first page of the 1040, this is why it's important to know and be able to read the 1040. We've got the person's name, address, social information up here. We've got the dependent information here. We've got, because Tara's a little bit older, they're getting an additional standard deduction. So this box here is checked. And then all their income is here. The standard deduction is here. Any adjustments to income is here on line 10 and 11. And then their taxable income is down here. So really quick summary. I did a much more in-depth summary in the last training where we did by hand one of these 1040s. So just know that you can go back and rewatch that when you've got a bit more time if you didn't attend that one. So for the taxable amount of pensions and annuities, we actually got 17,472, which is not the amount listed in one of the answer choices. But when I took it, I got this amount, and that was not correct. So I know Alyssa and I both got this, and we determined that that's not correct. The answer to this is actually, I'll just give it to you all because I think this is a software error that hasn't been fixed yet. But the answer to number 15 is C, and yeah, so just a heads up there. All right, going on to number 16. None of Tara's Social Security income is taxable, true or false? So I'm going to pull up the 1040, and I want you all to drop in the chat whether you think that's a true or false. So looking on this page, the information you need is here. What do you all think is the answer, true or false? All right, Keith thinks it's true. I'll take a second. There's a lot of information here. If you're wondering where to look, all right, Kay says it's true. That's great. You're looking at line, I'll give folks a hint. Look at line 6. In particular, line 6B. All right, great. Patricia says it's true. So y'all can see this here. Basically, the way that this kind of section works is all these types of incomes can be tax-free. And if they're tax-free, then the amount goes in here and is still reported on the tax return. So a lot of folks that have Social Security income will say, I thought Social Security wasn't taxable. And it's not if you only have Social Security income, but if you have other types of income, it can be. So because they have so many other types of income, a part of their Social Security is taxable. So the total Social Security is here, and the taxable amount is 17,937. Cool. So all this to say, a part of it is taxable, and y'all now have the answer to this one. Let's go on to number 17. What
Wait,
is the,
16 is false.
yeah, that's true. None of Tara's Social Security income is taxable. That is false. We know a part of her Social Security income is taxable. Thank you for clarifying that. All right, so number 17, what is the total amount of other income reported on the Washington's Form 1040 Schedule 1? So you're probably thinking, what's 1040 Schedule 1? We haven't looked at that. So this is a summary of many types of income, but if you go down to line 9, it says other income on Schedule 1. So all that really means is that there's some income that doesn't fit in the 1040 because there's not enough space. So if you click down here in this navigation bar, this is showing you page 1 of the 1040. If you click number 2, it shows you page 2 of the 1040, which we'll look at in just a bit. And you click number 3, it takes you to Schedule 1, page 1, which is additional types of income. And then number 4 takes you to Schedule 1, page 2. So this question is asking, what is the total amount of other income reported on the Washington Form 1040 Schedule 1? So we'll look at this, and some of these don't line up perfectly, so it can be a little hard to read. But okay, it can be a little hard to read. But if you want to see a version that's a little easier to read, the way to do that is to print a copy of the return. So we're actually going to do that so y'all can see how that works. I'm going to stop sharing for a second and share this PDF that gets generated. Share. Okay, reshare. Okay, so this is a PDF of the tax return. It's 29 pages. We'll have a simpler version of this. We'll like create a print set to make this simpler so there are less pages in real life. But as you go through this tax return, an invoice generates, and that's because this is a software that Paid Preparers also use, but for VITA sites, it will always have zeros here because VITA is a free service. So just know that that's there. There also is this summary page that kind of explains what's happening on the return and what you included. So know that this gets generated. And there's a few other pages that have a summaries of income for the clients and all the types of income that we reported. There also are duplicate W-2s that are generated based on what we put in the software, as well as the W-2G for gambling earnings. There's a 1099-R. And then there's this e-file signature page, which has a really tiny summary of here's your AGI, here's your total taxes you should have paid, here's how much you have taken out of your paycheck, and here's what your refund is, as well as a PIN number, and this is the practice lab, which is great. The client will sign this part virtually before we send it electronically, but we'll come back to that in a second. All right, great. Now we're at the 1040, and because Terra is over 65, it generates a 1040 SR, which just means it's for seniors. It's the exact same 1040. It's just the font is bigger. And because the font is bigger, it's not in 2 pages, it's in 3 pages. So 1040 page 1, 1040 page 2, 1040 page 3, and then the next page. Oh, this is showing that because they're a little older, they get an increased standard deduction. And then now we're on to Schedule 1. So like I said, this is the same document we were just looking at, but a little bit easier to read. So the gambling income is here, the canceled debt is here, and there's the 150 for the lottery winnings, and all those add up to be 3,900. So you all, going back to the question. Share. Okay, so going back to the question, you all know that the answer is A. Cool. Does that make sense to everybody? All right, cool. Gonna keep going then. Gilbert is eligible to deduct $500 as an adjustment to income on Form 1040 Schedule 1 for the qualified educator expenses. Oh, okay. So basically, this question is asking, can Gilbert deduct $500 as an adjustment on Schedule 1 for educator expenses? We talked about this. Did we talk about this before? I think I'm getting confused with another course. But I think we've talked about this prior, so I want y'all to guess whether this is true or false, and then we'll talk about what the answers are. Yeah, please go ahead and put in your answer. It's okay if you don't know. There's a 50-50 chance, right? You might get it right. You might get it wrong. It's all good. This is a safe space. Ooh, dissension in the ranks. Heat. Great. I like this. So y'all, I'm gonna pull up the, okay, I don't know, guessing true. All right, that's perfect. So let's do educator. So educator expenses, page E4 in the 4012. So reviewing this really quickly, I think I was thinking we talked about this before, y'all, but now I'm realizing this was actually last Thursday that I talked about that class with it, so forgive me. So the way the educator expenses work is what is the maximum benefit? It's $250 if the taxpayer and spouse are both eligible educators. They can deduct up to $500, but if neither can deduct more than their own expenses of up to $250. So basically what this means is it's $250 per person that's a teacher. If both folks that are married are teachers, then it can be up to $500. So the other things that have to be true for this is An eligible educator must be teaching K through 12. They must be a teacher, instructor, counselor, principal, or aide that worked at least 900 hours during the school year. And then qualified expenses include books, supplies, equipment, and a few other things listed here. So it says in the interview, we go back up. I think Gilbert worked something like 1,200 hours. Okay, so Gilbert worked a total of 1,280 hours. He spent $500 on unreimbursed classroom expenses. So even though he spent $500, only $200 of this is deductible. And actually, y'all, you know what we didn't do? We didn't put this in the software. That's why you all are guessing blindly, is because we didn't actually do this. So I'm going to go back and we're going to add it in. This does happen. Yeah, this is life. So we're going to go to deductions. We're going to go to adjustments, which is for educator expenses. So we'll click in here. And then the educator expenses, we're going to put in 250 because it says limited up to 250. So really easy. If we'd done this, y'all would have gotten this right. And then now that reduces Gilbert's AGI by 250. Cool. So with that, we'll go back to the summary. Summary print. Okay. Here we go. All right, great. So for this one, y'all know that Gilbert is able to deduct $500. The answer to that is B, false. Number 19, the Washington Standard deduction on their 2021 return is what? So I talked about this earlier where I mentioned they had an increased standard deduction because Tara's a little bit older. So we're looking on the 1040. Standard deduction is line 12. And oh, this is great. They actually fixed this since last time. So all the standard deductions for most folks are listed here on the right. So most married folks get $25,100, but they actually get $26,450. So they get a little bit of an increased amount, and that's because it's a really nice chart in the 4012. It also printed out. I showed it to y'all earlier, very, very briefly. But standard deduction in this file. I think it's here. Standard deduction. Okay, page F1. So F1 has the most common standard deductions for most people. Same one listed on the 1040. But then on the next page, there's this really nifty sheet. And I know this will be quite small to you all, but what this says is if you're born before January 2nd, 1957, or if you're blind, you should check these boxes for each, the taxpayer and the spouse, and see which is applicable. So Tara was born before 1957. We put 1 in this box. And that means as a married person filing jointly with 1 in the box above, their standard deduction becomes $26,450, and that's it. So we know the answer to this one is $26,450. Does that make sense to everyone? Cool. All right, I'm going to go on. The total qualified expenses for the American Opportunity Credit are what? So we actually went through this very in depth. So the American Opportunity Credit should show up on page 2 of the 1040. On the second page, there's a lot of text here. And I know y'all haven't looked at this very much, but line 29 is the American Opportunity Credit. And this is the credit that they're getting. So this is how much refundable credit they're getting back, but it doesn't actually answer our question. The qualified expenses is what we entered before. That's what we went through and looked at and did not include the parking passes. So this is the qualified expense amount. So I'll go ahead and jot that down. Let's go on to number 21. Which of the following credits are the Washingtons eligible to claim on their tax return? The child tax credit, the credit for other dependents, the child and dependent care credit, or none of the above. Julieta's guessing D. Any other? So y'all take a second and guess on this one. I'll explain the way this works and show you in the tax return where to find it as well. So take a second. and we'll explain it together. Or ask questions if you have to. I'm happy to talk through this as well. All right, this is great. Credits all over the place. Like Patricia got some prior tax experience. You can tell because this is she maybe is on the right track. Okay, so the way that this one works, y'all, is so remember the child tax credit is only for folks that are 17 and younger. So their child Chandler is 19. He's too old. Doesn't qualify. C, the credit for dependent care, child and dependent care credit is for folks that are 13 and younger, or folks that are any age and totally and permanently disabled. Yeah, their son is not, he's too old in one case and then not disabled. So we know that one doesn't qualify. So then the question here is, do they get this credit for other dependents? And what is this credit for other dependents? So basically, if you're over child age, and so if you're over 17, but you're still able to be claimed on someone else's taxes, you very, very, very likely qualify for this credit for other dependents. So this can be older adults. So this could be parents. This could be grandparents that maybe live with you and you take care of them. This can be a dependent who's too old as well. And there's a few other situations as well. But so let's see if when we look at the 1040, that's great. If we look at the 1040, it should reveal the answer for this in just a second. So 1040 summary print. Great. So let's go here. And we're going to go to 1040 page. Wait. All right. Yeah. So page 2. Credit. Is it page 1? Okay. It's not. It's page 2. Great. Line 19. Nope, that's not it. I looked for 500 and guessed wrong. Credit for other dependents. Here we go. Okay, line 19. So this is it. Non-refundable child tax credit or credit for other dependents. So remember, in this year, the child tax credit is refundable for most people. There's actually a slot a little bit further down on line 28 or for the refundable part of the child tax credit, but they don't have a child that applies. So this is irrelevant for this question. Or credit for other dependents from Schedule 8812. So they're getting this $500, and that's their credit for other dependents. So there you go. So which of the following credits are they eligible to claim? Credit for other dependents. And last question before we take a good, long-deserved mental break. What is the Washington's total federal income tax withholding? So there's two ways you can do this. We can look at the 1040, but I'm actually going to show you all how we could add this up just kind of like by hand very quickly. So we're going to look at all of their tax documents and see which documents have federal tax withheld. So the first one is the 1099-R. And looking here, there's $200 of federal tax withheld. So I'm going to add 200. All right, looking at the next document, their W-2, you'll see they have federal tax withheld of $2,000. So this is $2,000. And then looking at their 1099 NEC, there's no federal tax withheld from this one. Oh wait, am I in the right scenario? Sorry, y'all. I scrolled down too far. I'm in the next scenario. Let's go back and add this again. Okay, this is it. So this is Gilbert. Okay, sorry, y'all. Starting again. So the federal tax withheld is $2,800 from Coolidge Elementary, $2,800. Plus from the 1099-R, it's $1,849. Federal income tax withheld, box 4. And then from their Social Security benefits, they have 2020 withheld. 2020. There's no federal tax withheld from this canceled debt. You actually can't. You can't have taxes withheld from that. There's no federal tax withheld from these gambling earnings as well. Federal tax withheld is empty. And then the last thing here is, let's see, the tuition statement. And there's no federal tax withheld from the tuition statement as well. So the last thing is the check, which is not applicable. So if we add all of those together, we get 6,669. But also if we look at the 1040, if we go to line 25, which is federal income tax withheld from, it'll say 2,800 was withheld from Form W-2. 3,869 was withheld from 1099s. You add those both together. On line D, it says add line 25A to 25C. You get $6,669. All right. Does that make sense to everybody? All right, cool. So with that, I'm going to stop sharing my screen. And we've earned a well-deserved break. So I want to give you all two options. Do you want a 30-minute break that's faster and then we'll end the day a bit earlier? Or do you want a 45-minute to an hour long break? Let's say 45 minutes. Let's not do an hour. Or do you want a 45-minute long break? Yeah, please drop in the chat what your preference is. We'll do majority rules. All right, Keith 40, Maisha 30. Sure, this is neutral. All right, well, seems like folks want to get on with their day. So let's do a 30-minute break. We'll begin back here at 1:30. Let's say 1:40. We'll just like do 33 minutes. So at 1:40, we'll start again. I'll pause the recording. For folks on the recording, we'll see you in just a bit. Hi, everyone. Welcome back, and hope you enjoyed that quick break, although I'm sure it was like a second or two for you. We're going to dive in, and in this part of the training agenda, we're going to be working through the last two scenarios. So there'll be a scenario focused on, will you all get a chance to prepare the taxes and follow my lead? And then there'll be an additional scenario where you'll get to do one on your own and hopefully get more familiar with the software. This next one's going to be really complex. The last one will be a bit simpler. So with that, I'm going to show you all how to sign up for the practice lab. I'm going to share my screen. So working on sharing. All right. So if you're not there yet, I'm going to grab the link and put it in the chat. Nope, I need to copy the link address, not the text. Okay, great. So I'm going to put this in the chat for anyone watching the recording or anyone on the live. If you haven't gotten there already, going here will take you to the practice lab, or you can do what I did and go here to the linklearncertification.com and click on practice lab, or on the cheat sheet that we've been using. There's more information there. And as you're filling it in, so question, what's the site identification number? You can leave that blank. And the password to get into this site that I just put in is Train Pro Web in all caps. So it's Train Pro Web in all caps. And then for folks that haven't registered yet, I showed you all this once before, but you'll click here on Create Account. You'll add in information here, email address, username, whatever you'd like, password, program type is VITA, identification number you can leave blank, and then you'll do whatever security question you like. Once you do that, you'll click on register. No worries, Maisha. We'll be here. That's why I've got the recording. So hopefully it comes stable. All good. All right, cool. So maybe folks can drop an emoji or drop a like registered or good to go or something in the chat so I know that for the most part, folks are registered. Cool. Cool. All right, so I'm going to go back. For anyone who's not registered yet, please continue to register the registration process. It should be pretty quick. I'm going to sign in and turn off all caps. Nope, that's not it. Okay, so once you're in, all right, I'm seeing, it looks like almost everyone's there. Patricia, are you good? Were you able to register? Or you need a few
Yes,
minutes?
no, I have, but I need to run home and I'll be there in 5 minutes.
Okay, that's fair. At your own pace, take your time, it's all good. So y'all, we're gonna go to this practice area. And it's gonna bring out the practice lab and we're gonna start a new return. So y'all will click on start new return. And let's go down to the next scenario and see who we're working with this time. So this is Cynthia Simon. I'll read the scenario. Her social security number is here. We'll put it all in. It'll be good. We'll go through her documents like we did the last time. And then I'll show you all how to do this. And yeah, maybe I'll even ask folks to like guide me through doing it. But I'm hoping you all can follow along as I'm doing this. So I'll show you what I'm doing on my screen, then I'll leave a little bit of time for you all to catch up. And then the next one you'll be on your own. So Cynthia is an electrician. She's 29 and single. I remember Cynthia. She seems really great. Just like a cool person. Cynthia has investment income and has a consolidated broker statement. Cynthia began a cleaning business in 2020. She was paid on Form 1099 NEC in 2021. She received additional cash receipts of $400 not reported on Form 1099 NEC. So basically she had $400 in cash. Cynthia used the cash reporting method for accounting, and her business code is 561720. A little note here: all businesses doing taxes through VITA have to be using the cash method of accounting. If they're small businesses, we also can do taxes for for sole proprietorships and LLCs, but cannot do taxes for corporations. So Cynthia has the following receipts.
I have a question. Is it common for Catalyst to get clients that has like, I guess, like outside businesses or like their own companies?
It's pretty common. I think probably like maybe 10% of people have some kind of business. But the reason that number is so high is because of like the gig economy. So like Uber drivers, Lyft drivers, like folks doing food delivery, those folks get paid on 1099. And then when you get paid on 1099, it qualifies you to like, you're basically a business owner, whether you recognize it or not. So the benefit of that is you can deduct business expenses. So for Uber and Lyft, it's really common. Folks will deduct all the miles that they drove for work. They'll deduct any they can deduct some fees tied to the car. It just makes it so that you can like take deductions you couldn't take otherwise.
Okay.
Yeah, cool. Y'all keep interrupting me, asking questions. Like this will be really great. So Cynthia has receipts for the following expenses: $350 for cleaning supplies, $225 for business cards, $450 for a mop, broom, and vacuum cleaner, $150 for work gloves, $125 for lunches, $175 for work clothes suitable for everyday use. And there'll be a question later about like which of these expenses qualify and which don't. So we'll go through that. Cynthia also has a detailed mileage log reporting for 2021. Her mileage from her home to her first client's home and the mileage from her last client's home to her home was 750 miles. In addition, on the days Cynthia worked for multiple clients, she kept track of the mileage from the first client's home to the second client's home. In the case that mileage was deductible, and she logged 450 miles. This does not include the 750 miles mentioned before. And lastly, the total mileage on her car for year 2021 was 11,200 miles. Of that, 10,000 were personal miles. She placed her only vehicle, a pickup truck, in service on March 15th, 2020. Cynthia will take the standard mileage rate. Cynthia took an early distribution from her IRA in April to pay off her educational expenses. Cynthia is paying off her student loans from 2018. Cynthia is working towards an MBA, and she took a few college courses this year at an accredited college. Cynthia purchased insurance for herself through the healthcare marketplace and has a 1095A. So basically she's getting health insurance through the government marketplace. Cynthia has a refund and she would like it deposited in her checking account. Cynthia received the third economic impact payment, EIP3, in the amount of $1,400 in 2021. Cynthia's social is 41900XXXX. Okay, so now let's look at Cynthia's intake. So Cynthia Simon, 159 Archer Avenue. Birthday is February 24th, 1992. She's an electrician. She's not disabled, and she's not a full-time student or legally blind. Make a note there that she is a student, she's just not full-time. She's never married, so her filing status is very likely single. Since she has no dependents. So for income, she has wages, she has interest and dividends, she has self-employment income, She has, oh man, I forget how many types of income she has. She has cash income. She has income from stocks and bonds. She has retirement income that she used for educational purposes, I'm pretty sure. And she also attended college for her MBA. She has expenses related to her self-employment. She has student loan interest that she paid. And lastly, she has health coverage from the marketplace and she received a stimulus check. The last few things here are she wants to give $3 to the presidential election campaign fund. She wants a refund via direct deposit. She does not want a U.S. savings bond or to split her refund between multiple accounts. She does not live in an area that was affected by a natural disaster. She didn't receive any letters from IRS. And she answered some of these demographic questions. She speaks English very well and can read English very well. She does not have a disability and she's not a veteran. She preferred not to answer about her race, and same for ethnicity. And now we're on to her documents. She has a 1099-R for the retirement income that she mentioned. And the distribution code says it was an early distribution, but there may be an exemption because she used it for educational purposes. She works as an electrician for an electric company. Sounds like something straight off the Monopoly board. I actually think it is. That's great. Anyway, she worked for an electric company and her income is here, had some taxes withheld as well. She also has a 1099 NEC, and this is for some of her cleaning and her cleaning side hustle, in addition to some cash income she had for that. She has an investment statement. So in this investment statement, it includes a few different types of income. The first is dividend income, which we'll put in just a bit. The next is interest income. And the last is investments from the sales of stocks, bonds, and other investment types. For that one, there's a breakdown on the next page of what those look like. So I know this is a lot, y'all, because it just is. But so she had some short-term stock transactions that basically means she had stock that she bought and sold within a year. And if a stock is bought and sold within a year, it's treated differently. It's taxed more. And if it's held for longer than a year, it's taxed less. So typically it's like a 20% rate for things that are short-term investments that are sold, and then a 15% rate for things that are long-term investments that are sold. And a lot of folks may or may not and it can be as low as zero if your income is low enough. But this is a part of the reason why they say like rich people have advantages with the tax system, because if you're paid in mostly stock to a company, when you sell it, the top income tax rate for a lay person who's just working and making money is like almost 40%. It's like 38 or 37 and some change. But the top tax bracket for someone who's claiming an investment is 20%. So it's just like much, much better for you tax-wise. You pay less taxes if you're getting taxed on an investment than the sale of that investment. So I'll go through both of these and how to enter them. And then the last two things are she paid some student loan interest. She was enrolled in college for her MBA. So there's a tuition statement here. It says she's not at least a half-time student, and she was a graduate student. And then the last thing is her healthcare marketplace enrollment form with how much she received in marketplace subsidy and how much her plan cost. And we'll look at all of that in just a second. The last thing is her check for her direct deposit. So there's a few questions we'll get to at the end of this scenario. Any questions about anything happening with Cynthia? All right, hearing none. So y'all, if you're there, if you're not there, please get there as soon as you can. Pull up the practice lab, and you should get to, when you click on start return, you should pull up the screen where you can enter the social security number. Is anyone not there? I'll say like put in the chat if you're not there, if you need a second, but otherwise we're gonna dive in. All right.
Darren, I'm on the practice lab home. So then how do I get to that screen? I already signed in. Do I click go to practice area?
That's right. Click go to practice area.
Okay.
Cool. And then from there you should see, my computer's being a little weird. From there you should see this screen.
Yes, and then?
You'll click on start return.
Oh, the first one, okay.
Yeah, that's right. So perfect, we're all here. So Cynthia's social is 149001234. So you all put that in, put in 419. Did I say those numbers incorrectly? 419. Sorry, 419001234. 419001234. And I'm actually going to change these numbers because I have done the scenario already, so it won't let me process if I do 419. So you all put it in correctly, but I'll change it. All right, so you'll do this basic profile. It defaults to this. You click Start Return, and you all should be in it. I got to mess something up. Start Return. Great. So now you're at Cynthia's filing status. And we talked about this before. Because she's never married and has no dependents, she is filing what filing status, y'all?
Single.
Single, that's right. So she's filing single. So we'll keep going. And now if you have, if you can, turn on caps lock and go ahead and put in Cynthia's information. So you'll do Cynthia. I think her last name is Simon. Her birth date is February 24th, 1992. And our occupation is, I think, 1992. All right, her occupation is electrician. And now the only one of these that apply to Cynthia is she wants to contribute $3 to the presidential election campaign fund. So you'll check that box for her. She is a student, but is not a full-time student, so we don't check this. Nothing else applies to her based on what we've learned. So we'll go down and put in her address. You'll notice for Cynthia, there's no spouse information here because there's no spouse entered with her. So Cynthia's address is 159 Archer Avenue. And her zip code is whatever zip code you'd like. And I didn't mention this before, but I think you all have probably seen it a few times now. The city and state fill in based on the zip code. So clients will typically say, my address is, or they'll have it, you know, if you ask them, they'll verbally tell you the zip code last. But just when they tell you that, you can just put that in here if it's not already in the intake. So then the phone number, we'll do this dummy phone number of 305-555-1234. And we'll click continue. Is anyone not ready to click continue? All right, we'll continue then. Okay, so it's going to ask next, does Cynthia have any dependents? She does not, so we're going to say no. All right, great. And now we're to the meat of it. So we're going to add in, so we're going to go back to Cynthia's documents, and the first thing should be her W-2. No, the first thing is actually her 1099-R. And this will be a simpler one because her taxable amount is determined. So this will be easy. So the first thing we're going to start with is not in fact her W-2, but we'll do her 1099-R. So we'll click on begin on the fourth item, 1099-R. And then we'll click on add or edit a 1099-R. And the thing I'll say for as we're going through this, y'all, is like be verbal. You know, like if you've got a question, please come off mute and ask. Otherwise, I'll assume you're keeping up. And I'll try to make pauses to ask everyone with me, but at the same time, like please ask the question or ask where I got something from or that kind of thing. Okay, so the most important thing we start with here is the taxpayer's, the payer of the money's taxpayer identification number. So for this, Essex Bank is the custodian, but the number is 48-200-1234 or whatever number you want it to be. So 48-200-1234. And once you put that in and you click off of it, it'll fill in that this is Essex Bank, as well as it'll put their address in. Now they're in Marietta, Georgia. That's great. That's the town just south of where I grew up, or just south of where I grew up. So then we scroll down and verify that the client's address is the same. Sometimes the address may not match what's on the W-2. In this case, it does, but because someone could have lived somewhere else and then moved. So just a heads up to double check that. Next, we'll add in the gross distribution, which is going to be $2,000. Taxable amount is also $2,000. So this carries forward. So you just verify that it's correct. And in this case, it is. The next thing is federal tax withheld is $200, and the distribution code is 1. And this time it is an IRA, SEP, or simple. And I'll explain what those mean in just a second. But for now, we're going to enter distribution code 1 in box number 7. And we'll check this box for IRA, SEP, simple. So what that means is an IRA is an individual retirement account. It's basically like a retirement account you can invest in, not through an employer towards your retirement. SEP and simple are both small business retirement investment accounts. So if you're a business owner, you can opt into having those. And they allow you to contribute a little bit more to your retirement than an IRA or a 401k does. So great, we've put all these in here. Let's go back and make sure we didn't leave anything off. Nope, everything is filled in. So with that, we can save this. So scroll down to the very bottom of this, click continue, and we'll move on.
Wait, do we have to put, oh, okay, so like the amount is already pre-populated in 1 and 2 then. Okay, gotcha.
That's right. Yeah, exactly. And then the next question is, so there, say form 1099-R distribution penalty. And this is really just asking, what's most important here is because code 1 was entered, it thinks it's a penalty. It thinks she should get a penalty. So they're asking us, is there any reason she shouldn't be penalized for taking this money early because code 1 means early distribution? So we're going to say, yes, this is for a retirement plan. And there are certain circumstances in which the IRS will allow you to make an early withdrawal and not pay the appropriate penalty. Not sure if your withdrawal qualifies to be exempt from the penalty. We'll check this box, even though we are sure, because this will trigger something else to come on later. Oh, so the other thing to keep in mind is the next paragraph says, if you've indicated prior distribution meets one of these exceptions, you need to fill out this form 5229 to tell us what the exception is. So
Aaron?
this one, go ahead, yeah.
So, okay, revisiting the notes, it says that she took the early distribution out in April to pay off her educational expenses. But I guess, can you explain how it is that you know, if you go back to the tax layer, how you know that you're supposed to click retirement? Oh, what kind of plan did you receive the distribution from? Okay.
Yeah, that's right. So it's what plan do you receive the distribution from? And so the thing is, you don't really, so it almost always is a retirement plan. In most cases, this is like, there's some other rules for plans that are treated differently, but I've never had a client come in with a qualified tuition plan. It just doesn't really happen at VITA, or if it does, it's very, very rare. And then Roth distribution after conversion, what that means is like someone had a traditional retirement account, they converted to be a pre-tax retirement account. And that also is very rare at VITA sites. So short answer is like, it almost always is retirement plan. You can assume that it is. And yeah, it'll be true 99% of the time. Cool. All right, y'all, we'll continue. Keep stopping me if you've got other questions. All right, so next.
Well, that you just had to click that there was a valid reason for the exception because you knew that.
Oh, wait, which thing?
The box you
the
clicked
box?
in circumstances in which.
Yeah, so I knew this. You're right. Let's find this in the 4012 because I don't actually know where it is, but it'll be important in case you all want to know because you don't just know it like I do. So the first thing is 1099-R distribution codes, and then I think we're going to look at. Okay, so the first thing is distribution code. So it's kind of like I knew that code 1 was an early distribution with no known exception. Because I've been doing taxes for a while, but if you all are like, I'm not sure where this is, you can look at page D40 in the 4012 and it'll have a list of the distribution codes. So this is saying we think this distribution has no known exception. Sometimes, so basically like the person who took this, like the company that she took the distribution from could have known about that it was going to be for education and said, we think this is for education. So this isn't taxable and nothing else is needed. But for whatever reason, they didn't do that. And then all these other reasons are here. Code 7 is the most common. Normal distribution, it just means folks are over retirement age, which is 59 and a half, and they can get this. These other two, I've never seen, they're out of scope, and the rest of them apply, but are less common. Disability happens sometimes. Death, people actually really come to VITA sites after they have passed away. I mean, which makes sense because they're no longer with us, but their spouse or partner or someone could bring their information. And I did do the taxes for one client for like 4 years. She had a, I forget what it's called when you can represent someone else in like legal things and in tax things, but she had a thing. Wait, say it again.
Power of attorney?
Yes, she had a power of attorney for her dad. So she came into the Vitasite to do the taxes for her dad every year. And then one day her dad passed away my last year at Catalyst as a full-time employee. So I did the taxes for her, and that was the only time I've ever used this step code. So cool. There's other distribution codes here on the next page. Okay, there's information here about retirement or coronavirus related distributions. A bunch of information here. And then these are the instructions. So like I'm walking you all through how to do, oh, this is for rural retirement benefits. This is not, yeah, this is super rare. So you don't have to deal with that. It looks like there isn't any information in here, Julieta, at least that I know how to find. So I'll just say, I know there's an exemption for education. I know there's an exemption for some types of accounts for buying your house, like for first-time home buyers, there's an exception. What are the other really common ones? Those are probably the two. There's a third one that I'm forgetting, but there's like 3 really common reasons for exceptions. Retirement. No, yeah, it's like, yeah, that's what it is. Normal retirement age, which makes sense. Education. Oh, I know, it's buying a house and then it's medical expenses. So if someone they took out money to cover like some surprise medical expense or even planned a medical expense, that also is, there's an exemption for that. So those are the big 3 reasons for retirement contribution exemptions. All right, cool. So I'll go back down here to the 1099-R. We'll go on to continue. The next screen is going to ask qualified disaster retirement plan distribution repayments. Was this a distribution because of the coronavirus, basically? No, it's not due to a qualified disaster. So we're going to say no here. And then now that we're out of this, we're going to add in that form that the document told us to look at. So go to the forms finder, type in form 5329. And then once that comes up in gray, you'll click it. And then from there, what amount of the early distribution not subject to the 10% tax? The entire thing, so $10,000, so $2,000. And if someone meets an exemption, almost always the entire thing is exempt. So y'all can just kind of know that. This also is pretty rare. Most people take distributions early and they don't have an exemption reason, so it's taxable. So this one is for educational purpose, higher education purposes. It only applies to IRAs, but we know that she has an IRA because she checked that box earlier. And that's it for this one. There are a bunch more fields here, but they don't apply to our situation, so we'll click continue.
I clicked to add form, but my screen doesn't look like I couldn't get to form 5329 or whatever the number is.
You couldn't do the form search?
Like once I clicked it and then it took me to form 1099-R again.
Yeah, same here.
Interesting. What web browser are you all using?
Chrome.
Huh, interesting. I'm not using Chrome. It's supposed to work best in Chrome. Maybe there's a glitch in Chrome. So I'm gonna click continue.
I'm using Chrome and it worked, but
Hey, will that work for you?
yeah.
Okay. I'm not sure why you all couldn't do it. So now that I see it here, I'll show you all how to navigate to it the other way because I didn't know where it was before. So we'll click continue. So basically, for those who can't get it to pull up in the forms finder, click here on other taxes. It'll take you to this screen. And then there is a box here, tax on early distributions, 5329. You'll click edit, and then you all can put in the same thing. You click edit again, and you can put in the same thing that we just did. Cool. I'll click continue. All right, so now we're done with the retirement income. We're going to click back here on the income section and go back to that income select screen. And next, we're going to do this W-2. And you all know how to do this. We're basically just making this W-2 here look just like the W-2 that we're entering into the software. So the employer identification number is 57 200 1234. 57 200 1234. Once you click off, it'll tell you that they work for an electric company. We'll enter the wages and tips, which is 35,000 with $202,000 of federal tax withheld. So 35 and 2,000. And then we just want to make sure that these Social Security wages are correct, as well as the Social Security tax withheld and Medicare tax withheld, since it generates these automatically. And it looks like they are. The last thing we're going to check is this retirement plan box, which is this X down here on box 13. I believe we've gotten everything else, so we'll leave this blank. And as a friendly reminder, again, if you live in a state that has state taxes, you enter this information here. But for those that live in Florida, so most folks doing things on the call, you won't have to. Unless a client comes in who lives in another state, and then you'll know you add that and down here. So we'll click continue. All right, great. So the W-2 is entered. It's quick and easy. Next, we're going to add in the 1099 NEC. So this is going to be a little bit of a lift, y'all. Yeah, this is going to be a little bit of a lift because now we're going to basically do the small business taxes for somebody. But the important thing is you click continue. I did this quickly, sorry. You click continue out of the W-2 screen. You'll come back to the income section. Yeah.
Sorry, for the employer, the EIN number, what was that?
The employer EIN number is 57 200 and then 1234.
Thank you.
No problem. Yeah. 57 200 1234. And yeah, y'all find that on the W-2 as well if you got that.
Darren.
Yeah.
Hi, it's Kay. Listen, so I'm looking at your screen and I'm looking at my screen, and your federal saying -738 and mine was saying -538. Can you tell me what went wrong with that?
Okay. Oh, I know exactly why. 5. Kay, did you enter this the tax and early distribution with us? The exemption there?
Yes.
Did you enter retirement income? You put in $2,000 for the gross or for the taxable amount?
Yes.
Did I skip something? Let's see. Oh, okay. I skipped something. Yep. I left something off that you just caught. Thank you, Kay.
The federal tax withheld?
Yep. I didn't add in this $200 here. So if you all didn't do this, you probably didn't because I didn't do it. Go back to 1099-R, add in $200 for federal tax withheld. Yeah, click in there, navigate to this, click save, and then continue. And you click continue through this again. Continue. Now it's 538.
2,000 for federal income. Yeah?
It was 200 for federal.
Oh, 200.
Yeah, that's right.
Thank you.
Yeah. Thanks for catching that, Kay. All right, cool. So I'll point this out. This is exactly why we have a second pair of eyes look over every return, because it's just, it's human, right? It's easy to mix up two numbers or forget one thing. So that's why we have a second pair of eyes check over everything. So this will also happen in real life when you're doing taxes for folks. And even someone who with as much experience as me can go too quickly and miss something. So yeah. All right, cool, y'all. So we added in. So next we're going to add in this 1099 NEC. Let's go scroll down in the income section. You'll see 1099 NEC, click begin. And then you're going to enter the payer's information. So this is housekeepers helpers, huh, interesting. And then we'll grab the address from the form. It looks like it's 123 Tidy Way, which is adorable. Zip code is going to be your zip code. The payer's 10 is 63400 1234. So 63-400-1234. This is in fact for Cynthia Simon. There's no account number to put in, and the amount of employee compensation she received is $4,000 as reported here. There's no federal tax withheld, and this is everything that we'll enter for this form. So giving folks a second to catch up. We're going to click continue next. All right, so now once you click continue, this pops up and it asks you, hey, it looks like you added a Form 1099 NEC, which stands for non-employee compensation, by the way. Income reported on the 1099 NEC reported is it reported either as business income or farm income? Which one is it? So this is business income. So we're going to click Schedule C for business, and we'll click continue. And basically, it's going to add a Schedule C to the return because now they know we need to do one of those documents. And the Schedule C is just basically the small business tax form. So it's going to ask us a bunch of information about this person so we can fill this in. So her business does not have a business name, I don't believe. Let's go back up to the interview. Yeah, she began a cleaning service business, but the name is not provided. She was paid on 1099 NEC. She also received additional cash receipts of $400. So we'll put in this $400 in a second. And there's Cynthia uses a cash accounting method. Her business code is 561720. So if I copy that code so y'all don't have to, but her business address is her home address. It's not in this example, actually. Just I put in 1 Biz Street. Y'all can just put in whatever address you want here, but just put some address in here because we need it. And in real life, when you're doing tax for people, it will typically be their home address, but in this situation, it's not. And I'll tell you why when we get to one of the other deductions. So the other thing is for the business code, typically you may not know what the person's business code is. So this example tells us that clients will never know it unless they bring in the tax return from the prior year. But you can search for things in here. So if you search for food, you can see, okay, great. Do they run a small restaurant? Do they have some other food business? Do they, make alcoholic beverages or serve them? If you're looking at, other things, basically like this brings up all things that possibly could be food related. You could also do like, you could type in cleaning, but it isn't going to come up. To get to this one, you actually have to type in janitorial, and it brings up janitorial services, and that's the same code that we're going to use. So all this to say, like, it's helpful. It's helpful when you're looking and not knowing what code folks qualify for. There also is a code that's 6 nines, which is just the none of these categories meet our needs, and that lets you, and then you can type in what the business is after that. And that's probably the most common code to use because it's not always that specific. So with that, I'm going to paste in here the code. The code is 561720. When you click off of it, it'll fill in that this is janitorial services. It's okay that this isn't in all caps. That's fine. All right, moving on. All right, so we've entered the income for this business, but there's additional income to add. We know that the $400 of cash income is not included, so we're going to click here on Edit for Income. And then the first thing is total income on Form 1099 NEC, which is great. That filled it automatically. Perfect. The next thing is gross receipts of sales, including income reported on Form 1099-K. So basically, gross receipts is just like you include any cash income in that. So her cash income will go here. It was $400. There's no other cash income, so we'll click continue. Okay. So next, let's go back. We're eventually going to go through these business expenses. I think actually we're going to do that next. So we'll keep here. We've entered all the income. Next, we're going to enter general expenses, and then after that, car and truck expenses. So for general expenses, you click on general expenses, and it opens up this Schedule C expenses document. And for Cynthia, all of her expenses are supplies. And how do I know they're supplies? Well, I'll tell you in just a second. But the important thing here is you can see all the different categories that clients are eligible for, and the most common categories are listed here. So advertising is pretty common. Folks will pay money for business cards or for a website. Commissions and fees is common because folks will pay fees to their county or state. Health insurance is pretty common, not ultra common, but like common enough. Long-term care insurance sometimes happens. Mortgage interest if they're renting, if they're like using their home for business or using a property for business. Office expenses is very common. So people will buy paper, pencils, pens, rubber bands, whatever else it may be. Rental and lease of equipment is popular. So folks may rent a car and go on a business trip, or rent a piece of machinery to like make a thing. Like maybe they are making tacos and they bought like an official like taco press. Or maybe they're doing taxes and they bought a software that they're using to prepare all their returns, that kind of thing. Rental and lease of property, which is like, did they rent a space to do work out of? Repairs and maintenance, which is like, did they have something fixed? Maybe their computer broke, they use that for work. So the cost to fix that was deductible. Supplies, which is where this is going to go, which is anything that you bought to do the work that was a supply. Travel is one that's also, it hasn't been very common the last 2 years, but maybe more common this year than the last few. So if folks bought a plane ticket to go travel and do work, maybe they're speaking, maybe they're collaborating on something. If they bought tickets, that can be included here. And then for meal expenses, so meals are included as a deduction, but you can't, basically like the assumption here is that 50% of meals are deductible. And the reason that the reason that it works like this is because IRS assumes that if you're going out to eat and you're taking someone else out to eat, 50% of the meal, you were always going to eat. Like here, personal expenses are not tax deductible. So your personal expense is not deductible, but the expenses of the person you're treating are deductible. So you get a 50% deduction, and it doesn't go into like, you take out 20 people and you pay for all of them and you're just, not deducting yourself. It's just kind of a blanket 50% rule. It assumes you're mostly eating with one other person. There also is a space for utilities and wages. So if you paid any other employees, then they would go here. So now that we know the most common forms of things, let's go back and add some things from the scenario.
Darren, Kate says she's stuck.
Oh, okay, where you at?
So for some strange reason, I got stuck on after we were coming out of the Schedule C income.
Mm-hmm. Can you see? Do you see what I see now, or are you on some other screen?
No, I don't see what you see now.
What do you see?
Hold on, man. Let me see.
Okay.
Okay, now I'm seeing what you see.
Okay, perfect. So you'll click in here and you should be able to go down here to general expenses.
Okay.
We'll click begin. And I maybe rushed through that, so that also could be my bad. Thanks, Maisha.
Thank you, Maisha.
I think we have to report that out also. All right, cool, y'all. So we'll come down here to supplies, and now we're going to go back to the scenario. And here are all the things that we're going to be deciding whether they qualify or not. So what I'll tell you all, I'll actually just walk you through this because I don't expect you all to know this. The most common, so basically, as I mentioned before, personal expenses are not deductible. So like lunches are not deductible. If it's just you can't deduct the lunch. You can only deduct it if someone else is there with you. So clients will say that all the time, like I paid for food, and it's like, well, if it was just you, then it doesn't count. It's only if it was you and someone else and you're eating together for the purpose of business. Like if you talked about work for the majority of the time and it was a business focused thing, then lunches are deductible. And the next thing that is also not very deductible is work clothes suitable for everyday use. So the way work clothes work is if you have work clothes, how do I even say this? So if you can wear the clothes off of the work site, the best example I can think of this is like in the military, the Marines don't wear their uniforms off site. So you'll never see a Marine in uniform like on a plane or traveling home from a site or from base or from work at all. They change out and they can't wear their uniforms off of work. Versus like Army, Navy, Coast Guard, you can. So in this situation, only the Marine could deduct the cost of their uniform for tax purposes. The Army, Navy, and uniforms you could see that you could like wear it offsite, you can't deduct. So folks will say like, I'm a personal trainer. I bought a bunch of clothes so that I could train my clients. You can't deduct the clothes you bought for personal training because you probably could wear them out of the gym. If you're like an exterminator and you buy a hazmat suit or equivalent, something to protect you from the stuff that you're exterminating people with, or exterminating people's houses with to protect you, you typically don't see people wearing that on the regular. They typically are only wearing that when they're working. That would be deductible. So I know that it's like not ideal, and people are typically like, why is this the way it is? It just is. Tax law is just the law. Maybe one day it'll change, but for now, this is just the way it is. Some congressman in a suit decided this, and it hasn't changed since then. So maybe it was a congresswoman, but I feel like most of these laws were decided before women were in Congress. So I see your question on your face, Julieta. That's great. Also, welcome back, Maisha. So with that, cleaning supplies are deductible. Business cards are deductible. Mop and broom and vacuum cleaner are deductible. Work gloves are deductible. The other two are not. So going back here to the software, now the question is, how much are the supplies? You add them all together, you get $11.75. So you enter that in here, you click continue.
Darren, so you're counting business cards plus all the other things as would you say supplies?
That's right. So that's true. Business cards could be office expense. That's true. They totally could be an office expense. Y'all can put it there if you want.
Okay, but we're saying because it said $125 for lunches, and it didn't specify that there were work lunches, it doesn't count.
That's right. Exactly.
What was the number added up again? What was it?
1175?
Yeah, I think that's what you said.
Yes, that's right. Yeah, good questions, y'all. Good questions all around. All right, we're doing great. So next is the mileage. So, okay, so the mileage, the way mileage works, there's actually like a really nice chart in the 412 about this. Is it coming up? It'd be really nice if I don't have to scroll to the top and get it, but we may. Okay. So mileage? Oh, great. There's only 13 instances. This is going to be. They're almost all on this page. There's a visual that I wanted to pull up, but it looks like, oh, this is it.
134. Oh, no.
Okay. So on page D22, there's a visual for the way that mileage works if you're a small business owner. So basically, if you are leaving your home, it's never deductible if you're going to your regular main job site. It's never deductible if you're going to a second job. Deductible if you have a regular or main job at another location. So basically, like if you're leaving your home, it's almost never deductible. Not always not deductible, but like for most places, if you're leaving your home, you can't deduct it. But as soon as you get to a temporary work location, you can always deduct your mileage expenses. So yeah, as soon as you leave not your home, the deductions work in a different way. So there's one exception to this, and this is like a really popular real life exception. So for many people who have small businesses, their home is their main work location. And if that is true, then you can deduct, as soon as you leave your home for work purposes to drive somewhere else, you can deduct it. Especially in these like pandemic times where people are more home than ever. But so let's apply the logic here to the scenario that we're looking at now. So that's basically why there's these three different examples of what happened. Cynthia has a mileage log. She drove from her home to her first client's home, from her from her home to her first client's home, and from her last client's home to her home. That's 750 miles. Those miles are not deductible. Because it's to and from her home, it's not deductible. But the miles from the second site, so from the client's home, the first client's home to the second client's home, she logged 450 miles. Those miles are deductible.
Wait, but I thought you said that her home is considered like her main work.
So I said that is true of some clients. It's not true of her. because the scenario, we don't really know, so it doesn't really say. But I know essentially I know it's not true because they're giving this level of detail. Like they're telling me she did all the like her mileage. Like no one keeps track of their miles this good. But I know the test doesn't want me to put this number in. That's mostly how I know that this is the case. But in real life, someone's going to come to you and you'll say, how many miles did you drive for work purposes? And is your home your main like home base of business? And they'll say, yes, it is. And then you'll say, great. And they'll tell you the number of miles and it'll be fine. But I just know the test doesn't want us to do this. So that's why like when we put in her business address, I entered like one BizWay or something and not her home address because these miles aren't supposed to count. Cool. So there's some other information here. Total mileage for her car for that year was 11,200 miles. Of that, 10,000 were personal miles, which will be important. I'll show you where to put that. She placed her only vehicle, a pickup truck, in service and started the service on March 15th, 2020. She's going to take a standard mileage rate. So let's go over here. And now we're going to click on car and truck expenses and click begin. All right, great. So her vehicle is a pickup truck. She placed her vehicle in service on March 15th, 2020. And for business miles, I've done this already, so this will fill in automatically. But she has 450 business miles. She has 700 commuting miles. That's what those are called. The miles she drove from her house to the first work site. And then she has 10,000 other miles. Now it says check if you've got another vehicle available for personal use. She doesn't. It says her only vehicle is the pickup truck. Was this vehicle available for personal use during off-duty hours? Yes, it was. So you check this box. Does she have evidence to support her deduction? Yes, she does. And is that evidence written? Yes, it is. So you'll click this box, click these boxes, and click continue. The one caveat I'll say here is clients don't always have written evidence. So like, I typically encourage them to write it down if they haven't by the time they come into the tax site. But this box is sometimes unchecked. Like they have evidence, but it's not written. So yeah. They may have evidence like the work that they did, but they don't have like a mileage chart or that kind of thing that they've kept track of it. So click continue at the very bottom, and it enters the car and truck expenses. And basically what happens is you get something like 58 cents for each of those 450 miles, and the rest don't count. So click continue again. And we're back to the Schedule C. I think we should be done with the Schedule C as it is now. So we'll scroll back down. We did the 1099 NEC. So that's done. We've entered that completely. And now we're going to do these investments. So 2 of these are going to be pretty quick. One's going to take a little bit longer.
We didn't answer questions about your business. We don't need to.
Oh, let's see.
This is the top.
Oh, question about your business? What's it here? Oh, okay. So they have to be the cash method. So this should be true for everyone. If it's accrual, we can't actually prepare it as ASCO provider. Method used to value closing inventory. So most folks shouldn't have inventory that are coming to our sites. So everyone also should have materially participated. What this really means is that it was not like passive income. Like you didn't have like this wasn't an investment. You like were actively involved in this. You worked in this. So all these should be checked as they are. So we'll click continue. All this to say, like normally you don't have to click in there. But you are welcome to click around in these more and see.
Oh, that was like automatically filled in then.
Yeah, they like all automatically filled in. And then the last thing that I will point out though is there's this category for other expenses. And this is just super duper broad. If there's something that doesn't count in the general categories we looked at earlier, you can put in whatever you want in here, as long as you think it's a reasonable expense for the client to have to do business. So someone may say, I don't know, I'm a YouTube chef. I am binging with Babish and I'm doing my taxes at a Vita site. One, you probably make too much money, but that's okay. Or I'm Shola from all of her YouTube series. Basically, if you're like, yeah, I'm a food YouTuber, I spend $2,000 on cameras every year, and I want to say that I spend $2,000 on cameras. You'll just say cameras, you'll put in the amount, it'll save it, and then it'll get added as a business deduction. it's just a way for clients to be more specific and to include things that don't count in those like general broader categories. Like maybe you don't want to lump them in supplies. Maybe they want to be more specific. That's what this is for. Cool. Everything else is basically business use of home. We don't try to do it via sites. It's within scope, but it gets a little complex. Y'all probably have to deal with it, but it can happen. Qualified business income deduction also should happen automatically. So we'll click continue. I wonder if this does happen automatically. Maybe they changed it. No. Okay, now this is right. Back. Okay, so we'll click continue. We're going to be done with the 1099 NEC. I see a chat. Let's see what it says. How do I get to that page? Oh, this is from a minute ago. I don't know where I just was before. I hope I had. Did you get it?
The business questions, but you said that it populates it automatically. So
yeah, that's right. Yeah, they were just, yeah, anyway, now I'm like out of it, but y'all can click continue. You'll get to the screen. You'll click continue to go out and you're back at the income screen where you were before. Alternatively, you could just click on income here on the left bar and that'll take you there. So now we're going to do two other types of income. We're going to do dividend income and interest income, and then we'll do those investments. And I think we'll be done with everything in this scenario. So we're getting close, which is good because I know we're getting close to time. So, all right, let's go down here to, actually, we're going to scroll back up. So 1099 INT is where interest comes, and 1099 DIV is where dividends are typically reported. Not all interest is reported, so folks can receive interest without receiving a document. Like I think if it's less than $10, they don't have, the bank doesn't have to send a form. They may still sometimes, but they don't always. So we'll click here on interest and dividends. We'll click begin. And then first we're going to enter the dividend income since that's the first thing on the page. So we'll do ordinary dividends, qualified dividends, and the capital gains distribution. So you'll click continue after you choose dividends. From there, you can enter the payer's name. So this is the company that paid the dividends. So this is ABC Investments, and their address is here. I'm going to copy it. So ABC Investments, the payer's identification number. It looks like it's over here. It's 419001234. So 419001234.
I didn't want to interrupt, but is it normal for the website to take a minute to like load? Because I press continue, but it's still like circling.
So it takes a second sometimes, based on like use of the website. So typically like Saturdays can be the slower days. Weekdays are typically fine. Like, you know, the same thing we're doing, like thousands and thousands of people are doing the same training at the same time. So the website can be a little slow. If it ever takes like, I'll say more than 20 or 30 seconds, just click refresh and it should come back.
It's not giving me that option at the top. That's why I asked.
Okay. Like the refresh option, or what do you mean? Yeah, were you able to get through, or did it come up?
I'm gonna X. Okay. Yeah, no. Okay.
Cool. All right, so if you didn't see, I went into dividend income, and you basically click in interest and dividends. From there, you choose dividends, and then it takes you to the screen. You enter ABC Investments, enter the EIN number for that business, as well as their address. And then next, it's going to ask you about how much they received in ordinary dividends, qualified dividends, and capital gains.
That would be 1099-INT.
That's right, INT, comma, DIV. That's perfect. And then next you'll click interest and dividends, and then you'll choose dividends and click continue. Cool. So total ordinary dividends is 150. Qualified dividends 75. Capital gains is 300. So I'll enter those all here. Okay, that's right. So yeah, y'all enter them like so. And then once you've entered them, there's nothing else here listed on the 1099 DIV. All the rest of these are zeros. So we'll leave it blank. We're actually done with this form for now. So we'll scroll down to the very bottom. We'll click continue. You also can scroll to the top and do continue from there. So once you're on this screen again, you're going to click add interest and dividends. But this time we're going to add interest. So you'll click add interest and dividends. We'll add interest income. And we'll click continue. So now it's going to ask same thing. Who's the payer? It's ABC Investments. Their number, their EIN number is 41900. 419001234. Their address is 456 Pima Plaza. The zip code is your zip code. The next box one is interest income. And as you scroll down here, it looks like they have $250 of interest income. So we'll enter that. Okay, here we go. 250. Click. And that's it for the screen. That's all you do to put in interest. So click continue. All right, great. So now I've got our dividends here, I've got our interest here. And now we go to a different place to add in those two stocks.
Sorry, Darren.
Yeah.
What was the address for ABC Investments?
Yes, it's 456 Pima Plaza, Pima.
Thank you.
Yeah, no problem. Cool. Huh, okay, anyway. So great, y'all. So we got this here. We're gonna click continue. And we'll take a break. We're almost done. We're getting close. We're gonna answer. We're gonna, I think about 3, we should get a break. Let's say 3. It's gonna take another 5 or 7 minutes to enter this last thing. There's 2 more things we have to actually enter. So we'll see. We should be 3 or right after 3, maybe 3:05. Okay. So next, y'all, we're gonna come down, and the next thing we're gonna do is this capital gains and losses. And what that means is investment gains. So like investments are only taxable once you've sold the investment. So if you buy, let's say you buy 100 shares of Apple stock today, you just go into an app or you go to a bank, they sell you 100 shares of Apple stock. You don't pay any taxes on that until the Apple stock is sold. So if you say 20 years from now, you're like, actually, I'm going to sell that. I think it's gone up enough. I want to cash in that money. You sell it. And then as soon as you sell it, when you do your taxes for that next year, that's when it becomes taxable. So anyone coming in with capital gains and losses is going to be from something that they sold. All right, so you click on capital gains and losses from the income sheet that I just showed you guys. And we're going to do capital gains and loss items. So we'll click begin. And then here it's going to ask us for a description of the property. So for these, we're going to scroll down to the next page, and there's a breakdown. So I mentioned that on the last time we looked at this, there's a summary here of how much the capital gains and losses were. Cynthia had gains of this much, which is great. But here's an actual breakdown. So it's basically Cynthia had, she sold this Iowa Co common stock and got $2,500 of proceeds, or $2,650, and then she got $3,500. So we're going to add in both of those. First, we're going to do this short-term $2,650, and this is, so it also says here short-term transactions, which I mentioned are less than a year, for which the basis is reported to IRS. So basis is the amount that you bought it at. It's basically like this is your purchase price, the cost basis. Proceeds is the amount that you sold it for. Acquire date is the date that you bought it, and then the date sold is the date that you sold it. And then how many shares you sold are listed here as well. So this sounds complex, but actually it's pretty simple when you put it into the software. So going back over to the software, we're just going to choose Iowa Co common stock. So you'll type that in as the description of the property. And then for the date acquired, we'll go back over here. It looks like it was January 8th, 2021. Sorry, January 8th, 2021. And then the date sold is October 30th, 2021. So 10/30. 2021. And then the sales price. So we go back over here. And the proceeds are $26.50. So the proceeds are the same as the sales price, so $26.50. And then next we select the cost basis type. And I believe this says cost basis reported to the IRS, but I'm going to double check. Yes, cost basis is reported to the IRS. Awesome. And now the cost, they paid $2,000 for this. So basically, this means they paid $2,000, but when they sold it, it was worth $650 more. So they're going to pay taxes on that on the additional amount that they made, $650. And it says here gain or loss. So basically, the software is just going to do all the math for us to make this look exactly like it looks. The number of shares doesn't actually matter. All right, so there's no adjustments to make. So we'll just scroll down and we'll click continue, and that's all for this first investment. So we've entered the short-term investment. Now we'll do the same thing and enter the long-term. And actually, if you click continue, that's fine. But also, this save and enter another is a nice shortcut because you can just quickly go into entering another. So I'm going to do that. But if you click continue, I'll show you what it looks like. Yeah.
Okay. Did you not click? Is the transaction a short-term section 1061 partnership interest? I'm guessing no.
I didn't click it, but
I was trying to read the fine print on that form.
Oh, okay. We'll check here for short sale. So a short sale, is this the one you're talking about, Julieta?
No.
Which one?
Further down. The next one. Is the transaction a short-term section?
Oh, partnership interest. So it's not because so it'd be like if you invested in what's a partnership? It'd be like the best example I can think of is a law firm. It's not really a good example here, but it'd be like basically this isn't a partnership. That's why this isn't applicable. Or we can assume this is not. It's like through an investment firm. Yeah, that's a fair question. Yeah. Any other questions, y'all? All right, so we'll click. So if you click continue already, great. You can go back out to it. If not, you'll click save and enter another. It'll take you to the same screen. But you can click here on add capital gains transaction. It adds it in here. And now we're just going to do the same thing. Iowa Co. common stock. Because that's what this is. So now we're doing the long-term transaction. So it was sold on 10/12/2008. So we'll do date acquired. Sorry, date acquired was 10/12/2008. 10/12/2008. So they've had this for a minute. And they sold it in this year, 11/1/2021.
Sorry, I have another question. I'm a little behind with the previous one. What was the adjustment amount above? Because we entered the 650 gain.
Oh, so you should have entered on the proceeds, you enter the whole 2650. Is that what you mean, Julieta?
No, I mean
like here
at adjustments. Yeah, I put
so there's actually nothing here. The adjustments is blank, and as is everything underneath the adjustments.
Can you scroll up again real quick?
Yeah.
Wait, more. So you just left everything blank?
So adjustments, basically everything under adjustments is blank. The only thing you enter is here for sales price and cost.
And cost.
Yeah.
Oh, okay.
So you put in the dates, the name of the investment, the dates, and then the sales price and the cost. And I'll let y'all catch up for a second. But this is, so for the one we're working on now for the long-term transaction, $3,000, $3,500 is the proceeds, $2,100 is the basis. 3,500, 2,100, yeah. And then this is the cost basis is not reported to the IRS. Let's see a chat. Yes, K for sure. So I'll send out the recording. It won't be as soon as I'm done though. It will be Tuesday. So look out. I'll send it out to everybody on Tuesday. But thanks for coming, Kay. Cool. So yeah, also awesome.
Darren, where do you see again if it was reported to the IRS or not?
Oh, great. Right here. So long-term transactions for which the basis is not reported to IRS. And then this one says
Okay.
short-term transaction base is reported to IRS.
Got it. Okay, thank you.
Yeah. It is a little funny though, because like IRS knows whether this was reported to them or not, but they still make you put it here you know, as the preparer. So yeah, I checked this box by accident, y'all. That should be blank. So sales price and the cost. Yeah, I should add this in. Cost is 2,100. Okay, cool. So with that, we'll click save and continue. But does anyone need a second to catch up here?
I do.
All right, cool. Yeah, we'll take 2 minutes. Y'all like shake it out. We're there. We're almost there. This is like one of the last things we're gonna do before we're gonna answer these questions next. Then we'll take a 5 or 7 or 10 minute break, depending on how much time we have. Y'all are gonna take some time to prepare the last example. We'll go through it together. The last one is so much easier than this. It's so much easier than both of the returns that we've done that like I'm really excited for you all to be like, wow, this seems so much easier because it will be. So just know that like this is more complex again than the average return in a Divina site by a lot.
The description of the property is again Iowa common stock.
That's right.
Thank you.
Yeah. All right, y'all. Okay, there are 2 more things actually. 3 more things. Okay, these will be quick things though. Very, very quick. Okay. So y'all, we're gonna go on. Is everyone there? Were y'all able to catch up? Or almost? Thumbs up? Okay, cool. Julieta, you good? Or you need a few more seconds? Okay, cool. All right. So let's go on, y'all. We'll click continue. So the last few things we have to enter. Oh yeah, of course. Yeah, Keith, definitely. Thanks for joining. Glad to have you. Understand life comes up. Recording will come. It'll be all good. Cool. So the last few things we have to enter, y'all, are okay. This is it. Nope. Okay. So last 2 things we have to enter are student loan interest and the MBA tuition, and then her healthcare stuff. So we're gonna go over here to deductions. So let's click over here to deductions. And the first thing is an adjustment, the student loan interest we'll put in. So you'll click over here on adjustments and click begin. And then you'll scroll down until you'll see student loan interest. And this will be quite common. Many folks will be paying student loan interest. So you'll click begin. And the total interest paid on her qualified student loans is $3,570. $3,573. All right, cool. So you'll click continue. And then, so this is great. We're done with this. That was all it is for the student loan interest. Next, we're going to enter the tuition. And y'all have done this before. I think we just did it in our last example. This will be a little simpler, but we'll go through quickly and enter that. So we'll click continue, get out of this adjustment section. We'll scroll down here to the credits menu because it has education credits. Click begin. From there, you're going to scroll down to education credits, form 1098T, and click begin. All right, so now they're going to ask who this is for. It's for Cynthia. She's the only person on the return. And now, so this is different from last time, because last time we did it for a student who was an undergrad. Cynthia is not an undergrad, so we know she's not eligible for the American Opportunity Credit. but she is eligible for the lifetime learning credit because it can be applied over her entire lifetime. So we'll check that box. And there is this tuition and fees deduction. This becomes really beneficial when people start making more money that takes them out of qualifying for VITA. It isn't really the best credit for folks that qualify for VITA. So know that we will rarely ever use that. So for qualified expenses, let's see how much Cynthia paid. Looks like she paid $2,000 to her educational institution. She was not a half-time student. She was a grad student. So let's check those boxes. So $2,000 of qualified expenses. Okay, so our institution is Suffolk College or Suffolk. Anyway, their address is 10 College Avenue. It's the most college address ever. They put in the zip code. And the next questions they're going to ask are, did the student receive Form 1098-T from this institution for 2021? Yes, they did. Did the student receive 1098-T in 2020? And I don't think that they did. Let's check the interview notes. All right, it doesn't say, so we'll assume no. And they do want to know the educational institution number. So we'll get that from the 1098-T. It's 37,700, 1234. 37,700, 1234. All right, so now there's some questions. Has the Hope Scholarship credit or American Opportunity credit already been claimed for the prior 4 years? And the answer to this is very likely yes. We would just ask the client like, hey, when you got your bachelor's degree, did you claim the American Opportunity credit or did your parents? They'll probably say, yeah, someone took some tax credits for me. So we'll say yes here. But even if we said no, it still would have, we would have gotten triggered by other questions. Was she enrolled as a half-time student? No, she wasn't. So it'll stop us there. But I'll go ahead and change this to yes. You'll click continue after that. And lifetime learning credit is applied with $2,000 of expenses. And then we'll click continue again. Are you all caught up with me? Does anyone need me to pause for a second?
Right, the last question about where have they claimed it before, that one, that's supposed to be just checking. Doesn't that only matter for the American Opportunity?
It does. So you could argue the software should be smarter than this. It should say once you click this, it's these don't matter.
Yeah, okay. No, I'm just asking that to be it seems unlikely that someone would know that somebody claimed a tax credit for them back when they did a bachelor's degree, But yeah. I see that it doesn't really matter. Okay, got it.
Yeah, that's fair. You're right. Yeah. Cool. So yeah, even if they don't know that one, it's one of the next 4 questions would knock them out from getting that American Opportunity credit. But we already said they didn't get it, so it's all right. We'll click continue. We're almost done, y'all. Man, it's a little later than I thought. This took a little longer than I thought. That's all right. So 2 things we're going to do next. There's an extra thing I just remembered. The first is let's click in this COVID relief tab to enter her stimulus amount. So remember, she doesn't have kids, so no American Opportunity or no child tax credit. For the recovery rebate credit, that's where we want to be. That's the stimulus checks. We click in there. We say yes, she received a stimulus check. It was $1,400, and then we click continue. All right, great. And then the very last thing we're going to do is come over to here to health insurance. So now it's going to ask, did you, your spouse, or a dependent have health insurance via healthcare.gov or state marketplace? And yes, she did. And we know this because when we scroll down here, she has a form 1095A. 1095A is for health insurance through the state marketplace or healthcare.gov. 1095B is health insurance from your employer. And then 1095C is private health insurance that you paid for. So because she has this A, we're going to enter some things from this form, mostly in this section down here. So we'll go here, we'll say yes, we'll click continue. All right, so now verify your household members. So it's just Cynthia. But if someone had lived in her house that qualified her for healthcare insurance and was included on her healthcare form, you could add them in here basically, separate from everywhere else that asks about household information. We'll click continue because it doesn't apply to her. So next is a few questions here. Were you eligible to receive unemployment compensation for any week in 2021? So no, she was working. She's actually working a side hustle and a main hustle. So we'll say no for this. Are you required to repay all of the advanced premium tax credit received? In most cases, the answer is no. The answer is only yes if you were considered not lawfully present in the U.S. or you meet one of the healthcare tax credit criteria. Note, we'll calculate this if the income is too high. So were you required to repay all of the advanced premium tax credit? No, you were not. And then is your household income below 100% of the federal poverty line? Based on what we put in earlier, it says no, you're not, which is true. And the last question is, do all forms 1095A include coverage from January through December with no change in monthly amounts? So if you say yes to this, what happens is it asks you to enter the amounts from the 1095A from this very bottom part. So it just wants you to enter the totals, because if it's the same the whole year, they can basically do these amounts are the things they care the most about. If you say no to this, because the numbers are not the same every month, it lets you put in by every month how much the person received. So we'll say yes, and we'll enter these numbers in here. And it looks like it's going to be 2,400, 3960, and then 1,800. So those are the numbers we'll put in: 2,400, 3960, 1,800. Let's actually look at what these are. So the first thing is, this is how much their health insurance cost. So current enrollment premiums or monthly enrollment premiums, this is how much they should have paid for health insurance. This next column B is the lowest cost silver plan, which is it's basically like it's a factor the IRS and the government use to calculate a few other things, but it isn't too important for us here right now, so we'll just disregard it for now. And then the next one is actually really important. The monthly advance payment of premium tax credit is $150. So what that really means is this person got a healthcare subsidy of $150 and their health insurance only costs $50 every month. They basically got a discount of $150 every month. So they only had to pay $50 to keep this health insurance. It basically made the health insurance more affordable because they qualified for a credit. So, and there's later going to be a question about how much of this did they receive. So make a note of that. So now that all three of these are entered, we'll click continue. Any questions, or should I stop before I need to go, or before I keep going, y'all? All right. Hearing none, let's keep going. And we did it. We made it to the top of the mountain, to the king of the hill. We've done the thing. Great job, everybody. This was a hard, long scenario. You all just did very, very complex taxes. So well done. Now let's look at the questions that they're asking. And after this, we will take a quick break. Okay. So, or actually, how are y'all feeling? Do y'all want to take a break now before we go on to answer these questions? We can come back, answer them, and do the last scenario.
Up to you. I'd rather do it now.
Any dissenters? No. All right, folks are saying let's keep going. All right, grinding. Let's get at it. Let's do this and get out of Dodge, y'all. Share. Okay, great. So what is the net short-term capital gain reported on Cynthia's Schedule D? So let's go look at Cynthia's Schedule D. The only place to see this is on the printout. So I'm going to pull up the printout. I'm going to stop sharing in a second once it generates. So it's creating the PDF. It's taking a little bit longer because it's a meaty one. Stop sharing, reshare. Cynthia's 1040. Okay, so this is 39 pages. This is 10 pages longer than the return we just looked at. I won't go through this one as in depth, but I will skip to the pages that we need. So we need Schedule 1, I think. Oh, Schedule D. Okay, Schedule D is for capital gains. So basically, this is asking about capital gains income. There's Schedule B. Here's ABC Investments. That's Schedule C. And this is Schedule C, part page 2. This is Schedule D. So it's asking about short-term capital gains and losses. So let's read the question one more time. I'll read it out. I'm not going to jump my screen to it, but I will read it to y'all in just a second. As soon as this comes up. Okay, great. So the question is, what is the net short-term capital gain reported on Cynthia's Schedule D? So net things typically are at the bottom of sections. It says the net short-term capital gain is 650. And let's see if that's one of the question options. It looks like it is. So you all know the answer to 23. You came up with the answer of C. Okay, great. So next, question 24, which of the following cannot be claimed as a business expense on Cynthia's Schedule C? Y'all put in the chat which one you think this is. We talked about this pretty in depth, so. All right, I see someone thinks C, 2 people think C, everyone thinks C. Okay, great. You're right, lunches are not deductible in this case, so great, we'll go on. Number 25 is, what is the amount of that Cynthia can take as a student loan interest deduction on her Form 1040 Schedule 1? Okay, so 1040 Schedule 1, we'll keep it here. Look at the Schedule 1 here, continue. All right, so Schedule 1 is page 3. This is student loan interest deduction? Okay, so student loan interest deduction. Oh, this is going to be one that's not going to be. Let's go to page 4. So student loan interest deduction. This isn't showing correctly. Let me go to the printout again. Let me switch to the share again. Wait, what am I sharing?
I think you're looking at the wrong one, right? Because it has
Yeah,
water.
I think I am. I think this isn't it. Okay, give me a second, y'all. Sorry. Print results. This is it. Okay. Wait, I have too many windows open. Let me close one. Sorry, y'all. Yeah, this is a gear. Okay. Here we go. Okay, so going back to Schedule 1. Schedule 3, Schedule 2, Schedule 1. Okay, so the first page of Schedule 1 is income, so we don't have to worry about that. The second page is adjustments to income, and we know student loan interest is an adjustment. So basically, this is, so Tara's getting this in student loan interest deduction. She actually paid more in student loan interest than this, though. She paid $3,000 and some change in student loan interest. But only the maximum amount for this credit is $2,500. So she paid $3,570 of student loan interest, but the max of this credit is $2,500, so that's what she's getting. So we'll go back. Cool. So this question, what is the amount Cynthia can take as a student loan interest deduction for our Form 1040 Schedule 1? And that is $2,500. Number 26, what is the total amount of advanced premium tax credit that Cynthia received in 2021? So for this, we'll actually go back and look. We won't look at the return, although it is there. We're going to go back and look at this 1095A. And they're asking about column C, monthly advance premium, monthly advance payment of the premium tax credit. Down here at the very bottom, it's $1,800, $150 every month for 12 months. So that is her advance premium tax credit. And that is the amount that there would need to go in this question. So should be C, 1,800. Great. What is the amount of Cynthia's lifetime learning credit? So we know the max for this credit is $2,000, but let's see if Cynthia got that max or a smaller amount. So looking at the 1040 page 2, Oh, okay, it actually isn't on page 2. It's on a different form. Let's go look at the printout. Okay. So I'm going to scroll down and show y'all a form. I scrolled too far. Are we 8892? We need 8862. This is it. Okay, 8863. So if you come down here, the first part is for refundable credits, basically the American Opportunity Credit, but that's blank because she doesn't qualify. This next section is for the Lifetime Learning Credit. So the way this works is she paid $2,000 of in towards tuition, and then basically they're saying you get 20% of this amount entered on line 11. So 20% of 2,000 is 400. There's some calculations here to see maybe something else could happen, something could change, but it actually looks like the most she'll get is this 400. So it just carries down to here. 20% of what she spent is what she's eligible to receive. So her non-refundable education credit or her lifetime learning credit is $400. Okay, that's right. Okay. Let's do one more. Okay. Cool. All right, so $400 there for 27. 28, Cynthia will have to pay $200 of additional tax because she received an early distribution from her IRA. True or false? So y'all drop in the chat if you think this is true or false. We talked about this, but you know, let's chat about it again. Drop it in the chat. 50% chance of getting it right. All right. Julieta's on the right track. Okay, Julieta's correct. So, so remember, y'all, if you take out from your retirement plan early, there's a few reasons, 3 main reasons why the distribution can be exempt from being taxed. One is because you use it for education expenses. One is because you used it to buy a house or you're a first-time homeowner. And the other one is if you have major medical expenses and you use it to pay for that. If any of the reasons are true, there's an exemption and you don't pay taxes on withdrawing it early. So the answer to this is Cynthia will have to pay. No, false, she will not have to pay. All right, 29, how can Cynthia prevent having a balance on her taxes next year? Oh, this is great. This doesn't depend on the software. So y'all take a stab at this one. I'll talk you through what these mean, but take a stab, put your answer in the chat. We'll go through it together in just a second. I see Julieta's answer. Anybody else? Again, this is a safe space, not here to judge. Aisha thinks it's D. Great. All right, Patricia, any guesses? No wrong answer again. I mean, technically there is a correct answer, but you know what I mean. Okay, cool. So you all are correct. So I'll explain this to the folks on the chat or the folks watching the recording. So basically, so I have 2 things to say here. The first is in these tests IRS does, if all the above is an answer, it's probably that. It's not always, but it's very likely that because this is like a teaching test. And the next thing is, so you can increase the withholding on your Form W-4. So typically you fill out a Form W-4 with your employer and you tell them how much taxes to take out of your paycheck. You can have that amount increase or decrease based on what you put on that form. So she could fill out that form and have it take out more taxes. The next one is she can make estimated tax payments. So because she's a small business owner, she isn't having enough taxes taken out, it looks like. So she owes a little bit of money. So she could pay taxes in advance. And actually, funny story, today is the deadline for the 4th advanced tax credit payment. So like me, I contract with a bunch of places, so I'm actually gonna make a note and do this after we finish the thing today. I'm gonna pay my estimated taxes. But basically, it just means you're paying taxes in advance to IRS, and then when you do your return at the end of the year, you enter the amount that you paid in advance, and then they take that into account, and it saves you money in the long term. Also, if you're a small business owner, if you make over a certain amount, you have to pay these in advance, or you face a penalty. So it's something to think about. Okay, so the last one is she can use the IRS withholding calculator to estimate her withholding for the next year. That's true. It basically helps you figure out what you're going to owe and what you need to fill in on your form W-2 to make these changes. So D, all of the above is the correct answer. And with that, y'all, we have 40 minutes left in the training, I think. And we have this example for Richard Cook. So what I want to do is I want you all to sign to the practice lab, do the scenario. This is a much, much, much simpler scenario. Basically, Richard's 29. It's basically Richard and his daughter, Isabella. They have one job, and Isabella is in daycare, and they have a little bit of interest income, and that's it. There's 3 pages to do and 5 questions tied to these pages. I want y'all to do your best to take the next 20 minutes. So at 3:40, we'll come back and go through the scenario together. So do as much as you can. I'm gonna stop the recording. So y'all can ask questions as you're going through it if you have them. But yeah, I'm gonna go ahead and pause the recording, and then we'll be back in just a bit. Hi, everybody. Welcome back to the training series. We're in the home stretch. We just finished, many folks finished or made good progress going through the last scenario. So we're going to go through that scenario and look and see how folks did. I'm going to share my screen. All right. So Julieta, how you'll know if Richard's getting the advanced premium tax credit or the advanced child tax credit, or the additional child tax credit, I guess, is if this box is filled in with 3,600, then you know that it was entered correctly. So you can look there. And then, so I want to show folks a few things. I want to show, I don't think many people get to the childcare credit stuff. So y'all enter the W-2. I know you know to do those by now. I won't show you that. For the interest income, you put it in just like you suspected, add in all the information, add in the taxpayer identification number, enter the address, and then you'll put the interest income. And note there's an early withdrawal penalty of $20. So you want to make sure you don't miss that because there's a small tax deduction for that. Also, so that's it for interest income. It's really simple. Then the other thing is the child care credit. So if you haven't done this yet, you go to deductions, look under the credits menu, and the first one listed is child and dependent care credit. You click on edit. And then it says child care credit. I was thrown off because it doesn't say dependent in this, and I want it to. So the other thing is the recovery rebate credit. So the stimulus check you can also access from here if you need to. But going into this child and dependent care credit, you'll come to this form. And the important thing about this form that's a little bit tricky is you first enter the information for the daycare, and then you match the dependent with the daycare information and say which dependent the expenses were for. So it's like a 2-step thing, and the step is hidden behind this like little drop down. Just a heads up that can be a little tricky. From there, you enter the EIN number for the business, and this is coming back to this Busy Bee Daycare. EIN number listed here, 359001234. So you enter all that information. From there, you enter the amount of childcare that was provided, which it says here, $1,500. And then from there, you click continue. And then the second step that some of you may not have noticed is you have to go down here and assign it to Isabel. See, it'll basically ask, so since Isabel's the only dependent, it actually makes the assumption, but if there's 2 dependents, it'll ask you which one is this for. So it'll say $1,500 for Isabel, you enter the amount, and then that's it. And then from there, they're getting the credit. You'll click continue to page 2. And then you just click continue again. Only after answering this question are you, so did you pay any expenses for 2020 during 2021? No, you didn't. This is all during 2021. And then, are you considered unmarried for the purpose of this credit? Yes, you are. Or Richard is. I'll click continue, and that's that. So then advanced child tax credit. So then there also is the advanced child tax credit information you can put in. I'll just click on here, where you say, did you reside in the US? Yes. Enter the amount of the advanced child tax credit payments you received. So if you put in 0 here, it'll assume the clients didn't receive any of the payment, especially after you put in that they had a qualifying child, and then it'll just generate that they're getting that. In this case, $3,600. You click save. It'll show you this screen. You click continue, and you're almost done. So the last thing is, if you click here under COVID relief, that a child tax credit is there, as well as the recovery rebate credit, where you can enter their stimulus check. And it says in the interview notes that they got $2,800. They got the full stimulus as they should have. Click continue. And that's really it. Yeah, any questions about any of that, y'all? All right, so hearing none, let's take a look at the questions. All right, so question 30. And for these, you all, I want you all to like take a stab at all of these. So basically, like, use the chat, put in the answer. We'll go through them as we do. So number 30, what is Richard's most advantageous filing status? What do you all think it is? All right, a strong leaning towards C, head of household. Anyone mind explaining why they got to that answer? I feel like y'all know this stuff by now, but
I went through the wizard because he is a widower, so I didn't really know about that. And then the questions, it looks like it only matters if you were widowed recently, maybe like in the last year or 2 years. I don't know, but she died in 2017, so
that's
it's
perfect.
just a household also because he has a dependent versus being single, which means you have no one else on your return.
Yeah, that's perfect, Julieta. You did exactly what you've been trained to do. I feel like sometimes I'm like, is this even working? Now I know it is. Great job, everybody. Cool. So the next question is, what is Richard's adjusted gross income on his Form 1040? And you all know that I love to go here and pull this, like look at the 1040 to pull some of these numbers from there. Taxable income, adjusted gross income. So if you look at line 11, this is your total adjusted gross income. For Richard, it should have been 41,580. Did anyone get anything different? All right, hearing none. And did you all know where to find that before I pointed it out to you? It's okay if you didn't.
No, I mean, it's like in various places, but it's also not that easy to find.
Yeah, that's fair. I mean, the easiest thing in the software is just like right here, AGI, boom, it's there. It changes all the time, but and y'all just remember that means adjusted gross income. So cool. Number 32, I want y'all to put this in the chat. Richard can claim the following credits on his return: A, the child tax credit; B, the child independent care credit; C, both A and B; or D, none of the above. All right, so we got 2 C's. Patricia, if you're around, feel free to drop in, but we'll go ahead and keep going. You're both correct. Great job. The answer is C. So basically, we saw this in the return: child tax credit eligibility and child dependent care eligibility. Awesome. Number 33 is Richard's retirement saving contribution credit on Form 8880 is blank. So this is something you all probably didn't know about. I mentioned something about it in one of the earlier questions, but because Richard has this code D on box 12, for a retirement plan, we know that this is retirement that he contributed to. And because his income is low enough, since he's filing head of household, he qualifies for this retirement savings credit. And it's meant to be like a small incentive to folks that that don't have too much income to save towards retirement and get a little bit of a tax bonus. So basically, it's 10% of this $1,000 amount is the way that the credit works. And if you actually look at Form 8888, it like breaks it down much more in detail. But keeping that in mind, 10% of that $1,000 that he contributed is
100.
That's right. Boom. Y'all can do math. Here we go. So 33 is $100. It also shows up in the tax return. If it's in the preview, I'll show you where. If it's not, then we'll let it be.
It's like in the last page. I did the print version.
Okay. I also think so. I think this amount from Schedule 3, line 8, I'm pretty sure that is it. I think Schedule 3 is this last page here. Schedule 3, line 8.
Yeah, it's there.
Retirement Savers Credit number 4. Yeah, there we go. Cool. All right, and then number 34, Richard will use his 2019 earned income. Oh, okay. This is so for both of these, y'all tell me what the answer. I'll read the question. Please put the answer in the chat, and we'll of course go through them together.
Wait,
Richard,
what? 33. All right.
Go ahead.
What was 33? I kind of got.
You're fine. So 33 is 100.
Oh, okay.
Yeah. All right. So 34. Richard will use his 2019 earned income rather than his 2021 earned income to calculate the earned income tax credit on his 2021 tax return because his 2019 earned income is higher than his 2021 earned income. Is this true or is this false? All right, so I got one false. Oh, I guess B is also true. B is false. So they're all, everyone says false. Does someone mind coming off mute and explaining why?
I think you explained it in a way that you use the higher income because you would get more deductions, but I could be explaining that wrong.
So that's fair. So the two things to keep in mind here are, so Richard's income for this year is $41,500. And then if you look on the interview notes, just for folks that are following along, his 2019 income was $19,000. So earned income credit is actually really interesting. I'm going to pull up a website, EITC, CBV, EITC chart, CBPV. So the Center for Budget and Policy Priorities has this really nice chart that they put together that I've been using in tax training since I started. So the way the earned income credit works is if you don't make enough income, you don't get the most credit you can get. And if you make too much income, you also don't get the most credit that you can get. So Richard is filing head of household. These numbers are outdated because it's 2016, but the concept is still true. So basically, if Richard had made $19,000, he would have gotten the maximum benefit, which is ideal. And making $41,000, he actually would have gotten no benefit. These numbers are different. They've actually increased in the recent year. But the important thing is, like, for the max, he's actually closer to getting the maximum if he makes closer to that 19,000. But the question is actually asking something. It's not actually asking that. It's not asking, are you getting the higher amount? It's asking something different. So if Richard uses 2019 earned income rather than his 2021 earned income to calculate his EITC on his 2021 return, because his 2019 earned income is higher than his 2021 earned income. Well, actually, his 2019 earned income isn't higher, it's less. So this is false.
Isn't it false also? But I thought it was principally false because you can't go back that far, right?
Oh, so this is actually, that's actually the real purpose of this question, is to show you that you can.
Yeah.
So you can. God. So it's like a weird. So basically, when they passed last year, they passed a tax law that said you can use your 2019 income on your 2020 taxes, and then that law was extended to 2021. But it's weird because you can't use your 2020 income. You can only use your 2019 income or your 2021 income. So pre-pandemic income versus your current income, whichever is greater is the benefit you can receive. So essentially, if you're doing tax with someone in person, you have to ask them how much they made in 2019, or they have to have their tax return from 2019. That's the easiest way for you to make sure they're getting this credit.
And then you like need to know the limits. Well, then you advise them how to maximize the credit.
Yeah. So
amounts.
Yeah, that's right. So basically, it's in the software. There's like a man. I actually forget how to get to it. I did it 2 or 3 times last year. But there's somewhere you can put in here, and you can put in their AGI for 2019, and then it basically just does it'll do the math and show you which one is better. So if you have it, it's always better to put it in, and it'll just tell you which one is actually better.
And that's somewhere here in TaxSlayer.
Yeah, it's somewhere here in TaxSlayer. I'll take like let's take 30 seconds and see if we can figure this out. Yeah, TC. No, how would this be organized? It should be, you know what, it's going to be under COVID relief, I'll bet. No, it's not. Let's try deductions. CARES Act. It's not here because this is just charity stuff.
Would it be where EITC is?
Where do you see EITC under?
I don't know if you go to the credits menu. Isn't it there? I don't know.
Oh, credits. Okay, credits. Let's see. EITC checklist. That's not it though. Advanced tax credit. Let's look at this EITC checklist, but I'm pretty sure this isn't it. This isn't it. No, this isn't it. Child tax credit questions. Yeah, this isn't it. I don't know where it is, y'all. I'll actually find it before the site's actually open. I'll find it, but apologies for not knowing where this is. Yeah, I'm sure if we look at the 4012, it'll also tell us, but for the sake of time, I'll forego this and we'll worry about it later. Okay, so last question, y'all. So you got the answer to 34. It's false. And last question is Richard's child and dependent care credit from form 2441 is reported as a non-refundable credit on form 1040 schedule 3. So you can actually determine this by looking at the 1040 page 2 without looking at the schedule 3. On the second page, there's like information about this. Y'all take a guess for which one you think this is, and I'll show you where to find it right after you take a stab. And I'll, of course, explain the rationale and why they include this question. It's to teach you something very specific. So I'm not seeing much in the chat, so I'm going to show you all how to find this one. Okay, so when you're looking at 1040, if you go to the second page, so all of the refundable credits are listed here in this like very bottom section. So the earning them credit is here.
So it is refundable.
Yeah, so basically like the refundable child tax credit or additional child tax credit from schedule 8812 is here. And there is a space up here on line 19 for the non-refundable child tax credit or the credit for other dependents. So we saw the credit for other dependents here for another example, but the child tax credit shouldn't be here for anyone this year, unless there's some situation that makes it so that it's non-refundable. But for anyone who comes to VITA, it basically should be refundable this year, because that's like the unique thing about this year.
But Darren, it's the question is asking about the child and dependent care credit.
Oh,
not the child.
You're right. You're right. Child dependent credit from two. You're right. Good call, Julieta. So is this on here? Refundable credit. It's not on here. So the important thing about the child and dependent care credit is, so this is a refundable credit for this year only. It's normally a non-refundable credit. So because of that, this should show up on schedule 3, I believe. Non-refundable credits. So it isn't actually here. Normally that's where things show up on schedule 3. But because it's a refundable credit this year, it isn't in the same place as last year. But all this to say, the important thing for you guys to know is if folks have dependent care, if they paid for daycare or aftercare or a camp or something for their kids, so to be watched by an adult while they could work, that amount that they paid is very, very likely fully refundable as a tax credit. And in the past, it was like $2,000 or $3,000 you could get. This year it's $8,000 for up to 2 dependents. So if you paid $16,000 in daycare expenses over the course of the last year, all of that is going to be deductible as a refundable credit. So you basically would get, I don't know if it'll be dollar for dollar, but you get some portion of $16,000 if you paid that much. So essentially what the question is asking is, is Richard able to get this credit? Yes, we saw he paid to Busy Bee. So it's not reported as a non-refundable credit. And this year only, it's refundable. There should be somewhere on Schedule 3. I just must have overlooked it.
Which would be true.
False.
No,
right?
it's false. Yeah,
Because it is refundable.
exactly.
Okay.
Yeah.
This wording is very.
Yeah, these last 2 questions.
Yeah, I feel like anyway, they're doozies, but y'all did well. Y'all did great. So y'all, this is it. So I want to take a second, see, did you all get all the answers down? Do you all have them all? Anyone have any questions about any of them or miss any of them?
I kind of missed number 31.
Okay, 31. Oh, okay. So 31 is Richard's adjusted gross income, which is right here. It's $41,580.
I missed a few early on, 10, 19, and 20.
10 is B false. 19 is 26,450. And 20, I'll like slow down for a second because you'd write a long number. So 19, 26,450. 20 is 36,55 or 3,655.
Okay.
Cool. So I want to show y'all one more thing. So I showed this to folks that attended the first day of the training, but I didn't show it to you all. So where you go to take the certification is here, linklearncertification.com. I'll drop it in the chat. And basically, if you haven't already, you'll create an account, linklearncertification.com. You'll create an account, and when you do, create an account, basically, I'll teach you all the very quick basics. This is also in the training day 1 video, but just so you all can know, you do check this box for VITA volunteer. You'll check this box yes for you plan to volunteer with the VITA program. For training source, you'll say other because we did a training, and then you'll enter your basic information. You'll choose a username. This is all caps still. You'll put in a password. You'll add your email address. And then you'll add your physical address. You'll add the years you volunteered, which will be 0 for most of you. And that's it. Anything else is not required and you don't have to list it. So if folks are typically like, do I need a P10 number? No, you don't. Anything that doesn't have a star by it, you should leave blank and you don't need it, including this SEID that's up here at the top. You'll click register and you'll be registered, and I'll show y'all what it looks like once you're actually in now. So what's a password? This might be tragic. Oh, okay. It's not. It's the way I thought it was. Okay, so once you're in, it's going to default to this screen. What you all want to come to is this advanced section. And once you're here, it'll show all the tests that you need to take as an advanced volunteer. So the first 2 we covered on the first day of the training was the standards of conduct exam, the intake and quality review exam. So both of those are recorded there, and y'all can get the answers to those when you watch those recordings. So anyone who wasn't here on those days, you can't take the exam yet. So you should just keep the answers written down in your book. When you get down here, once you take those 2, that'll pop up. I'm a site coordinator, but most of the volunteers won't be, so you actually won't see this test here at all. And then you'll click this advanced exam. You'll click launch because there'll be a blue launch button here. It'll say the same thing when you do these other 2. You'll click it, you'll click launch, and then it'll take you into the test. And the questions will be the exact same questions we just answered. So there's no alternative. Like what you saw is exactly what you'll get. unless you don't pass the exam, and then there are retest questions, and those are also in the same book we just looked at. We just didn't go through them. They're very similar. Often they're the same question or just a variation of it. So once you've passed the certifications, there'll be a button here where it'll say you must click this to sign your volunteer agreement. So you'll click this box, and then once you do that, you click here, and it's going to open your volunteer agreement. And that's the thing that we actually need. We don't need these certificates, although they're nice. The thing that we actually need to report to IRS is this volunteer agreement. So I just downloaded it. I'm going to show you all what it looks like, so you can know. Okay, it's coming up slowly. Great. Okay, so this is the volunteer agreement. So the first page is just kind of standard language, but the second page has the meaty information we really need. So here is your name and address and email, where you're volunteering at, the organization, as well as your name and the date you signed. All your test scores will be on here. So P just means pass. That means you did it. You did the thing, which is awesome. And then that's basically it. So when you send it to me, I'll sign it electronically and keep a record of it and the IRS will basically like verify that if they ever secret shop us or show up at our site or ask us who's volunteering with us. Any questions about that, y'all?
Can you just say again quickly where you got that?
Yes. It is right here. Share. Okay, so once you're signed in to linkedoncertification.com, once you click this box, this part down here will fill in, and it'll show, you'll click on this click here link, and it'll open it up, the printout of it, and it'll let you download it to your computer. You'll then save that and email me a copy. And my email is listed on the Catalyst Miami resources document. So I'll drop it in the chat as well in case y'all don't have it. But let me share this one more time. Last screen share of the day, maybe. We'll see. This is loading real slow because I've got too many things open. But at the very bottom of this document that's loading, my email is here. And y'all remember the link to this is listed in the calendar invite for these events. So my email is here, as well as the links to everything that you've needed is here as well. And that's in the calendar invite. I'm gonna stop sharing. I see there's a chat that came through. Gotta look at that. Oh, okay, that's fair. So I'll drop my email in the chat for everybody here. And Julieta, you can email it to me at your Propel, at my Propel email, and I'll take care of it for you.
Got it, thanks.
Yeah. All right, everybody. So that's the whole shebang. We did it. We made it through. You all have all the answers to the questions. It's now just a matter of you going in and taking the test. And then for those that didn't attend the training last week, I'm going to make sure these videos get uploaded on Tuesday. And once they're uploaded, I'll send out a link to you to them so you can watch the original recording, get the answers to those first two tests and the training that goes along with them, and then follow back up with me if you've got any questions or if you need anything. And then either this Thursday or shortly after, I'm gonna, oh goodness, you're right, that isn't correct. Sorry, y'all. I'm gonna, thanks for the note. I'm gonna drop my Darren L at catalystmiami.org. Okay, LYST. Okay, this is the email. I think it's actually incorrect in the other sheet. So hopefully I don't have a bunch of volunteer agreements going to the wrong place, but I may.
Yeah, no, it was just in the chat here.
Oh, okay.
I mean, I just noticed it in the chat. That's why I wanted to make sure you had it.
No, it's definitely both. Oh no, folks from the other training. Anyway, I'll email them and so they've got it right as well. But anyway, yeah, y'all, that's it. Any last questions, comments, thoughts? How are y'all feeling? Overwhelmed, but good.
We'll take tests or at our own pace whenever we feel ready. I mean, I still have to watch the one from last Saturday. So, but do we have a due date?
Yeah. So the due date is going to be January 20th is when we've got this volunteer training that will teach you all how to use the one other software we haven't gone through yet. And I mentioned that this training may be pushed back, depending on like if the software is ready to launch. This depends on an external partner. So if it's ready by Thursday, then we'll hold the training. If not, it'll be the following week. And the whispers on the street is that the software is going to launch on 1/24, which means this wouldn't be ready in time for next Thursday. But there's a small chance it will be. So I'll update you all probably by Wednesday evening if the training is going to happen on Thursday. And I'll send a calendar invite probably now to just hold the time, but then I'll update the calendar invite and move it if we need to. So try to get it done by Thursday. And the other thing I'll say is like, it can be tempting to like wait. You all literally have the answers to the advanced tests. That's the hardest part. I'd say like, as soon as you get the answers to the first things, go ahead and take it. Even if you're not watching the recording, I think the answers to the first 2 tests are a lot more obvious. Like you can figure them out. You don't need to know tax law. It's more common sense. Like, is it ethical to take tips from somebody? No, we can't take tips. Is it ethical to like use someone's phone number for personal information? No, we can't do that either. It's unethical. It's a lot more kind of common sense in the first two tests. So, take a stab at them, but the recordings will be ready by Tuesday. So hopefully you can watch those Tuesday evening. Take the test on Tuesday or Wednesday, come to the training on Thursday. Should be good. Yeah. Thanks so much, everybody. Julieta, thanks. I see you as well. Y'all go ahead and drop off. And yeah, I'll catch up with y'all soon. Thanks, everybody. I'm going to stop the recording.